Remember, he said that. Everything we can cover in the title. Coming up, venture capitalist Bradley Tusk joins us on a big week of tech and regulatory headlines from a monster Alphabet deal, biggest ever to high-profile firings at the FTC. We're coming right back.
Hello.
Orlando Resort.
Google's $32 billion deal for Wiz will likely be an important barometer for the Trump administration's tolerance for big tech deals. Joining us with more on tech and the environment, Bradley Tusk, CEO of Tusk Ventures. And just from 40,000 feet, Bradley, are you in a better mood than you were a year ago about tech? Or are there so many cross currents that we just don't know at this point how it's going to play out? I thought it was going to be deregulated.
Yeah, look, I was very optimistic. I was at the end of last year, I was very optimistic. So there's been, as you know, Joe, basically no liquidity in venture or tech for over 4 years now. And it seemed like the combination of coming deregulation combined with reduced interest rates would finally open up the market for IPOs, for M&A, for liquidity in general. That hasn't happened yet. There are some signs, like you mentioned, the Google acquisition of Wiz. There are a few IPOs that are going to be tested, and we'll see how they go. But I think a lot of the instability in the market overall has taken what we thought would be finally the opening up of venture and pushed that back.
It's not even 100 days at this point. and I was going to mention we had Gerster on. Yeah, his name's Brad too, I think. So I was going to say Brad was on the other day, but I would have confused you. But he said that the calls have been placed to come back from the beach and let's get going on this stuff. Is it that simple? And then a week later, Google, and it's not the Wiz. I have to keep telling myself that it's not
The Wiz.
It's not the Wiz. Like not
Nobody beats them.
right. That nobody beat. But then that happened. So isn't it possible that it's going to start now? But then the wild card, Bradley, is Lena Khan's gone, but we had Ferguson on, and I don't know if we know that it's just the that. I can't say that all the headwinds are going to be removed. Are they going to be removed?
Yeah, well, I mean, I think you put it perfectly before, Joe, which is cross currents is exactly the right word. So there are positive signs. Right? I think Ferguson has said some things that are encouraging that would allow for more M&A and more IPOs. I think some of the deregulation that we've seen signs of is encouraging. But at the same time, this is an FTC that has said, look, some of the previous administration's policies around big tech were right, and we're not going to discontinue them. And there's on April 14th, Meta's antitrust suit goes to court, and so we'll see a lot there in the next few weeks. And also at the same time, there's whatever the government says and does, but there's also what the market says and does. And I think if you are a tech startup and you're ready to go public, but the market is in total chaos, and you think that your valuation is going to get cut in half or even more, you're going to hold off and wait. And so, for this to happen, you need the government both saying things and you need the market believing them.
And it's not just here. I guess one thing we can always count on is the EU to try to make up for the total lack of any innovation over there in technology. But they can get, if they can get 5, 10, 15, 20% of what our companies generate in revenues, we can count on them to try to do that, right? Or do they have do their cases have merit? I guess maybe they have some merit, but
I mean, look, there's always this balance that I think no one has quite figured out yet, and maybe no one ever will, right? Which is you want to promote innovation, you want to promote development, at the same time you want to protect consumers, and there's no clear line as to where that is. The EU has erred much more on the side of consumer protection at the expense of innovation, which is why so few big tech companies come out of Europe. The US has very much prioritized innovation, but we see a lot of harm, and we've talked about this a lot together on your show, caused by social media to kids and others. And so finding that balance is not easy. Overall, I still think the American approach towards innovation is the right one, but we could certainly do better as well in protecting kids and protecting people on the internet.
No doubt. I wasn't even that didn't even occur to me that I think they're more consumers are helped through innovation. Now you brought up the social media, but I never feel like I'm really paying a lot for what I get from technology right now. It seems like the cost keeps going down and down and down, and that comes from the innovation and not being not heavy-handed regulation, which they have. But you're right about I don't know what to do with with what we see, and I'd hate to be a kid in high school nowadays.
I wonder if to a certain extent you and I don't feel the cost because we have the benefit at this point of age and wisdom and maturity. But our kids, I've got an 18-year-old and a 16-year-old, and I've seen how they've struggled to a certain extent with the internet. And I think being a kid is hard in any society or any generation. And I think in this age with the internet, it's even harder. And so, my hope is that getting back to this country, that this administration tries to find the right balance between really furthering innovation, especially around AI, but also making sure that, people are protected. I think, for example, the administration's policies towards crypto are exactly right, which is there's no reason not to allow crypto to try to evolve and capture greater market share. But at the same time, there's a lot of fraudsters out there, and we should be protecting consumers from fraudulent ICOs and things like that. And that is the proper role of the SEC when it comes to crypto. And so I think it's just finding that right balance in each of these cases.
All right, we didn't talk about, we don't know what to do with the congestion price. Where were you on that?
Well, can I throw an idea at you on the congestion pricing?
Yeah.
Okay,
What's
here's
that?
my idea.
Yeah.
Here's my proposal. Okay, so what New York really wants and needs is a much, much better subway system, cleaner, safer, better run. What President Trump is looking for is a few things. He doesn't want congestion pricing. He needs a special election for the Stefanik seat in upstate New York, because right now she's stuck in the House, and even though she's his nominee to go to the UN, which we could really use, they can't lose the vote there. And there are things he wants locally, like he wants his golf course in the Bronx back. He wants Woolman Rink back from Central Park. If I were Governor Hochul, I would say to Trump, listen, we'll end congestion pricing. We'll call a quick election for the Stefanik seat. You get the golf course back. You get the ice skating rink back. We'll have a subway station after you in every borough. And you become the hero of mass transit. You give us $50–60 billion over time to entirely remake the New York City subway system, make it the envy of the world, make it safe, make it clean, make it well run. You get all the credit for that. New Yorkers benefit, and all the things that you care about going well, like congestion pricing, no longer need to exist.
Right. Okay. Oh, you got it in. We'll talk about all these things. We'll come back and talk about all these things. Bradley, thank you. Not all I have time for. Squawk Box will be right back. Good for you.
News alert on BP. Reuters says activist Elliott Management has met with several of the energy giant's large shareholders to try to forge a consensus for more changes. Those changes could include cost cuts and new leadership. Last month, Elliott disclosed that it had built a stake of nearly 5% in BP and has been pushing for radical action to transform the stock's performance. Over the past couple of years, down 6%.
Coming up, how China became the apex predator of hacking and digital espionage. Nicole Perlroth, a former reporter at the New York Times, will join us on the launch of her new podcast that dives deep into that topic. Squawk Box is coming right back.
Let's turn now to cybersecurity. A new documentary podcast out this week examines China's rise to cyber supremacy and the state-sponsored hackers haunting America's infrastructure. Joining us now, Nicole Perlroth, former cybersecurity reporter at the New York Times and the host of To Catch a Thief, China's Rise to Cyber Supremacy. She's also the author of This Is How They Tell Me the World Ends, an expose on the global cyber arms race. She served on the Department of Homeland Security's Cybersecurity Advisory Committee under President Biden. Nicole, great to have you with us.
Thank you so much.
Can't wait to listen to this podcast. Everybody has known for a long time that cyber has been active on the state-sponsored cyber front in terms of its armies of hackers, etc. How do you think the game has changed under a Trump administration?
So, I mean, a lot of what we covered is not new. It was about really connecting the dots. We know that China has ripped off IP. We know that a lot of the sort of bankruptcies you've seen among wind turbine makers, solar panel manufacturers, no one has really connected those dots back to Chinese IP theft. But that's how they started out, right? They were raiding our IP, and so much of it is tied back to these hacks. So we go through these stories on the podcast. The big pivot has been into our critical infrastructure. And it really picked up in 2020. Actually, when Trump started calling COVID the China virus, these hacks got very aggressive. And they've come for our water networks, they've come for our airports, they've come for our transportation systems, they've come for the grid, and they've come for pipelines. And the thinking is that they want to be there to pre-position in the event of some future conflict, perhaps over Taiwan.
Okay, so in terms of how they get into the infrastructure, and I think this is what people sort of don't get, because they think of an attack on infrastructure and they think of it as a physical attack, which is one way of doing it, but all of this infrastructure has sensors embedded in everything, and how you control the power and how you control even a railway. I mean, can you walk us through how that happens?
Thank you for the question. Because the mechanics of these attacks are super important to understand. All of these systems are digital now, right? So when you get into a water treatment facility now, you can get into the chemical controls and potentially contaminate the water. You could shut it off. All of these things would be critical for a psychological component. I really think of these as like a psychological deterrent, that if suddenly we couldn't get access to clean water, what appetite would Americans have then to support an island 7,000 miles away, right? But back to the mechanics, one of the ways that they're getting into these systems is they come through home routers. TP-Link is now it's a Chinese router company. They have 60% market share in the US. If you go on Amazon right now, the Amazon overall pick for a new home router is a TP-Link router. TP-Link routers have been used as funnels for Chinese hackers to launch these attacks on critical infrastructure. Why are they coming through home routers? They're coming through home routers because if you are an operator at a water treatment facility and you see some traffic coming from a home in Indianapolis, you're not going to think it's suspicious. You're definitely not going to think it's Chinese hackers, state-sponsored hackers, right? So it gives them some plausible deniability, but it's really it's critical Americans understand how they're pulling off some of these attacks.
I had a couple questions, Nicole. So if Trump hadn't said that about the China virus, which turned out to be true, but if he hadn't said that, you don't think they'd have this capability, right?
They would have done it anyway.
They would have done it, then why mention it?
So I mention it because anytime we've had escalated rhetoric with China,
Right.
the spying has picked up, the activity's picked up. And the only reason I mention it now is because now, with tariffs, we're in one of these periods where tensions are escalating and we're likely to see more activity.
Right, because now I'm even more angry, because not only was it probably lab generated, but when they shut down their, certain flights one place but didn't another place, now it's not just, it came from there. Now I'm wondering if they did all they could to stop it from coming here. That's being nice versus actually exporting it. The other thing that got me was, you don't think that they'd like to do this just in general? It has to do with a contingency plan for when they move on Taiwan. Don't you think they'd like this in their pocket just because we are?
It would be an act of war. Does China want to?
I understand that, but it could be anything. They want this capability just because we are in a race for global hegemony with China. So
it's a big pivot here, though, is for the last decade, we didn't see them in our infrastructure. We started seeing them coming for some companies like Telvent, which provides software into the grid, into pipeline networks. And at first the thinking was this was IP theft because so many of these hacks were coming for IP commercial
now it's secure.
theft. Now it's pre-positioning, and that is a huge pivot. Right. And the idea is they want leverage, and this is how they're trying to get it.
And imagine an all-at-once attack.
And how about the balloon? And
water, power, everything all at once.
Buying farmland all around our military facility. I mean, it's frightening.
Yeah, it's what we call the everything, everywhere, all at once cyber scenario that we have to start planning for, really. And a lot of it comes down to some of it's basic cyber hygiene. A lot of it's intel sharing between the public-private sector. A lot of it is private companies realizing they now have to hunt for these Chinese hackers in their systems. And one thing that's really important on this sort of change in tactics, they're not hacking in anymore, they're logging in. Right? They're stealing your credentials, they're getting in, and then they're not doing anything while they're there other than what we call living off the land. They're just trying to blend into everyday traffic so that no one notices they're there, but just to stay there in case they ever need to detonate on that access one day.
Dormant until it's not.
Pretty frightening.
Nicole, fascinating. Thank you so much for coming.
It wouldn't take long for us to just lose it here.
I mean, think about Colonial Pipeline. You know, when that happened, that was a bumbling group of cyber criminals, and you saw Americans showing up at gas tanks with like big plastic bags.
And with in line, pulling out a gun. Someone tried to cut their line. I saw it out where I live. Maybe it was, I'm not sure which one it was, but it was impossible to get gas. The lines were long, and it gets nasty quick.
Yeah, it's the
Almost like a
panic.
movie.
It's
Yeah.
the panic and chaos.
Right. Again, the podcast is To Catch a Thief. So sounds
Is it a continuing podcast or just
like
one?
a documentary.
Season 1 China.
Oh, season
China.
one. It's in the book.
Yeah, I have no idea what season 2 will be yet, but
Well, I hope there isn't a season.
Yeah.
Hopefully it's not about an attack.
Exactly.
Yes, yeah.
Right.
Nicole, thank you.
Thank you so much.
It's 7 a.m. on the East Coast. You're watching Squawk Box. I was going to be asked to be on the podcast just to go, but it's only once. Yeah? What do you think about it?
Yeah.
Season 2.
Yeah, season 2. Yeah. 9 episodes, and yeah.
It's already done though.
It's done. We did a
Okay.
live podcast.
Season 2. We're available. I'm Joe Kerner, along with Melissa Lee, Becky, and Andrew are off today. Among today's top stories, futures this hour, down but not out, although we're triple digits on the Dow. The S&P, though, and the Dow are both on pace to end the week in positive territory. We'll have more on the markets in just a little bit. Oh, speaking of which, a power outage has forced London's Heathrow Airport to shut down. A nearby fire at an electrical substation caused the outage. A spokesperson for the airport saying there's no clarity on when the power will be restored. Heathrow will remain closed until at least 11:59 p.m. local time tonight. And this is out from Johnson & Johnson. It really isn't, oh, okay, just because we had it last hour. So, the company announcing it's increasing its investment in the U.S. to more than $55 billion over the next 4 years. That's a 25% increase from the previous 4 years. The plan includes 4 new manufacturing facilities. And I will say that Joe Wolf, the CFO there, has been an outspoken proponent of, for example, the 21% tax rate in its 2017 act. He said we would not have built these factories in this country without that, and now I think probably this is sort of an add-on to what he was saying back then, and it'd be nice to have everything here.
I mean, tariffs do impact pharmaceutical companies too.
Yeah.
They manufacture drugs elsewhere and bring them, or the components might come from
I mean,
someplace, and the components for a drug may be taxed.
In the most simplistic world I try to live in at times, if we made everything here, we wouldn't need any tariffs whatsoever, would we? And we will, anybody that has tariffs that we're trying to, with the stuff we make here, we're trying to send there, then they need to get in line and get rid of the tariffs, right?
Let's get to Frank Holland with a look at this morning's
Frank will agree with
market
me.
movers. Good morning, Frank.
Hey, good morning, Melissa. Good morning, Joe. Hope you guys are both doing great on this Friday morning. Let's start off with Tesla. Tesla shares, you can see they're lower, pulling back just about 0.5% after regulators announced they're recalling nearly all Cybertrucks. The issue, stainless steel panels are falling off. It's the eighth recall since deliveries began just about a year ago. Important to note, Tesla will make the repair free of charge. However, it's just the latest issue for the EV maker, including falling sales in China and Europe, and here in the U.S., vandalism of vehicles is a form of protest against Elon Musk. Take a look at this chart right here. You can see shares are down more than 40% year to date. Also important to note, Tesla shares are on a 9-week losing streak, on pace for the 9-week this week. It will be the longest ever in the history of the company. Take a look at shares of Lennar, the homemaker, under some pressure despite beating on the top and the bottom line. That drop being fueled by a margin miss and some comments from the company about a weak market. You can see shares are pulling back just about 3%. Also saw some pressure on new order prices and also existing home prices. Both of those fell. Moving on, Supermicro shares getting an upgrade this morning from JP Morgan from underweight to neutral, also raising its price target from $35 to $45. You see Supermicro shares moving up almost 1% right now. Analysts say the company has cycled past a lot of uncertainty from delayed SEC filings and is poised to benefit from the ramp in Blackwell server shipments from NVIDIA. Again, shares of Supermicro up just about 1%. Melissa, back over to you.
Thank you very much, Frank Holland.
Coming up, Dr. Scott Gottlieb is going to join us to talk about the bird flu outbreak, RFK Jr.'s push for food safety reform, and much more. And then later, don't miss our interview with Mr. President, Chicago Fed President Austin Goolsbee. Stay tuned. You're watching Squawk Box, and this is CNBC.
Treasury yields right now about 4.21% on the 10-year, the 2-year at 3.93, fairly stable here. Our next guest says upside risks to the economy have diminished, but she still expects a soft landing. Kelsey Barrow is fixed income portfolio manager at JP Morgan Asset Management. Kelsey, great to see you. Why have they diminished in your view?
So I think the reason that the upside risk has diminished is primarily a function of the, I would say, order of sequencing in terms of the administration's agenda. So there was a number of things that the market was very optimistic about at the start of the year, particularly tax cuts, deregulation. Some of the things that they were more concerned about, tariffs, were not really front of mind. What's happened is we've seen a significant deterioration in both consumer and business sentiment as a result of the escalating trade wars. We unfortunately don't think that's going away anytime soon. You have the uncertainty is a cloud that will continue to be swirling around us at least until April 2nd. And as a result, we've already seen enough indication in the data to suggest that growth is moderating. but it's moderating from a very strong place. And that's an important distinction, right? Is where did we start? Because we do have headwinds to growth that we're seeing emerge, but we're coming from a very strong place when it comes to consumers and corporate balance sheets heading into 2025.
I think it's interesting that you phrased it as, I'm not sure if this is actually your wording, the upside risks have diminished as opposed to the downside risks have increased. Is that your wordsmithing or?
Well, I do think the downside risks have increased, particularly as it relates to treasury yields and yields in the bond market. So if you think about the risk reward, I think that the upside risk to yields are now much more capped. And the downside risk to yields, on the other hand, we could see them come significantly lower if we were to see some of this downside risk really materialize.
So what are we seeing? What does a 4.21% yield on the 10-year tell you? Is that a reflection of the growth scare? And if a growth scare becomes a growth slowdown, an actual slowdown, what should that yield then be?
So I think that the yield should probably be moving lower below 4%.
Okay.
That would be an indication that risks of recession are materially rising. What I would be looking for to really assess if we're going to see that shift is the labor market. So the Fed right now is in a bit of a waiting period, wait, hold, see, because inflation is still not at their target. What will really get them to react and to consider rate cuts this year in a more aggressive fashion, more than the two that they currently have in their dot plot, is if you start to see the unemployment rate rise and you start to see initial claims start to really pick up. And we're not seeing that in the data yet. And that's why the Fed is very comfortable on hold. And that's why we're kind of in this middle of the road area in terms of our expected range for the 10-year Treasury, which we think would be around 3.75 to 4.25.
So you're a fixed income portfolio manager. So what are you doing now? How are you positioned?
Yeah, so the way that we're positioned, this has actually been a very good time for fixed income so far this year. So just to set the landscape, why do you want fixed income in your portfolio? Well, diversification against your volatile equities, liquidity versus your alternatives that may not have a mark to market but are locked up for a long period of time. You have the S&P 500 that is down about 4% year to date, where your bonds are up 3%. That's not just treasuries, though, up in price. Investment grade credit is up in price. Agency mortgages are up in price. We see a lot of value of maintaining duration, but also having a lot of carry in our portfolio. So we still see company balance sheets as very healthy. So we're investing in investment grade credit. That's one. Securitized credit as well, asset-backed securities. And really what we're seeing right now is fairly substantial demand for fixed income across the board.
Kelsey, great to see you. Thank you.
Thank you.
Kelsey Barra.
Coming up, former FDA Commissioner Dr. Scott Gottlieb joins us next with his take on fighting the bird flu outbreak and what steps the administration should take. And here's a look at the shares of Dow component Nike, down about 6.5%. Company warning that sales are going to drop by double-digit percentages in the current quarter as the company faces new tariffs, sliding consumer confidence, and a slower than expected corporate turnaround. Let it go woke, you go broke. Kind of. Squawk Box will be right back.
Time now for today's Aflac Trivia question. On this day in 2006, Jack Dorsey sent the first message on Twitter. What was the message? The answer when Squawk Box returns. NBC. And now the answer to today's Aflac trivia question. On this day in 2006, Jack Dorsey sent the first message on Twitter. What was the message? The answer? Just setting up my Twitter, TWTTR. The completed version of Twitter debuted 4 months later. The answer? Just setting up my TWTTR.
We're watching shares of British pharma giant AstraZeneca, the company announcing that it will invest $2.5 billion for a research and development center in Beijing. It will increase the company's workforce there in Beijing to around 1,700 employees. The company has been scrambling to revive its business in China after several scandals, including the arrest of its China president last year.
Protecting the American egg supply from the avian flu. Former FDA Commissioner Dr. Scott Gottlieb argues that the best way to fight the ongoing threat is through biosecurity and vaccines. Dr. Scott Gottlieb joins us now. Scott, if I left this next line out, I don't know what, the world might end, might stop spinning. He is also a CNBC contributor, and he's on the boards of Illumina and Pfizer. How's that? Now I'm done. Thank you. What am I most scared of? My not being able to have scrambled eggs, or bird flu jumping and being a real threat to the next pandemic for humans? What am I worried about?
Yeah, look, I think you're most worried about the human health risk here. It appears that this virus has become endemic in North America. We're seeing the birds, the migratory birds, and cows now pass it back and forth between different species. And so if this is in fact endemic in North America and it's a persistent threat that we're going to have to deal with, it just increases the chances that it can continue to evolve in ways and get into other species where it has more potential to evolve in ways that it could infect humans. We're not there yet. The risk is still remote. But as this continues to spread and as it gets into more mammals, that risk continues to increase.
You know, there is in hindsight, there's a whole group of individuals that think that regular immunity to COVID would have been a better way to approach things. As a result, I think that has people actually positing, let this spread, and chickens that have natural immunity are going to win out eventually. And this is something that Health Secretary Robert F. Kennedy Jr., I don't know how serious he is, but proposed allowing it to spread through the flocks. I would think if you're worried about, jumping to humans, that would incubate a lot more viruses. It could possibly, one of them could possibly be the one that causes the next pandemic. It sounds a little frightening.
Yeah, certainly it could drive the potential for more mutations if you're allowed to spread unchecked into flocks. It's also, unfortunately impractical in other respects because immunity isn't necessarily inherited. So there's a lot of diversity, as you well know, in people's immune systems and how they respond to different pathogens. And just because you might be able to isolate one chicken in the U.S. domestic supply of 350 million chickens that seems impervious to this virus, thinking that you could take that chicken and selectively breed it and reconstitute the entire flock of over 300 million chickens from that single chicken or a handful of chickens that haven't succumbed to the virus, and they're going to pass down that trait, that's just not practical. There's no reason to believe that the immunity, if in fact they have some innate immunity, is going to be inherited. And remember, these chickens are inbred. They're bred specifically for their egg-laying abilities, and they have weakened immune systems as a consequence of that, so it's a trade-off. I think the best step we could take here is improve biosecurity in these farms, which the Secretary of Agriculture, Rollins, has proposed. She put forward a very comprehensive plan. And the other thing we should be thinking about is vaccinating the chickens. There's hesitation around that, not just from anti-vax groups, but more prominently from people who export chickens. We engage in a brisk business of exporting baby chicks around the world. And a lot of countries won't want to take our chicks if they're vaccinated because they worry that the vaccine itself isn't sterilizing, so you can get chickens with subclinical infection. They're still infected, but they don't show signs of infection in those flocks that we may export, and they could unwittingly be importing the chicks, so the infected chicks. And so there are ways to mitigate that. There are steps we could take. I think we should explore that more earnestly.
Did you tell us your 5 ways of what we should do? Did you go over? I was thinking of a bunch of different things when you were talking. That's pretty gross. So there could be an underlying undetectable infection of a bird, of the virus itself, the bird flu virus itself, or something else in the chickens we're exporting?
Well, the vaccine itself reduces the likelihood of the chickens becoming infected, but what it does most prominently is reduces their chances of succumbing to the infection, so they don't get as sick, or they don't get sick from the virus. But they can still catch the virus and harbor the virus, and so countries would worry that they'd be carriers, exactly.
I'm not even gonna so we gotta lock these chickens down now, and homeschool them, not let them go to class. What are we supposed to do to keep repeat what we did with the human population with chickens? You can't do that, can you, Scott?
Well, the increased biosecurity. Yeah, the increased biosecurity, and the Secretary of Agriculture outlined a lot of these steps, deals with things like, hosing down trucks and workers' boots and things like that, so people don't import the virus onto the farm. Also improving protections for water supplies that chickens drink from, so that wild birds don't poop in the water supply and spread the virus that way. We know that there's a potential that dander between farms can spread over short distances through the air and infect water supplies as well. And so there's ways in terms of the ventilation that you have in hen houses to reduce the likelihood that you're going to bring the virus in through that route, through the ventilation. So there's things you can do to improve the biosecurity on farms that could substantially reduce the likelihood of having outbreaks on those farms. And in fact, I think the steps that we're taking are having an impact. I think by and large the reason why the number of infections are down and egg prices are falling is because the North American flyways right now are quiescent. Birds aren't migrating, and you could see an increase in infections and outbreaks on farms as migratory birds start to go through those North American flyways. And so the reprieve that we have right now may be short-lived. It may be a little bit more durable because of the steps we've taken in recent weeks, but I think we'll start to see more outbreaks as birds start to migrate again.
You know a lot about birds, Dr. Gottlieb. For somebody who's a doctor.
We regulated this at FDA.
Yeah, I was gonna ask you because, when you're talking about measures for farms, that's agriculture. So where does, in terms of vaccinating birds, where does the FDA come in, and how does it work with, say, a Department of Agriculture to enforce policy, and how could anti-vaccine stances at Department of Health and Human Services, I don't want to say infect, but, shape how the FDA directs that?
Yeah, look, the FDA and the CDC certainly advise on this process, but because meat and poultry is regulated by USDA, and USDA maintains a separate entity that regulates vaccines used in those livestock, they largely regulate the vaccines and need to give permission for chicken breeders to deploy the vaccines. And so the ball's in their court when it comes to the vaccines. I don't think their hesitancy right now is from the the backlash that you're going to get from anti-vaccine groups, although you're already seeing that online. I think the bigger hesitancy of agricultural officials are the export considerations, and the industry as well. I think the industry has mixed feelings about deploying vaccines in the American livestock and American chickens because of that brisk export market. Remember, we raise about 10 billion broilers in the United States, and so there's about 350 million egg-laying hens, but there's 10 billion broilers that are raised in the United States for consumption, and some portion of those are exported. We don't slaughter them and consume them all here in the United States, and so there's a pretty good business in exporting actually live poultry.
Dr. Gottlieb, thank you.
Thanks a lot.
Coming up, Elon Musk seeking to ease shareholder concerns as Tesla heads for its 9th negative week in a row. We'll bring you the details next. And a quick check on futures this morning. After a slight pullback in yesterday's session, we are seeing further declines here across the board. S&P looking to be lower by 17. NASDAQ looking to be down by 76 points. Squawk Box will be right back.
Whenever I talk to young people, I encourage them to pursue their passions, to make a difference in the world now. I think that's the path to no regrets and to the greatest fulfillment, because it gives you a chance to really dive in and see the solvability of the challenges you're addressing.
and make it count.
Drivers trading in a record number of Tesla cars so far this month. That's according to new data from national car shopping site Edmunds, provided to Reuters. Teslas from model year 2017 or newer accounted for 1.4% of all vehicles traded in until March 15th. That is up from 0.4% in March of last year. If the trend holds, the current pace of trade-ins at dealerships would be the highest ever for Tesla. Musk and his car brand have faced recent backlash over his political ties to the Trump administration and their push to cut government spending. Teslas and Tesla showrooms have been targeted by criminal acts of vandalism and arson. Yesterday, Attorney General Pam Bondi announced 3 people have been charged in connection with arson at Tesla dealerships and charging stations. On the stock front, Tesla shares currently on pace for their 9th straight negative week. This is the stock's longest ever down stretch. Here's what Elon Musk told Tesla employees in an all-hands meeting yesterday in Texas.
There are times when there are rocky moments, like things are it's like a little bit of stormy weather. But what I'm here to tell you is that the future is incredibly bright and exciting. So what I'm saying is hang on to your stock.
Well, Disney shareholders, meantime, rejecting an anti-DEI proposal at a shareholder meeting yesterday. It would include the company ceasing participation in a prominent LGBTQ rights organization's equality ratings program. Anti-DEI groups have pushed companies to halt participation in the Human Rights Campaign's annual Corporate Equality Index, arguing that it pushes companies to take extreme positions and destroy shareholder value. Disney's board disagreed, saying it did not believe leaving that program would increase shareholder value. Investors sided with the board and voted down the proposal. The move comes just a month after Disney scaled back some of its DEI policies. Separately, Disney shareholders voted to approve a $41.1 million pay package for CEO Bob Iger. That's up 30% from the prior year.
Media's tough. I mean, it's Disney's under $100. You know,
Yeah.
So the damage has been done by something. I'm not saying it's all the wokeness, but it was how much was it? It was $190.
Oh.
Go back further.
The height of the
198.
possibilities for streaming,
Right.
etc.
Exactly. So why bother now? The damage is done. Coming up, FedEx cutting its forecast on soft demand and uncertainty in the economy. We're going to talk more about the company's results next. Then later, don't miss our interview with Chicago Fed President Austin Goolsbee coming up at 8:30 Eastern. Squawk Box will be right back.
FedEx.com.
FedEx getting its full year profit and revenue forecast as it reported mixed third quarter results. Joining us now, Jonathan Chappell, Evercore ISI Senior Managing Director. Jonathan, great to have you with us.
Thanks for having me.
There was a lot not to like in the FedEx report, including the guidance, which was lowered on top of the, a bit lowering guidance the last time around. And I'm wondering at this point, how much of this will be, in your view, a FedEx problem and how much of this is an economy problem?
I think the vast majority of the guide cut is a macro problem. FedEx laid out 2 years ago a plan to cut $4 billion in structural costs. I don't think anybody really gave them credit that they could actually execute on that. And here we are 1 quarter away, and they're on path to meet that. The problem is the volume outlook, the industrial economy as it relates to both their Federal Express business and their freight business, international especially. All of these headwinds are really kind of adding up. So they've controlled the controllables, which is what this stock was all about for 2 years. It's just that the controllables now are starting to run out a little bit, and they're a lot more reliant on the uncontrollables, and that's both uncertainty in trade and cost inflation, which is offsetting some of their company-specific cost cuts.
The lowered guidance doesn't include the impact of tariffs that are slated to take effect on April 2nd, Jonathan. So there is downside risk to that lowered guidance. And I'm wondering, in your view, what is that risk on a percentage basis? Or maybe you have another sort of guidance range that would incorporate the tariff risk.
No, I think that premise of no escalation of tariffs is not baked in. And I think trying to pinpoint exactly what a tariff impact might be is a bit of a fool's game at this point. We just don't know what it's going to look like, the duration of it, etc. What's interesting is the majority of FedEx's business is within the U.S. They are obviously a very diverse global franchise, but no country outside of the U.S. represents more than 2.5% of their business. So I think it's more of an uncertainty fear factor right now. I think there's some other tail risks associated with this business as it relates to Amazon continuing to build out their logistics network that are really more concerning longer term than maybe the short term fears around tariffs. Clearly, if we get to April 2nd, there's global reciprocal tariffs. It really starts to distort global trade. We'll have to try to put a best guess on it. But at this point, I think it's too early, and it feels like the policies may change, several times before we get to a point where it actually impacts the financials.
Right. Which is better to weather the storm being the economy as well as tariffs, UPS or FedEx?
It's quite similar, honestly. I mean, I think it would impact both of them pretty similarly from a financial standpoint, from a multiple standpoint, from a stock price perspective. I think what's interesting is it feels like FedEx has taken a bit more of a hit in an equity on the equity side from the tariff fears, whereas UPS has taken a much bigger hit from the Amazon tail risk. And frankly, they're both impacted quite directly from them. So it's kind of just like choose your poison. But both will be impacted by it. And what we found this really for the last 2 years, even before the tariffs, before the Amazon tail risk came to the fore, outside of FedEx's $4 billion cost-cutting, idiosyncratic path, outside of their LTL spin that they announced in December, long-only institutional investors have been very reluctant to buy into these stocks in general because of some of those longer-term fears. And you've seen that in the multiples, but these are the lowest trading transport stocks out of any segment that I cover, with some of the biggest market caps in global franchises. So a lot of these things are coming to roost. There's a lot of moving parts. I think it'll cause a lot of volatility. And unfortunately, I think it's very difficult to step in until we have a lot of clarity on 26 and beyond.
All right. Jonathan, thank you.
Thank you.
Coming up, an executive shakeup at Apple to turn around Siri. Those details next. We'll be right back.
Assurance.
Apple shuffling executive ranks around to address delays in its AI rollout. We said it was to fix Siri. I'm not going to get started. Steve Kovac joins us now with more. I still, when I'm dictating or doing anything, the stuff that AI program comes up with has never been said by anyone.
Yeah. Or it tells you to go to Google and figure out the answer.
Some of the stuff that I'm saying is, I don't know, maybe a little bit.
Look, Jay, they were supposed to fix that, and that didn't happen. And so now there's this big exec reorg happening after the failure to ship that big AI upgrade to Siri that was going to fix all the things you're complaining about. Now, Bloomberg reported on this yesterday. So let me tell you what the changes are going on in these executive ranks. You have Apple's artificial intelligence boss. His name is John Giannandrea. He is actually losing the Siri team. He used to be in charge of that. That's now going over to another executive named Mike Rockwell. He was formerly in charge of the Vision Pro headset team. He's going to be running Siri now. This is also something of a coup for another top Apple exec. That would be software boss Craig Federighi. Rockwell will report to him, putting Federighi ultimately in charge of this big Siri update. And lots of folks have been asking this week, and especially yesterday after these moves, why Giannandrea basically only lost the Siri team and not his job. Tim Cook, the CEO, he's fired leaders in the past. Scott Forstall, most famously, he was in charge of iOS, and they put out that bad Apple Maps update back in 2012 that led to his firing. Another interesting angle here with Rockwell running Siri. Yes, when he shipped the Vision Pro, it worked on time. It works just as advertised. It shipped on time, but it's not a product that's exactly setting the world on fire. And getting Siri AI right is way more important than getting the Vision Pro right, at least in the near-term future for Apple. No word from Apple how they really plan to turn things around. No comment on the news yesterday. All they've said so far is we need more time to get this AI update to Siri working properly. In the meantime, there's just some chatter going around. That's not going to happen until next year at the very earliest. Some people are even talking about 2027 until this happens. So if you're an Apple investor out there and you believe there's an AI iPhone super cycle coming, you're going to have to wait at least another year, guys.
Oh, all right. So I don't even try now.
You shouldn't. Use ChatGPT. It's already right there on your phone.
No, but like, it shouldn't be where if I'm going to use Siri, not only am I sort of ambivalent about using it, I get mad and think,
Does she get mad back at you?
She doesn't really get mad, and she should for what I have called her.
Can you say that on TV?
No.
Yeah.
Probably not. But you shouldn't have a visceral feeling about how bad something. They gotta fix this.
Yeah, and it's been around for years. It's been around for 14 or almost 14 years since Siri launched. I mean, we all know the problems with it, and I think this is really telling this executive shakeup, though, and this kind of not power struggle, but power shift going on here. And John Giannandrea, that AI executive I told you about, he was hired by Apple several years ago from Google. He has a sterling reputation in the AI industry, and it was a big deal. When he got hired, everyone's like, oh my God, Apple's taking AI seriously. This is going to be huge. Last year, just ahead of WWDC, when they finally unveiled Apple Intelligence, everyone's like, this is going to be his coming out moment. This is going to be great. And it turns out what they showed us didn't really exist. It wasn't even close to ready. And here we go. By the way, they were advertising these features with that we showed that commercial was starring Bella Ramsey. There's now a class action lawsuit going on saying false advertising.
But there's nothing there.
There's nothing there.
So this, if I were to read between the lines, it would tell me that whatever they're going to announce in terms of the new Siri AI, whatever it is even that much more delayed. I mean, if the new executive team is going to come in and take over, there's got to be some transition time. It's not coming out around the corner.
Exactly. And do they have to build this from the ground up? What are they going to do? And we're not going to get our next hint at that until June, where that's when at WWDC they show off all their new software features. That's where they initially showed Apple Intelligence, and it turned out that just kind of landed with a thud. So what are they going to do to turn this around, and even more importantly, build trust that what they do announce at WWDC is actually going to launch when they say it's going to launch. This new reorg, they have their work cut out for them for sure.
Yeah.
How many Apple employees? Do you know the?
I don't know off the top of my head. It's a little skewed because they have so many retail employees.
Well, how many do you think? Because you seem to know. Do you know like the sushi chef at the? They replaced him recently.
I definitely don't know that.
You don't. How many are there?
I've eaten at the cafeteria before. It's pretty good.
You have?
Yeah.
The Apple cafeteria.
Yeah.
There are 164,000 full-time employees.
Yes, and that's kind of skewed because of the retail operation. But.
And you know what? 162,000.
Something like that, yeah.
I haven't heard any of those people you were just talking about.
Tim
Have
Cook.
you?
Jenna Dre.
Yeah, I heard of Tim Cook.
John Gianandrea, very big deal in this industry. Not a household name like Tim Cook, but
You heard
very
of
big
him?
deal.
Yes.
What did I say
Steve
earlier?
Kovac
I didn't know how to do
him in the past.
Right.
Yeah.
You have?
Just by listening to
Yeah.
Steve,
Was that
you learn a lot
on my
about
phone or
Apple.
on my phone or
Look
something?
at Twitter a lot when
No, I'm not looking at Twitter. I am looking at this. I happen to look at Perplexity. Twitter's on here.
Ah, got it. Okay.
Twitter's on here.
You're a Perplexity guy.
Only because I have it.
I love it.
It's okay.
I think it's great.
I think, you ask about certain things, they just scour Reddit and pretend that they're smart. They haven't thought about everything. But whatever, they find.
Yeah, kind of, but it's just easier to read than going searching for it yourself.
Oh, yeah.
I think it's great.
No, I asked a lot. But I had to, Angelica had to tell me about
Compounding.
shooting stuff into your stomach.
Yeah.
Right? There's a lot of things that we didn't do.
You can learn so much just by watching this.
Just by
show.
watching
the
this
show,
show.
just listening.
Did you ever think you'd have to put alcohol on an actual bottle that you use yourself, have a hypodermic, put it in, and stick it in your stomach? People do that all the time. I would never.
Diabetics do it.
Well,
Yes.
diabetic.
When I was a kid, I would take allergy shots. I would give myself allergy shots.
You would give them to yourself?
Yeah.
All right. But you're like,
I've seen things.
you're 20. You're 22.
I'm 39.
Oh, still? How many times is that going to be? Right.
I'll be 40 this summer.
Okay. Thank you. Life begins at 40.
It does?
Yeah.
All right.
Thank you.
Coming up, finding opportunity and volatility. Your next guest joins us with his top stock picks. That's next. Stay tuned. Squawk Box. Be right back.
Our next guest says the market, the volatility is creating opportunities for investors. Jay Bowen is the CIO of Bowen Haynes, which is the sole manager of the Tampa Firefighters and Police Officers Pension Fund. The firm has $4.5 billion in assets under management. Have you sold anything at this point, Jay, or are you using any of the recent weakness? I don't know, 10% in the S&P. Have you bought anything?
Yeah, with our approach, which is very long term, it's funny, if you look at the algorithmic trading patterns when we have a correction like this, I think what you'll see is oftentimes what's done well, and anything that's had even a hint of momentum really gets hit disproportionately hard. And so that can create opportunities, particularly in companies with really strong, solid long-term fundamentals. Sometimes they get thrown in with these pure momentum situations. I think the problem right now, the market is really struggling trying to price the future with all these uncertainties swirling. They're all up front and center, and you know, it's a long list. The good stuff is still on the distant horizon, the growth stuff, the deregulation. But I do think we've got a good shot at the script flipping when we move into the second half of the year. So I think it does create opportunities.
Those are some of the things that we thought about a couple of months ago that we're going to be, no doubt, we're going to be positive. We didn't have to worry about the corporate tax rate going up. We're going to, have all this deregulation. Companies are going to be able to merge again. There's going to be animal spirits, and then we ran into the possibility of a trade war on different fronts. But you think you think that eventually reconciles itself in a positive way?
Yeah, not only do I think these uncertainties are going to dissipate, I think they're going to actually become positives as we move into the second half of the year. I mean, we'll get the reciprocal scheme on April 2nd and see what that's about. But I do think moving forward, it could lead to a lower tariff and non-tariff barriers on a global scale. The monetary and inflation story, I also think, is going to get better in terms of the Fed. The inflation story is going to come their way. They're going to become accommodative again. And I think the yield curve is going to disinvert, similar to post-election, based on higher real rates for good reasons, for good growth-oriented reasons, higher real returns on capital, that kind of thing. So that's a good story. And then we are going to have a tax bill. It's coming, and the 2017 is going to be extended, the act, and there'll be a growth component. And geopolitical / foreign policy, things could really settle down in the second half. So, like I say, I think the script could flip moving forward, and that 2026 could be a strong business year, which will start being discounted later this year.
I want to hear about a couple of your stocks, but I just have to ask you whether, we're watching this Doge situation play out, and it's really sort of driven a wedge, if it was possible to drive even more of a wedge into the way people think about what Washington does. Will there be enough identified to make an actual difference in what the government spends, and is it worth the pushback that the administration is getting just across the board? I mean, Tesla dealerships on fire, it's insane. Okay, is it worth it? Would you even attempt to do it? It's almost, I'm ready to just say, the government is so bloated and out of control. There's no, it doesn't have to earn profit. We just tax more when it overspends or take on more debt. Just let it go. It's not worth it. It's not worth too many sacred cows to mess with.
It's unfortunately it's got to be done. The budget's 45% higher now than it was pre-COVID, and this is not your father's 1982 Grace Commission, as you know. I think this one is more substantive, and I do think it's gonna. You can argue with the mythology and how it's being implemented, but I do think it's long overdue in terms of these audits. And I do think, it might not be $2 trillion, but I certainly think $1 trillion is achievable, and it's something that I actually, moving forward, almost as important as that is what's going to happen on the regulatory side / deregulation side, particularly flowing from those 2 Supreme Court decisions. That's just vital. But this stuff takes time, and it's on the distant horizon, and the market is uncomfortable pricing that right now.
I know you some of the stocks you mentioned: Eaton, GE, Vernova, Corning, Boston Scientific, American Express, Teledyne. Those are all you would hold or add to those positions. We got to go, but those
Correct,
are some.
both.
Yep.
And we consider these really technology companies, some of them disguised as industrial companies. All of them, I think, are double-digit compounders long term that really have very strong financially, strong management teams, and a lot of proprietary products that play into this 4th industrial revolution.
Okay, Jay, thanks. Good to have you on. You got. I hope you do well. You have important officers, police officers, pension fund, and other. Do you sleep at night? I don't think I would. You got some broad shoulders, but.
Well, we have the luxury of taking a long-term approach. That helps me sleep.
Like that'll help. All right. Yeah, maybe I'll try that. Thank you. Yeah.
Thank you.
Oh, it's 8 a.m. on the East Coast, 8:01 in fact. You're watching Squawk Box on CNBC. I'm Joe Kernan along with Melissa Lee. Becky and Andrew are off today. We've got some top stories that involve some individual names. This is a Dow component. Nike shares down about 7%. And I don't even want to tell you what the all-time high was on Nike, but I think it's down more than 50%, is it not?
I mean, right there on the chart, you see touching 100.
I think it would. I think it's down 50% from the all-time. Beating estimates for the third quarter. Investors instead turning attention to its forecast. Nike warning its overhaul efforts under the new CEO, Elliott Hill, will hit revenue and earnings growth so far more than the street was expecting. Nike also said tariff pressures on supplies and fighting consumer confidence also not helping in its forecast. Johnson & Johnson announcing its increasing investments in the U.S. To more than $55 billion over the next 4 years, and that's a 25% increase from the last 4. And the plans include 4 new manufacturing facilities. And a fire at an electricity substation, and then the subsequent power outage forced a shutdown of Heathrow Airport in the UK. The impact already being felt here in the US. More than 1,300 flights have been canceled there. Britain's energy minister saying the fire, though, is under investigation.
Seeing some pressure to cap off the week. Across the board, slightly lower here. S&P 500 looking to be lower by about 17. NASDAQ looking to be down by 78. Let's get to Mike Santoli at the New York Stock Exchange. What are you watching today, Mike?
Yeah, Melissa, obviously those earnings reactions having some influence, and then, also sort of testing that post-Fed rally on Wednesday, gave some of it up yesterday. Big picture, the bounce that we got last Friday and last Monday still looks pretty credible. It's very broad. Maybe that was a plausible short-term low for the market, but we've only gained back about a quarter of what was lost in that correction. And this 5,700 area all week has been a little bit tough to stay above. About 3 times crossed above it, have not done that. So this is the time where you're kind of monitoring every little bit of kind of body language and the rhythms of the market to see if there's actual buying demand going to show up here. You don't want to be stuck in the trough too long on a technical basis. Got a big quarterly options expiration today, could move things around. Take a look here at if you're an old Dow theorist, how things have looked. The Dow Utilities, the big outperformer over 1 year. Dow Industrials, got a gain. We hit a new high back several weeks ago. And then the transports, of course, FedEx right now, the highest price stock in the Dow Transports, is going to put more pressure on there. So obviously, market is sort of hunkering down for what looks like a tough go on this sort of cyclical area, and obviously a lot of the trade issues might come to bear on it as well. How, on the brighter side, all things being equal, you'd prefer bank stocks to be in something of a leadership position or at least participate in upside. Over 2 years, this is the banks right here. They have maintained an outperformance here. Very interesting. That post-election rally surge gave it up into the end of the year. And then this is right about where bank earnings started. They were good. People got excited. And then the growth scare hits. And obviously, bond yields have been pretty volatile. We're taking Fed rate cuts out of the expectation. But we sort of bounced where we had to here, and so far preserving that outperformance at the moment, guys.
I'm glad you mentioned bank stocks. Bank stocks actually for the week, Mike, have had a pretty good week compared to the broader S&P 500 and, compared to like an NVIDIA or tech stocks in general.
Yes, and of the kind of cyclically important areas, they've stood out for a while now. It seems like it's the cleanest read on sort of the flow through of deregulation. Obviously, they're decent capital positions. Everyone's dealing, though, with the really the continued drought in deals. So, the capital markets environment, not that great. By the way, industrials have still hung in there as well. And I keep trying to point out, for all the talk that this has been a tariff-related panic and all of a sudden we're talking about recession, outside of the Mag 7, the S&P 500 is flat on the year. So it's obviously been a lot else going on besides just an economic call.
Mike, thank you. Mike Santoli. Coming up, President Trump signing an executive order calling for the closure of the Department of Education. Former Education Secretary Margaret Spellings joins us after the break. And later, Chicago Fed President Austin Goolsbee on this week's FOMC decision and his economic outlook. Squawk Box will be right back.
Yesterday, President Trump signed an executive order aiming to dismantle the Education Department. Join us now, Margaret Spellings, President and CEO of the Bipartisan Policy Center. She's also a former U.S. Secretary of Education, and no one should be surprised, I don't think, Madam Secretary. This was been talked about for quite a while, but by President Trump, and I guess you'd have to say that people that voted for him should not be surprised by this.
I guess that's right.
And as a result, I mean, it's not going to be easy. I don't know if you can do it this way. I don't know what your thoughts are. And I don't know whether you think you're in favor of it. There are a couple of things that I didn't realize that I'm finding out. $1.6 trillion in student debt. That would make the Department of Education one of the largest banks in the United States. And it doles out $270 billion a year. And whoever is president can basically decide who gets some of these block grants for their own agenda. And we've had no improvement in any scores anywhere since it's been around.
Well, that's not entirely true, and you've said a mouthful. There's lots to react to there. First of all, the Congress is going to have the last word on this proposal, obviously. It was congressionally created, and there are various requirements and remits for the Department of Education. President Trump has already laid off about half of the people at the Department of Education. It's college enrollment season, for example. Students are anticipating financial aid decisions. University administrators are needing to process those things. You know, the Trump administration says, and it's encouraging, that the funding levels will continue, that we are still in service to low-income and special education students on the K-12 side, and financial aid on the higher ed side. And you're right, it's a big bank. So I have a lot of questions about whether they're going to be able to meet the requirements, the congressionally mandated requirements that they're charged with these reduced levels of staffing. And further, if we're sending money to the states and we're eliminating those oversight and data functions at the department, how will American taxpayers know if they're getting any return on their investment?
Is it overregulated because it's a federal program at this point? Does a lot of it fall through the cracks? I mean, $2.2 billion for a program, a block grant to support effective instruction.
And those, you know, we're hearing a lot about federal mandates, one size fits all, you know, state control. States and local school districts are in charge of public education in our country. 9 cents on the dollar comes from them. They stipulate curriculum, they write tests, they set the passing scores for tests, they describe reading lists, on and on and on. And the federal government is prohibited from those one-size-fits-all sorts of decisions. The federal thesis about the Department of Education is it's an agency that was founded in the Great Society, that we as Americans believe that everyone should have opportunity for education as a route to the American dream, and that we, all Americans, had an interest in helping support that, irrespective of zip code or rural or urban status or anything, especially for low income and special needs students.
Right, but you've got, so the student loan, we saw what Biden tried to do with the student loans, $1.6 trillion.
Yeah.
It is estimated that $500 billion is eventually going to be written down, and that's just like an entitlement. That's just another unfunded entitlement, and all it does is drive up college. The only people that benefit are the universities to be able to charge more. So,
and that's why we need a federal role that can, you know, describe to students and to taxpayers what is the value proposition around American higher education. You know, you shouldn't be taking hundreds of thousands of dollars of debt for programs that are not going to have a payoff in the job market. Or if you do, you should do that, you know, eyes wide open and maybe on your nickel and not on the taxpayers of America. But I think that role of data and information and truth-telling, both on K-12 and in higher education, is critically important. And really, the U.S. Department of Education, or the federal government, it can certainly live elsewhere in the federal government, is really the only place that that kind of data can be surfaced and understood. And we can really help states and school districts understand what's working and where.
is it true or false? No country spends more and gets less for what they're spending on. You said I was wrong about that, or that
No, I mean, that's largely true. We also in America are attempting to do something that few other countries do. I mean, we do believe that
teach
this
math and
idea.
English, teach math and reading, and watch the scores go down every single year in and year out. Well,
our thesis as Americans is that every single person who shows up, special needs, low income, so on, that those students ought to be served in our public schools, that it's virtually a universal right. Countries around the world, they have tracking systems. They say you're here, you're there, you're academically able, here's your track, and so forth. So we are a nation of second chance believers, and that opportunity ought to be provided broadly. So we're trying to do something a little different from lots of other countries around the world.
where would it fall through the crack? Are we worried that, because I can't see why the federal government would be better than state and local governments. If you had the same amount of money and you gave it to one, you try and do it from the federal level, or we'll give you the same amount of money and you try and do it from the state or local level. What are we worried? That some of the states are gonna be not very good at doing this?
Well, they have proved, and look, I've worked around state legislatures around this country and many years in Texas. I mean, I'm a true believer in local control. I worked for a school boards association, and I understand that we shouldn't sit up here in Washington and try to describe that. But may I say that when we had more accountability tied to this thesis around opportunity for everyone through these title programs, and we said test kids every year in reading and math, report that data, and do something about the achievement gap. From 2000 to 2015, we were going in the right direction, and then we started to flatten and fall in the last 10 years.
Why?
And don't take my word for it. Just take a look at the data.
Are we getting, for the amount of money that we're spending, what's every dollar, what do we actually get out of every dollar? Do we get 70 cents? Do we get 50 cents? Do we get 20 cents? What do we actually get, and where does it go?
It varies widely, because these title programs that we're talking about on the K-12 side of the house, if you will, have tons of latitude. I mean, school districts and states, they decide, do they want to lower class size ratios? Do they want to buy technology? Do they want to, you name it. They have lots of discretion around those title funds, a lot of local control. It's not against the law for states to have high student achievement, and I don't know any governor who would say, well, we're not going to do it unless the federal government gets out of their business. They're trying to nurture and develop competitive workforces, and really the federal government is the last thing holding them back from doing it. In fact, the federal government is the one shining the light on the data that President Trump cited, the data that you've just cited, comes from the federal government.
Now, I'm just wondering, where's the problem with you got the block grant here and all this money and what we said about this $270 billion that we spend, and then here coming out the other side is these test scores.
Here's the problem.
We
don't have an expectation that every student can and should have the opportunity to achieve, and we don't resource that priority like we mean it. So we have a lot of resources, and if you're a very experienced teacher, because of the way union contracts and other processes run, you're in a cream puff high school. If you're struggling, brand new, you're trying to educate our most disadvantaged kids. So we don't put our money where our mouths are. That's a matter of local control, as a matter of fact. So, just a sense of urgency around, the needs of students, and that we need to keep student achievement top of mind. And that's one of the things I'm worried about is, as we have the niceties of these conversations, which bureaucracy should run these programs, I hope that we won't lose sight of the things that you rightly say, and that is the very, underwhelming student achievement we have in the aftermath of a 10-year period where we were going in the right direction.
Right, and we are how we educate our children, because they become who we are, and we're gonna, it's been well documented. Some other countries, how much better they are at STEM and a bunch of things like that. So it's important. I have no, I'm at a loss.
They're super centralized systems, the ones that are ahead of us. Just saying.
Really? Well, that's counter to what we're doing right now, then.
Yes.
It seems like.
Yes, it is.
All right. Well, that's not good. Secretary Spelling.
We'll talk again.
Let's do. We'll figure this out. Thank you.
I hope so.
Yeah.
For the sake of our
I know.
future. Steel stocks anytime checking out this morning. Nucor and U.S. Steel each issued current quarter guidance that was below analyst estimates. Nucor said performance at its steel mills segment would be roughly in line with the previous quarter, but it expects a decline in earnings from its steel products and raw materials segments. U.S. Steel expects to see pricing improvements in some areas, but said overall demand remains subdued. It did say that its outlook was supported by tariff policies, and the Minnesota Star Tribune is reporting that Cleveland Cliffs will temporarily idle 2 Minnesota operations The company notified the state yesterday that the closures will result in the layoff of more than 600 workers as the mines go offline. Coming up next, buy now, pay later company Klarna grabbing deals with Walmart and DoorDash ahead of the fintech's IPO. Is it a sign that credit cards are being maxed out? John Ford is here to weigh in. And then a special interview with Chicago Fed President Austin Goolsbee. Squawk Box, be right back. Klarna, the Swedish rival to buy now, pay later company Affirm, filed for an IPO a week ago in an environment where borrowing costs are putting more and more pressure on everyday people. With the Fed still not close to lowering rates, will we remember 2025 as a moment when U.S. consumers finally borrowed too much? John Ford is here to weigh in. John, good morning.
Good morning, Melissa. Well, yes, as a society, we have finally maxed out the credit card. The Fed's last consumer credit report 2 weeks ago showed consumer debt all in stood at a staggering $5 trillion. Big numbers. Here's the problem. In a repeat of the worst sins that led to the financial crisis, American consumers have slipped again into a culture of reflexive borrowing. Now higher interest rates and slower growth are about to make that debt really painful. That's not all. Delinquent student loans are just beginning to hit consumer credit scores again, and the impact will be devastating. Almost 8 million people missed payments as of the end of February, the Washington Post reported earlier this month, citing Department of Education data. One borrower only noticed the problem when his credit score plummeted 140 points in a month. Well, yes, overall debt-to-income ratios are lower than they were before the pandemic, but that's largely thanks to unusually high employment, and that might not last. DOJ's federal worker cuts might be small in the grand scheme, but add in tariff uncertainty, freezing hiring, and things will get dicey fast. Take a step back and you can see it in the stock market's leveraged ETF boom, the legalized March Madness betting, Klarna's buy now, pay later partnership with DoorDash. We're heading for a national margin call, Melissa.
But we just heard the Bank of America CEO Brian Moynihan on Squawk Box on Wednesday. He said that despite all this, the consumer is still spending.
Well,
our Bank of America consumers are putting 6% more money, into the economy than they did for the first 2.5 months of last year, and that's a pickup from the fourth quarter last year, which ran 4.5%. So that money is going in different places, and you've referenced some clients who might be seeing different things, but a lot on services, a lot in entertainment, but the spending levels continue to go up.
On the other hand, this isn't the end for consumer credit. Consumer debt was $5 trillion last month, true, but that was actually down from a year ago. Also encouraging, a third of Americans have more credit card debt than savings, according to a Bankrate poll, but that's an improvement over the last 2 years. Unemployment, meanwhile, is a historically low 4.1%, hasn't changed much since last spring. The consumer-led economy is in a challenging position, especially with tariffs looming, but we can't panic and assume we know how things will play out. Remember, the Fed is still expecting 2 rate cuts this year, which probably can take some pressure off. Student loan default problem is real, but the sad truth is that it was going to take these kinds of consequences to get people used to paying a bill that they've been able to put off for the last 5 years. Our working class economy just has a lot more flexibility than it did before the financial crisis. The iPhone didn't exist as a mainstream technology then, so neither did Uber and DoorDash as ways for people to independently make money. And buy now, pay later is also a positive part of this story. As much as the elite crowd sneers at the idea of Klarna for DoorDash, the fact is, for most consumers, that's better than the alternative, putting it on a credit card.
Is Klarna and DoorDash to you, is that a signal that consumers are in trouble? I mean, it seems like their metric, they have access to very good information on the consumer. These are very short-term loans, so I don't see what the risk is here. It's 4 weeks.
There were a lot of headlines about it yesterday. People are buying now, pay later for a ticket. Well, they were doing that anyway with the credit cards, and it was in a way worse. But there is a danger in stacking debt upon debt with interest rates stubbornly higher. We'll see how it works out.
We owe $5 trillion. The government owes $37 trillion. We got to ramp it up. I mean, right? I mean, it's such a good example for us.
Well, can you print money at home?
No, I can't. I can't raise taxes either, and
Well,
I can't. Yeah.
There's the problem.
All
right, but we can figure this all out in the On the Other Hand newsletter.
Don't make promises you can't keep, but I'll
Okay.
check it out.
Well, it's Thursday, right?
Yeah.
You can send it go on the screen or type in cnbc.com/OTOH. You can read both sides.
Thank you, John.
All right, up next, we're going to go inside the Federal Reserve and the recent decision on interest rates with Chicago Fed President Austin Goolsbee. As we head to break, a look at the pre-market winners and losers, particularly on the NASDAQ. Pretty lame winners, not very big moves. We'll be right back.
Insurance.
Let's get to Steve Leisman. He has a special guest that we've been talking about. Hey, Steve.
Hey, good morning, Joe. Yes, we are pleased to be joined by Austin Goolsbee, the Chicago Federal Reserve President. Austin, thanks for joining us this morning.
Yeah, Steve, great to see you again.
Okay, so the last time we talked, you said, tell you the weather, you'll tell me the jacket. And that's part of your way of saying that you don't comment on the weather, you just have to react to what's out there. Okay, so we had the Fed meeting this week, and we learned that inflation is hotter and growth is cooler. So now tell me what jacket to wear.
We're still waiting to go outside. You know, when you got a lot of uncertainty, I do think you need to wait to see some of these things get cleared up. On the policy side, as you know, Chicago's the 7th district, is heart of the Midwest. I'm out talking to business people and civic leaders throughout this region, and there's been a decided turn
in these conversations over the last 6 weeks of anxiety, of pausing, waiting on capital projects, CapEx, etc., until they figure out tariffs, other fiscal policy. So I don't think we can decide the jacket quite yet. We're going to have to see through this bumpy patch.
I want to get to that a little later, but I'm interested also in this idea that stocks were very optimistic and then they became less optimistic. Business sentiment numbers were up and then they've cooled off a bit. Is all of this the equivalent of an economic shock that could really derail the prior trajectory of the economy?
Sometimes / maybe. It depends how big they are, it depends how long they last, and it depends what form they are. At the end of the day, I still think that the Fed needs to be the steady hand and take the long view. I understand why the market wants to get the information as rapidly as possible and wants to know by Monday morning or by the end of today what's going to be the path for rates, for tariffs, for fiscal policy for the entire rest of the year. But it's not realistic at this moment to do that. There is a self-fulfilling prophecy logic that goes, if everybody talks about prices, tariffs, problems, then it makes those prices, tariffs, problems more likely to affect the economy. But the markets go up, the markets go down. They got a lot of short-run volatility. If you take the longer view, I still think that there's a lot of strength in the hard numbers on the economy. If a Martian came down by parachute and just looked at the unemployment rate and looked at the path of inflation over the last 2 years, if they knew what the dual mandate was, they'd be saying that's progress on the dual mandate.
A vacuum in space. You can't have a parachute in space.
That's what you're arguing with the Martians?
I don't know, but you can't have
I'm arguing with the idea of Martians coming
I just
in.
I can't get over that. You'd be like, oh, I'm not doing anything. I'm just.
Austin, let me just do one more question here. Just to tell you, we were hoping for an answer to the path of monetary policy by the end of this interview, not the end of the day. But that said, there's a couple different views on the impact of how tariffs work through the economy. There's the idea that there are these one-time price levels, and there's the other idea that maybe because of the specific circumstances of what we've just been through, whether or not there's pricing power in the economy, that they could stick around and create a broader-based inflation. Have you changed your view on this? What are you thinking about the outlook on that?
Well, first of all, let me say I love that if we go to the press conference, there's the reporters asking Chair Powell about economic theory and how should monetary policy react to hypothetical and theoretical changes to tariffs. You know that several parameters need to be answered before you can truly say how should monetary policy react. How long are the tariffs going to last? Are they one and done, or are we on a chain of retaliation and then counter tariffs? And how much are those tariffs getting passed through by the private sector out of just the goods where the tariffs are being applied? So if there are tariffs on intermediate goods and parts and components that are going to wind up being inflation in spillover industries, all of those things matter a lot. At the end of the day, remember, imports are only 11% of GDP. So one-time tariffs that are not followed by retaliation and that do not spread out of what they're initially applied to, they're more likely to be transitory and on inflation, and the monetary policy would look through it. Now, you should always be careful whenever you're saying something is theoretically going to be transitory. We learned through the pandemic. So the bigger they are and the more like supply shocks they are, the harder it is to say that we should look through them.
Well, what is transitory then, Austin? I mean, if we see a flow through to a PPI or CPI or whatever inflation metric you want to point to, how many months is transitory? How many data points is transitory? What does that mean?
Well, as Steve is the one who coined the difference between transitory and transitory, And so that's why I don't like using that word when they got
But it
in the
was
press conference
used,
arguing
and it was
about
revived from that period when the Fed lost a lot of credibility.
Yes.
So people want to know, what does it mean this time around?
The answer to what it means this time around depends on how long are the tariffs in place and whether there's retaliation, and whether the private sector is going to, if they're going to apply the tariffs to intermediate goods like steel. There are a lot of steel users, and when I'm out talking, I talked 3 weeks ago to executives at a major auto industry firm. They said tariffs at 25% would be 100% of their capital budget for the year. So there's a lot of hesitancy to engage in capital expenditure while you're still waiting to figure that out. That would be multiple months and spreading it out of the lane just of the goods that the tariffs apply to. If it started freaking out consumers or businesses, those would be channels by which the tariffs would have an impact that lasted longer and got out of just the 11% of GDP part of their lane.
So, Mr. President, in the last week, I have had people on here that have told me the economy is really resilient, and it's in really good shape, and credit spreads, there's really nothing on the horizon that looks bad. It looks like more of the same economy that we had for the past year. Then the next guest comes on and says there are so many signs of a weakening economy in labor, and people are borrowing more, and the consumer is starting to be much weaker. That's like the next guest, Austin. And then we have Fed people on. On one hand, I hear how restrictive the Fed still is, and we need to cut. And the next guest comes on and says, oh my God, I can't believe we cut. Inflation is still in the pipeline and tariffs are coming. We definitely are too easy. I don't know. I mean, it's amazing where we are right now. Can you tell me the answer to both of those questions?
First of all, you better check your booking agent, because it depends who you bring on. The economy's huge. If you're a pessimist by nature, for sure you can find things that will make you more pessimistic. If you're optimist by nature, there's a lot in the hard data that's strong. This is why it's not an easy job to be central banker. You got to, what keeps you up at night? Your job is not to sleep at night. You got to think through every scenario. I still think the economy is resilient, and if we get past this bumpy period of some uncertainty, I still think that when the unemployment rate and the job market are settled in at what looks like full employment, if we can continue to make progress on inflation over the long run, I believe that rates 12 to 18 months from now will be lower than where they are today. And if you look at the dot plot, that's still the general sentiment of the whole committee. But when you have uncertainty, it's like I say, I'm in the data dog caucus. There's doves and hawks and other birds, but I'm with the dogs. And the first rule of the dogs is there's a time for walking and there's a time for sniffing, and we need to distinguish which is which. When there's uncertainty, that's the time for getting as much data as you can and sniffing around. But
where dogs sniff all the time. Why did you have to? I don't know why he. First it's the parachute and okay. They sniff each other's butts.
Joe, look, I changed the analogy because you didn't like the other one.
Well, now I'm grossed out by the last. I got 3 dogs. That's all they do is.
Austin, let me ask you this question. Now there's multiple questions about one's views about the policy rate. Normally, I'd ask you, do you think we're going to do a couple cuts this year? And that is my question. But now there's 2 added questions, which is, what's the timing of those cuts? And why do we get to those cuts in your mind? Do we get there because the economy weakens or because inflation declines? Some combination of both? Can you answer all 3 parts of that question?
Okay, each of those is an important question. When there's uncertainty, you got to wait for the dust to just get out of the air. It's hard to see what we're doing because the dust has got to clear. But waiting isn't free, in that you gain information, but you lose the ability to move gradually. So I think the longer you wait, the cuts, when they come, are going to be backloaded. And so that's why I say 12 to 18 months from now, I think rates are lower. But in this period right now, we just have to wait. They're calling for big tariffs to come next month. A bunch of countries have said they're going to retaliate. We've got to kind of work through that. We got to think through the tax cut. Is there going to be a major tax cut, or is it going to be smaller than what some of the things that are called for? And as Chair Powell said yesterday, what matters is the totality, all of these things added together. Where the cuts would come from. Remember, before we got into this uncertainty, I thought rates would be coming down over this interim period or medium run period, because the unemployment and job market look like they're at stable full employment. Inflation coming down to target, I believed, on path to 2%, and therefore rates would be naturally going toward their stopping point. If you saw a slowdown in the economy, that'd be another reason to cut rates. But on the other side, if inflation started kicking up outside of just the tariffs part, and it started looking like in inflation expectations data, we were not on path back to 2%, then we would have to revise the story, because that'd be a pretty fundamentally different situation.
There's an idea out there, Austin, that you are not a passive player in whether or not tariff-induced inflation is transitory. That it's really the Fed who sets the preconditions to it, and the Fed is the one that decides whether or not that tariff inflation spreads to broader inflation. Do you agree with that? And are you doing enough now to make it clear to people that you will respond to higher inflation by raising rates?
I don't know that I agree with that. I mean, I think the fundamental thing about whether tariffs impact on inflation spreads out of just the 11% of GDP where the tariffs might apply to, that is fundamentally an economic question, not a Fed question. That's why I'm out talking to executives in the region, and the other people around the FOMC table are out talking to their contacts to figure out, if they apply to intermediate goods, how much of these cost increases are going to be passed through to consumers? How much do the executives think the consumers will bear, or will they push back and they'll have to eat it themselves? That's the fundamental, to me, question about tariff inflation. The commitment of the Fed to make sure that we are on path to get back to 2% is complete and total, rock solid. I believe that when you saw inflation, actual inflation, get almost to double digits, and the long run market expectations of inflation remained very solidly anchored at just about the announced Fed target, that was a sign of credibility. If you see those market expectations long run start rising, and they do not point to to inflation getting back to 2%, I don't see how the Fed would not have to act in that. I certainly think that those are critical indicators that we should be watching.
So Austin, it's a dual mandate. So at what point do if tariffs are an inflationary problem, but you also have the unemployment rate rising, at what point, which one wins out? And is there a level of unemployment where, the focus is on that and not inflation as much?
Yes, has to be. There's nothing more uncomfortable than the stagflationary environment you're describing, where it's both sides of the mandate start going wrong. There's not a generic answer to which you should look at. It partly depends how off the mandate, what's the magnitude, which is worse. Is it bigger on the inflation side? Is it bigger on the job market side? We still have to sort through this information about inflation. Is it coming from tariffs? Do we think it's permanent, or do we think that it's not going to be permanent? If the inflation expectations start going up so that fundamentally the market is saying they don't believe that we're going to get back to 2%, I do think that has an outsized impact, and you really gotta pay attention to that.
So you brought up the S word, stagflationary environment. What are the odds of that scenario in your view today versus say 2-3 months ago?
Definitely higher. I mean, look, tariffs raise prices and reduce output. So that's a stagflationary impulse, which is different from saying this is stagflation. Look, the unemployment rate is barely 4%, and inflation is in the 2s. So the hard data that we start from is not the stagflation of the 1970s. It's just as you raised, the uncomfortable environment is when it's moving directionally the wrong way on both sides simultaneously. Then it's just harder analysis. You got to take the through line and try to figure out how long are these going to last and what's the magnitude of each of them.
Austin, you talked about this issue of uncertainty, which it's one thing to say, okay, I don't know what the policy is going to be, but then you have the policy and you deal with it. At what point does uncertainty itself become a macroeconomic factor and you start seeing it? Would you expect to see it in the capital spending plans? Could it be something that hurts hiring if it goes on long enough?
In a way, that's a self-fulfilling prophecy scenario. I think where you would start to see it at the beginning, and it's why people's antennae are up, is you would see dropping confidence in sentiment measures, consumer, but also business. I think capital expenditure is one that is prone to being susceptible to uncertainty concerns as well, because they're long-lived stuff. If you're going to decide where or when to build a factory,
Austin, Melissa's shaking her head.
Wait a month or two to.
We're there now.
It goes back to my original question, Austin, and that is what is transitory, because we're starting to see that right now. So after how many months do we say that UMich survey wasn't an outlier? It is the trend.
Agree. Look, I'm not disputing it. I always say 1 month is no months, because 1 month is not enough. But you get 2 months, 3 months, 4 months. Now you got a real month, and you gotta pay attention. The question of sentiment measures, of course, is when do the sentiment measures influence actual behavior or indicate / forecast actual behavior? And that's as Chair Powell said at his press conference yesterday. That's been of mixed, the evidence has been mixed on that for the last couple of years. But I got to tell you, when I'm out talking to people here in the Midwest, they're expressing their uncertainties and that it's slowing down their activity. I do think there was also some pull forward of inventories and some of the things before the tariffs were announced that people say, hey, let's get as many spare parts as we can before the tariffs come in. So we also have to go through a little boom bust cycle on some of these components.
Right.
The longer answer to your question of what is transitory, I think, is 1 month is definitely transitory and many months is not transitory. So it's somewhere in there.
Austin, thank you for joining us this morning.
Is that a Waco expression, Austin? I started to like that. I'm gonna write that down. That there's a time for walking, and there's a time for sniffing. Because if you've ever walked a dog, it's definitely there. You know, it looks like they can.
Gunther, that's true. It's time for walking. Let's go.
That's right. At Earl, we walk, and they definitely. I mean, they have great noses. Obviously, the other one I don't know. The parachute.
You think they're better than your nose, Joe? Did you ever get on the ground and sniff and see what it smells like?
Supposedly, Austin, it's 1,000 times more accurate and sensitive than they can smell disease.
Wish we could say that for Fed forecast.
Let's get them sniffing on inflation.
So that's a Waco expression. Did you know he's from Waco?
I didn't know that.
Austin, thank you.
But I think he spent most
Local boy makes good.
Most time in Whittier, which is, you know who was born in Whittier?
No.
Despite the popularity of its show Severance, Apple TV Plus is lagging. The information reporting the service is losing more than I'm going to keep. I'm going to keep reading.
Another promo for
$1 billion a year. Rich Greenfield will join us with his thoughts on that report. Squawk Box will be right back. Hours after the season 2 finale aired, Apple announcing that it has renewed its hit show Severance. Meantime, a new report says Apple is losing more than $1 billion a year on its streaming service. The information reports that the tech giant has spent more than $5 billion a year on content since launching Apple TV Plus in 2019, but trimmed that by about $500 million last year. Joining us now, Rich Greenfield, Lightshed Partners co-founder and partner. Rich, great to have you with us. Do you believe that report and how much they're spending?
I mean, I actually would have assumed they're spending a lot more than $5 billion, just looking at the scale of what they're doing. And I don't know, does that include, MLS? I mean, they've done a tremendous amount of large scale, very high profile. I mean, I think in many ways, Apple TV Plus sort of has an HBO, sort of that historic HBO-like, very high-end quality to much of the programming. So I actually would have thought it's even higher than $5 billion, Melissa, to be honest.
Mm-hmm. Where does Apple fit in the streaming wars, so to speak, Rich? I mean, we know Netflix it's a Netflix world and everybody else lives in it. Where does Apple live in this world?
Look, I think Apple is using it. I'm not sure the right word is vanity, Melissa, but I think it sort of fits into, it is a way to sort of highlight the brand. If you think back originally, music was the reason you bought an iPod, right? You and your friends, Melissa, you wanted to listen to music. The device of choice was an iPod, and music therefore became sort of a great way to sort of elevate the Apple brand. In a world of Spotify and sort of the power that, is sort of dissipated from Apple Music, and there's no exclusivity, I think they've turned to video, much like Amazon, if you look at Prime Video. And I think they've sort of looked at this as sort of a way to elevate the brand. I think this is less about quote unquote making money, this is something to talk about, despite, my partner, Walt Peisig, has really talked about the challenges with Apple Intelligence, the super cycle that's never materialized. Here is something exciting, like, Eddie Q was at South by Southwest talking with Ben Stiller, talking about Severance. Like, there's a lot of excitement around some of their programming that is sort of, something to talk about while there hasn't been the excitement on the device side. And so I think that's an interesting, but if you think about the larger streaming wars, to answer your question directly, they're irrelevant.
Okay. So in a world where there is an economic slowdown and it's no longer just a growth scare, Rich, which streamer gets hit hard the worst? Now, I'm just thinking, because, for instance, Disney may have a great streaming platform with a lot of content, but it is pressured by lower attendance at the parks, let's say, and for the other parts of its business. So how does that play out?
Look, the most important thing, every one of your viewers, everyone who's thinking about buying and investing in any of these stocks, they should be focused on one thing, which is time spent. Because when you are engaged with a service, when you're obsessed with a service, when there's always something to watch and to be talking about, if you haven't seen Adolescence, I highly, you really should go see Adolescence on Netflix. It's a hard watch, but again, there's always something new to watch. I think the real threat or the challenge to all of these other streamers is in a weaker economy. They've all dramatically raised their price and cut programming spend to get to profitability. They've been living in a Wall Street driven world. They are not thinking long term. They are literally trying to appease investors by minimizing the losses on their streaming services and showing some level of profitability. But that's come at a cost of engagement. And I think as you move into weaker economy, recession, whatever words you and your team want to use, the question is going to be not do you get rid of these things and never keep them, but do you rotate? It's very easy to sign up for a Paramount Plus or for a Peacock for a weekend or a month. Do you need to be a full year subscriber to something that you don't use very much? And that's going to be the real question and the real risk for all of these companies, not named Netflix.
Rich, always good to see you. Thank you.
Thanks, Melissa.
Up next, a check in the markets future.
Checking on the markets. Whoa. I don't know whether that was on Goldman.
I mean, I think that the answer on transitory being
That's
months
amazing.
and months and months and months is not exactly what the markets want.
Well, nice.
Also, to mention the stagflation word.
Is stagflation. I don't know what else to talk to, but we are at the lowest levels of the session now, down 210 on the NASDAQ, 300 plus. No movement really in the 10-year. Thanks for being here.
Pleasure.
It won't be long. You'll be back. You'll be back. But I'll be back with Becky on Monday. Squawk on the Street's up right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Sarah Eisen at Post 9 at the New York Stock Exchange. Jim Cramer is live from Las Vegas again this hour. Carl and David have the morning off. Taking a look at futures, as the gang just showed you, we are at lows of the session pre-market. Dow set to open lower by more than 300 points. NASDAQ down 218. So tech again at the center of the storm. The S&P futures down 52 points. It looked like we were going to get a gain for the week for the S&P, breaking 4 weeks of losing, but we're only up 4/10 heading into today, so that could be in jeopardy. Our roadmap begins with the consumer slowdown watch. FedEx cutting guidance and Nike forecasting another sales decline. Shares of both sharply lower ahead of the open. Plus, with Tesla shares now more than 50% off recent highs, CEO Elon Musk delivering a late-night message to employees, quote, hang on to your stock. And travel chaos, more than 1,300 flights canceled as a power outage shutters London's Heathrow Airport. We'll get to all of that. Let's get to FedEx and Nike, though. Top of mind, those stocks under pressure following their latest earnings results, both warning of a weaker economy and consumer. Here's FedEx CEO Raj Subramanian on the call last night.
As we look to the fourth quarter, in light of the uncertain demand environment and higher than previously expected inflationary pressures on our cost base, we are lowering our FY25 adjusted EPS outlook to $18 to $18.60.
Jim, I know you like this one. This had to be disappointing. Third consecutive guidance cut.
Yeah, look, I would waffle between disappointing and how exciting it is to be able to cut the expenses the way they're doing. The leverage here would be humongous, Sarah, if they would be able to get a couple of good quarters. But look, I understand. I mean, our viewers at home right now are looking and just saying, okay, what the hell happened? Why is it once again even worse? And you could argue that the two stocks you have on the screen, both Nike and FedEx, were very disappointing. I would come back and say, are you kidding? Is this really shocking? Yes, Sarah, you know that Nike it was tough to listen to because of the inventories. Yeah. Raj Subramanian, a little bit tough to listen to because you are guiding down. But end of the world, I don't know, the end of the world thesis is playing out much more aggressively than the actual situation with the economy, I think.
Although it was interesting that Raj mentioned higher inflationary pressures and an uncertain demand environment, which is, it sort of points at the ugly combo that investors are worried about right now, stagflation, which was just mentioned in the Austin Goolsbee interview. And I wonder how serious of a concern that is for you.
Well, look, when you go over how many times you mentioned inflation, when you go over how many times you mentioned economic weakness, you could easily craft a story which just says this is the worst possible economy. I come back and say, look, we've created a level of negativity in this country that is extraordinary. I don't think anyone's really hiding that. Yesterday I had Ted Decker from Home Depot. Now, the Home Depot, people could say has a lot of tariff problems. Home Depot, people could say a lot of higher interest problems. But he's just not saying that at all. And I think he's accentuating the positive. I thought that Raj, if you go over the call was damn positive. Okay, and I spoke with Raj at length yesterday, and we both were remarking about how much money they made despite the revenues. That's the way you think of this. I mean, people are saying it's a risky stock. It was risky 100 points ago. Was Home Depot risky at 350? It was risky at 425. Somebody has to start thinking about, you know what? These stocks have come down in advance about our negativity and what we talk about. And yes, there could be another 10% decline. But can you just stay opposite this forever because 15% of the economy is going to have higher tariff? I can play the game and you can play the game. We can sit here and talk about how Nike missed the quarter badly, or we can say, do I want to pay $65 for a core franchise that is in half because we had a seriously bad CEO and now we have a good CEO and he will be able to triumph. I'll play the negative game if people want, but it won't make you money. Not from here.
No, I think it's a really interesting point because I listened to your Home Depot interview, the whole thing yesterday, Jim, and the tone was not at all reflective of this market, of what's happened with Home Depot stock, and even on tariffs where they do get hit, to your point. I mean, Ted Decker didn't sound that worried. We have that sound. Let's listen.
We had tariffs in 2017. We had, I mean, when did we have, you know, customs houses in all our ports? We've had tariffs forever. We will manage through it and come out the other side better than anyone. So it's not something we worry about.
I also played down the rise in mortgage rates and said actually what's more important is appreciation of homes. And there's been trillions of that since 2019, which is actually good. As people stay in their homes, they get older, they have more equity in their homes, and they're going to have to fix it.
Yes, look, there are two streams of income that Home Depot has. One is renovation remodeling, and that's playing out because we don't have a lot of housing turnover. We can talk about Lenore in a few minutes. And the other revenue stream is basically what I regard as taking advantage of the fact that your home has increased 50% in value since 2018. Now that the negative says, oh my, homes are therefore too expensive. A positive person would say that means that you think mentally that you're not expensing what you're putting in your house. It's capital improvement, making your home worth even more. So it was a very positive story. Now you can say, well, listen, Home Depot is an inherently positive company. I say, what the hell does that have to do with it? It's the #1 home improvement company in the world. I'm going to listen to him. I'm going to take him at his word. But now remember, Home Depot in 2007 to 2009, a lot of people thought it was going to go under. They bought an amazing amount of stock during that period. It was at $18. Look at the stock is now at $354. Good or bad? Stock has increased 26% since 1982. Good or bad? But it's so easy to get caught up right now. A lot of it is because there is, I think, a definitive hatred of President Trump that is not talked about at all because maybe people are afraid. I'm not afraid of him, and I don't feel the hate. I don't feel that this is that bad. Why? Because our partners have been taking advantage of us for years and years. He's trying to straighten that out. But while we see 12 to 15% of the economy being taxed, Sarah, we see a level of gloom that is just not equal to what business people are telling me. It's unfortunate that Nike reported at the same time that FedEx reported. Micron was up 8 points last night. People listened to the call. I told Sanjay Mehrotra that it was a terrific call. Why? Because high bandwidth memory, which is data center, was good. People have turned and just said, you know what? Something happened between 5:30 last night and now that's negative. All I did was go to sleep.
Well, actually, a similar pattern for Nike. Actually, shares were higher after Nike reported because it was less worse than feared, and there were actually some signs of progress under new CEO Elliott Hill. The sales only down 9%. They were expected to be down 11%. Yes, China was worse than expected, but North America was only down 4%, and that was better. They saw some good launches like the Peg Premium, the new running shoe. They saw some progress with the wholesale relationships. But then on the call, I guess the talk of the macro was a reminder to folks that Nike does have a long way to go. If you are going to bet on Elliott Hill and bet on this stock recovery, I mean, here's my take, Jim. It's going to be multiple quarters, if not years, because he's got quite a turnaround job. Everything from culture to the sales function to the innovation platform. I mean, Nike down another 8.3%. I guess people are just not willing to bet on it yet because there's no visibility into when that turns around, if it does?
Well, look, look, let's just cut to the chase. What really killed us, when I say us, because I think Nike's a great American name, is when you hear a company just basically saying, look, the macroeconomic is bad. I want to read the words because I don't want to get this wrong. We expect revenues, this was devastating. This is from Matthew Friend, and you know straight shooter, right? I mean, you've known him for years, straight shooter. We expect Q4 revenues to be down in the mid-teens range. Why? Okay, unfavorable shipment timing in North America, 2 points of negative impact from foreign exchange, and of course 400 to 500 basis points down, including restructuring charges for gross margins. Look, you're not going to want to own that stock if you hear that, but do you want to sell it, Sarah, at 65? That's the question.
It's already been more than cut in half since the 2021 highs. I mean, it's had quite a tumble. Hang on, Jim, because we are monitoring some new Fed speak. This morning, just getting from New York Fed President John Williams. Steve Leisman has the headlines. Steve, good morning.
Good morning, Sarah. New York Fed President John Williams saying that currently the modestly restrictive policy, monetary policy of the Federal Reserve is appropriate. The policy stance positions us well to adjust to changes as they come in. And uncertainty, especially in trade policy, is making it more difficult to plan investments and hire. I think we're hearing that from companies as well. He says there's clear signs of a short-term increase in inflation expectations, but he's not seeing it long-term. No signs it is becoming unmoored. He thinks GDP will be lower this year. He sees a slowdown in labor force growth because of immigration policies. So the uncertainty is high. Many scenarios can play out. Sarah, I hear John Williams sort of siding on the more concern about growth than he has about inflation. And what I heard Austin Goolsbee say this morning was that it's going to take a little bit longer to figure it out. And I think that's maybe the reason the market didn't like what it heard. Because figuring out what's transitory, what's not transitory, is there a broader increase? It wasn't upside to it. We did point out, hey, only 11% of the U.S. economy is import. So there's a chance that it remains isolated, just that section of the economy. Sarah?
Yeah, I think Goolsbee has been one of the most dovish, and to not hear him sound super dovish maybe was a disappointment to Wall Street. Steve, thank you very much. Jim, Federal Reserve, what do you want to see cuts? I'm not sure there was anything definitive that came out of the Fed speak, that came out of the Fed meeting. There's some disagreement whether they were hawkish or they were dovish. Market expects 2 cuts this year. Fed expects 2 cuts this year. They have no idea how the tariffs are going to impact inflation and growth.
Look, there's a sub-rosa theme here. You fired 2 Democrats in the FTC.
Yes,
no one knows what to do. If he can fire 2 from the FTC, he can fire Powell. Now, it doesn't matter whether it's legal or not. I mean, I thought Peggy Noonan had a great piece today talking about President Jackson. Now we're really going back. It's even before McKinley, which is somehow the North Star for this administration. And I think people are just worried that Powell will be fired because he's not cutting rates. And I think that all that we just heard is irrelevant. What matters is as long as there's a belief that despite Fed Chief Powell saying twice that he's not going anywhere, as long as there's a belief that President Trump may actually have this interregnum where he can fire anyone, well, I think no one's safe. And I think, again, that's what's at stake. I mean, if you want to know what's at stake with the Federal Reserve in terms of what they're saying, sure, you could say they've got some stagflation. I think the most important thing that Steve said was, in the end, he thinks there's 11% of the economy that's imported. I'm getting 12 to 15. But I think that Powell's in play, and he shouldn't be. But what is it? The Justice Department, some people say on the left, is owned by the president. So, I mean, and how many divisions does the Supreme Court have?
I feel like Trump and Bessent have come out and said Powell's safe, and that you know they're not going to they're going to target Bessent specifically market rates, not Federal Reserve rates. Powell's doing okay. Just because the president made clear he wants to see rates lower, I don't know. I think it's a leap to say that he's coming after Powell's job. The FTC was much more political than the Federal Reserve.
I agree with you, although he did pick a more moderate FTC chairman. I'm not saying that he will do this. I'm saying that since the FTC, yeah. And look, if he took it off the table, you'd see the future's positive right now. I just think that nothing we're hearing from the Fed is at all unusual. No one's saying that, listen, once the tariffs go on, it's going to be permanent inflation. By the way, there is some growth to the economy. I understand that the new theory is no growth. I understand the new theory is fear. I want to take the other side of fear. I want to take value. Now, I know that I came back from a conference that involved about 20% of the S&P, which is Jensen Huang's the NVIDIA conference, and everything was positive. And if we just want to focus, listen, Sarah, if we only want to focus on how Nike Jordans are doing, then we are doing a disservice to people. We know that they've got that wrong locker. We know that Donohue almost wrecked this company, which is really kind of a land speed record. I know you follow Formula One. I don't know. I would put Donohue in the fastest ever to crash a car. But I like very much what I hear from
this season.
You know, from Darden. I mean, why didn't Darden get mentioned? Why isn't Olive Garden mentioned?
Darden's at 52-week high. Strong consumer. You're right.
Well, no kidding. I mean, that's the consumer. But you know what? Again, I'm saying we can focus on the negative. I can have more fun doing the negative than anyone because I read 4 conference calls that were negative. I read 10 that were positive, but I want to accentuate the positive because it actually has the empirical quality of being right. But right now, when you look at the futures, do you always have to say, those damn futures are right? The Dow should be down 386 on implied open. Or should we say, is that wrong? Which makes you more money? Is that wrong? And I'm willing to say that it might be wrong. I'm willing to take that. When I listen to Mike Ron, I talk to Sanjay Mehrotra, and I think the quarter's good because I see all they're going toward, as fast as they can, the data center. Do you really want to say that NAND, their junk, is going to keep them down? Sarah, you and I know better.
Yeah, no, there's
like
plenty
the
of good
glass
stories
half full.
out
And
there.
it's not filled with hemlock.
And the uncertainty is dominating. Jim, also want to hit this story out of London right now because Heathrow Airport is still closed for the day following a fire at a nearby substation that disrupted global travel plans this weekend. It's having a pretty big impact. CNBC's Karen Gilchrist is live for us from the airport with the latest. Karen, what can you tell us?
Good morning, Sarah. Yes, all quiet on the runway behind me, really belying the havoc that has unfolded overnight here at Heathrow Airport, Europe's busiest, after a fire at a nearby electrical substation caused a power outage. Now, the airport and airlines are urging passengers to stay away for the rest of the day until at least midnight as they try to resolve this issue. But this, of course, causing chaos for the tens of thousands of passengers due to fly in and out of this airport today. Around 1,300 flights expected to be affected, around 100 of those in the air at the time of the announcement, and having been diverted to other airports across the capital, across the country, and more broadly across Europe, the likes of Frankfurt and Paris, as well as some airlines, including United, returning passengers to their origin. Now, it's not clear yet the source of this fire, although foul play has been ruled out, but it has affected power supply not only to this airport, but to tens of thousands of homes in the West London area, and the fire is still remaining live with power out to around 5,000 homes. Now, the investigation is being conducted by the counter-terrorism unit, despite their ruling out foul play, and this is because of the location of the plant, but also its critical role in the country's infrastructure. Prime Minister Keir Starmer saying that it's too early yet, though, to draw any conclusions, but really it's for passengers and airlines to deal with the fallout now and try to make other arrangements and see what kind of support that they'll be getting from their airlines. Back to you, Sarah.
Oh, what a mess. All right, Karen, thank you. Watching some of those airline stocks get hit on it as well. Karen Gilchrist in London. Still to come on Squawk on the Street, another firm cuts its price target
retail
on Tesla.
traders.
Shares now on pace for a 9th straight weekly loss. And another look at futures for you. Under pressure. Looked like it was going to be a positive week. Not if we keep these levels. Dow futures down 380. NASDAQ futures down 235. A lot more to get to.
Under pressure.
Squawk on the Street when we come right back.
Are you trying to scare my retail traders? It's 12 more minutes. I can do some jumping jacks. So far, I've had one red trade out of 50. I counted them up the other day, yesterday. 2 months. That's how many trades I've made. Oh. Actually had 2, but I don't want to count the other one. Oh man, nice to get out of them shoes. Okay, what do I need? Let's have a little bit of coffee this morning. Hot chocolate, I'll just drink it. I switched over to non-sugar. I noticed there was some little Reese's cups that had no sugar in them. So I don't know if that's going to be a new thing or not. This hot chocolate I got has no sugar. I think it's a good thing. So I got to try to find these Reese's cups that has no sugar in them. Well, I've got 555.61 as the support to hold today on the SPY, and resistance to break is 569.84. Pivot point's right there in the middle, 163.52. Could lower it just a notch. I might do that. I think I will. Get rid of that.
Asset.com.
Right about
Tesla
in there.
shares on pace now for 9 straight
562.91.
down weeks and down
Shut
50% from its 52-week high. Yesterday, at a company
She was talking
being
logical this
broadcast
morning.
on X, CEO Elon Musk looked to reassure his employees. Listen.
There are times when there are rocky moments, like things are it's like a little bit of stormy weather. But what I'm here to tell you is that the future is incredibly bright and exciting.
Very good.
What I'm saying is hang on to your stock.
Jim, as a Tesla shareholder, do you have to feel good at least that he did an employee all-hands meeting? He hasn't been doing much of that lately with the president of Washington.
Yeah, it was quaint. Look, I think he's trying to take the focus off the fact that it's a car company. Well, look, he's kind of reminds me of Henry Ford, not necessarily in the some of the political things that Henry Ford was involved in, but Henry Ford's always said though, when things got tough, never complain and never explain. And this man.
That's the same kind of attitude I have. I take it day by day when I'm trading stocks. And every day is a bright and shiny day, in my opinion, because I don't swing that much, not when there's a lot of uncertainty. And come April 2nd, we're going to get a little bit of certainty, but I don't know how the market's going to react. So that's kind of where I am right now. I'm going to just keep trading the way I do. Do about 5 or 6 trades a day. I've noticed, we have a little bit of more volume and volatility first thing in the morning, a little uncertainty, and then it kind of pans out. Then we have a little bitty run, and then we have a pullback. So we need to sell the rips and buy the dips. At least I am. Jimmy doesn't want to take too much risk. Not until April 2nd. And then I might start swinging, but I think the third quarter is going to be better than the first. It's about over with now. I got to pay my quarterly taxes coming up next month, so I'm not too excited about that, but what the heck. I think I went like 20 years without getting any kind of tax return at all. I paid taxes I still pay them, but now that I'm an LLC, I'm eligible for refunds. From the state. So I'm glad I did that. Pay myself as an employee instead of just a... Oh, here, Fed Gooseby. I never did like him. Says tariff raises prices and reduce output, which is a stagnatory impulse. And you know what this Gooseby is? He's full of shit. We had stagflation for 8 years under Obama. And all they did was spend, spend, spend. I think they're just talking this garbage so they want to bring this market down, in my opinion. But it's weird how their philosophies change throughout the years. It's never the same. That's what makes this so exciting for me, and I get so much good adrenaline out of doing it. I can't play sports anymore. I can't play baseball. Can't. So I have a softball. I had a softball team for 5 years that I sponsored. So I can't play softball no more. Last time I played a triple hitter. Oh my God. I swore I'd never play again. I mean, I was so sore for a week. And it's been like 5 years since I played a triple hitter. If you know what that is, that means you play 3 games in a tournament. In one day. I noticed one thing. All the employees that came back to work for the IRS all fattened up. All but the guys. All the women fattened up. I did that on the 30 minute this morning. That's interesting. I charted that SPY on the 30 minute. Let's look at the hour and see what it says. Yeah, the hour. Yeah, I accept the hour too. But I did it on 30 minute. Huh. I've never done that. Oh, Clay Trader trades on charts on the 30 minute. When I first started trading, I used to watch his videos, and that kind of my trading kind of resembles his. We had a big old fat finger. Someone called that a phantom candlestick. I guess that's what they call it. I called it a fat finger yesterday, or the other day. Then we had another one yesterday. Or was it yesterday? No, it wasn't yesterday. It was the day before. Yeah, it was yesterday, right here. Looks like it wants to rebound already. We got 1 minute left, and they're bringing it up a little bit. So we'll see. Oh, here we go. Shit. Man, that's Sarah. She's a good-looking chick. She got a funny nose, but man, I'd like to give her a big old smooch. Can't touch yes. Okay, we got 3 white soldiers right at open. Now I better have my platforms up. Doing retail traders. Watch Nike too. Okay, we're coming up to resistance. We'll see if we pull back right here. $560. That's going to be our new resistance level to break. So the first trade I do every day is called the beach trade. Today's the 21st. On SPY, there's some pretty good volume coming out this morning already. The 562s or the 63s again. Just thinking, get ready. I'm going to see if we can pull back to support. Now we have an inverse head and shoulders right here. And we got a gap. So the 563s, I think, are the ones I'm going to spot ready to open. Today's lotto. I'm going to have to do something about that room. I went into a new room the other day. I was invited to another room. 110 to 120 to 130 right there. That's 20-cent candle, 25-cent candle right there. So this is a head and shoulders with a kind of a hammer. There's 30 cents. Now we double top, so perfect. I mean, 3 white soldiers, pull back, double top. Then you get out of the trade for scalping. That was just like 1 minute, 1.10 seconds. Let's see if we break here. I sold them. I'm out of them right now. That was $250 in a matter of a minute and a half. How many times have I showed you that trade with 3 white soldiers? We'll talk about it more here in a second. We're back to 110. Here, let's see. Might get back in it. I'd still like to see it come back down here. But this is the shoulder right here. So the way I look at this is I'd jump in right now at 102. Or it comes down here and I add right there. Okay, get ready. Watch the tape and pull up to level 2. Funny. The bid is higher than the ask. So they're buying at the bid. $102 to $118, $119. I'm done for the day. I'll see you all later. Beach trades are out of the way. Then I'm going to go get my coffee and I'll be right back. That's a bull flag. I think Yoko put a bull flag in here this morning on some chart. Bull flag with 3 white soldiers. So when I see 3 white soldiers, it's telling me two things. That we could have a pretty green day, or we could have a nice day, and it tells me that I need to look for a pullback and maybe a breakout of a triple top. So this created what you call bull flag right here. We could come down one more time, and then try to break that resistance level. But I always get out first thing in the morning when I see 3 white soldiers, and that's 3 consecutive candles, green candles. And I didn't take it until we dipped down to that second candle. And that was an inverse head and shoulders. See, that's why I jumped in this second trade, because that's called an inverse head and shoulders. Now this is the 3rd time down, so this is going to tell us if we're going to break out past resistance. When we pull back just a little bit below that shoulder line, I might jump back in this trade again. This is a big deal. This is either we break out now, $104. I'm in. We're going to find out. They're at $1. I'm in at 104. There's 116. So you either get out now or you see if we break. I want it to break. There we go. See, we broke it just now. Now we got a triple top up here. That's kind of a triple top right there with the bodies. I can get out. I'm going to get out. 123. Off to the beach, and I left just 5 on the table. And I'll add if we break out more. Now we're squeezing. We're above the bull flag. If we break the triple top here, this is either exit if you're in this, or you take the risk to see if we break this here megaphone. Hey, this is Brandon. I'm still around. I think we're going to break Jimmy. Make sure you set your stop loss under the 9, just in case. If it breaks below the 9 EMA, you want to get out. Uh-oh. Here we go. What'd I tell you? 1, 2, 3, right? What's the next resistance? The 200 EMA. And I used to not, well, I was told a long time ago to scale out, and I just got in the habit of selling them all at one time, but Yoko kind of threw me back in that path again. I need to go get my coffee. I'm afraid to leave this trade right now because I don't have my stop set, but I want to see if we can keep it above the 63. Or keep it above this trend line, this megaphone, and continue on up here. And when I'm watching the tape, there a little bit ago, they're the same right there, the bid and the ask. Now the bid is higher than the ask, so they're still bullish. 95, 94. Come back to the 63. Now, if we got a hold here, I'm going to dump it. I'm up almost 500, but more than 500 right now. I've not been here for what? 3, 6, 9, 12. Well, no, 3, 6, 9, 12, 15 minutes. $600 in 15 minutes. Okay, get ready to sell these suckers if this thing doesn't hold up. Watch that tape, see if they're overwhelming. $61, look at that, $559.61. You can tell on that bid there. That was 10 cents above the ask. Somebody wanted in it. I should have sold him 5, but what the heck. To me, we haven't failed yet because I don't have a body under the 9 and I'm above the bull flag. So if you get a little nervous, you sell it now. But I think we're going to get up here to the 200. Sarah, I love you. Sorry, I fight with you all the time. Okay, well, it's depreciating. And where's the gamma at? I was going to be watching the gamma this week. That was my... Gotta pull this one out. Still bullish. And Nancy, get off your ass and make me some coffee. Oh, I forgot. If that girl's in here, I can't be cussing in front of her children. Anybody else have children in here? Polish Muffin, you got children? If anybody has any kids, let me know and I'll watch what I say. I'll make it PG. Punk, you got any kids hanging around? Richard Nixon does? Okay. I'll become a better man and I'll read Bible verses today. I gotta watch that, you know, you never know. Dad, what did he say? Be good to your children. Don't make it PG. Well, I can't make it XXX. Yoko, you got any kids hanging around? I still think we're going to break. But I'm not for sure. We're getting ready to find out. Right about now. We got higher lows on the last 6 candles. I'll go make me a cup of coffee. You want a kid with Jenny? You think you can handle listening to her all day? Probably not. I don't think I could. Break it. Okay, we're going to find out. Randy, did it make you feel better about my trading here this morning? Where is Randy? Randy feeling good now? $120. I ain't gonna be waiting much longer here. We need to break. Oh God. The bid is higher than the ask. Big time. We're getting ready to. I thought we were. Well, that depreciated real fast. Huh. Yeah, I think I might sell this. It was at 120 and all of a sudden it went down to 102. Yeah, I heard you all talking about CrowdStrike yesterday. So we got a megaphone here at Open. 2 of them now. I'm still in it, Yoko. I saved 5. Are we going to break out, Yoko? Come on. Don't be shy. Bug mentioned Tesla. 560, 50 resistance. Yep. 44. Make it 44. So I'm going to see where this support comes to on CrowdStrike on the 1 hour time frame. So on the 1 hour, it came to almost to the 200. I'm about ready to get out of this thing. Hold on to it. Just wait. Give it a time. What's the SPX? Maybe I want to jump into it. And where's AMD at? I haven't looked at AMD in a couple days. AMD went, wasn't it under 100? 96, if I remember right. Yeah, shit. Good morning, Trench, TRNCH on YouTube, Mannequin. Tesla popping. We got somebody in here trading it. Nike kind of got a little oversold. I see an ascending triangle here. I think we're getting ready to break out on the SPX. '21st. Oh God. 5670s. Ooh, or 17,000 at 5,700. $56.75s are at 520. Okay. Prepare ye in the name 420. We gotta do something about that bleeping. June, where are you now? Need to hold this support level right here or I get out of it. Or I could wait for the double bottom. But we got a little bitty head right here. Left shoulder, right shoulder, and right. Come on now. Don't be messing with Bobo. You're about ready to add one. I got 420 in it right now. I'll give it a shot. 350. And I got two of them. Dum, 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 dum. Ooh. Dadgummit. I'm gonna walk in the kitchen for a second, get my stew, and stick this in them. Turn on some hot water. Jim, that was unprofessional. No snorting over the microphone, please. We got to get above the 9. Okay. Not looking good. We're at the double bottom right now. See how much that would be if I get 2. $267. Yep. No, it ain't right. Give me 312. Nope. Hold on to him just a little bit longer. Not working out. Wall Street to open lower Friday. Oh, today's Friday. $2.30. We got an average of 307. Break it. We're at resistance to break. We're squeezing. Yeah, these thinkers. We got 0 gamma. I don't know if that's right. fix that. Privacy settings, notification settings. Nothing, only mentions. Spies at the VWAP. Top the megaphones at the 200 at 560, 89. Tesla pulled back to the 200 right here. Go get my coffee. IWM's at 201.79. I have that as a support, but I don't know. I'm still in the SPX here. Don't look like much is going to happen so far. Go, baby. Break it. Well, well. I can't believe we're at 320. Like to see it hit that 200. We're at the 63 right now. Well, I might just get out of it. Should I sell it? Should I sell it? Are we going to break? Come on, Yoko. You're the pro. This is the fourth time now. $320. That made a whopping $60. We'll go to the kitchen real fast. Blanket. Back to 320 here. You can blake it. I'll let you do it. You either get out even. I'm not clowning around with this piece of crap. MU's down some more. It had earnings, didn't it? Yep. And what else had earnings? FedEx. Ooh, God, look at FedEx. I didn't expect that. It had to have been the forecast. Something about steel wasn't doing too hot. And what else? Tesla. I know somebody just bought a Tesla too, and it's a woman. Yesterday I sold that stock and I could have made $1,000 on it when I was just a little bit above even. What's this? Coin? Mike, Rob's got something to share with you. When you're not busy. SMCI's having a halfway decent day. Cisco's got a triple bottom. It looks to me like we're going to have a straight across day here again today. FedEx. Tall. Tall was it China? Yeah, it's China. Oh, PLTR with that, losing that account. Target. Target has a new low. Microsoft, about Boeing. Darn, I missed that good trade. Verizon. Baba. Baba didn't hold support. Could probably see 131.50. Another $3 dip. What BAC? Bank of America. Let's see what today's winners are. Listed. Laser. You got FedEx with a tweezer bottom. Well, looks to me like I'm going to be eating lunch here shortly. Tesla bounced off the 200 that I mentioned earlier. $2.50, 40 cents. I got FedEx to break 223.64. Bank of America adjusts price target on FedEx to 272. It'd be a long if I traded it.
$2 for the dollar.
That's the hope, but all this execution is always much more difficult because when we put tariffs, other people put tariffs on us, then it becomes a question of when.
We got the most buyers, right? I mean, unless Nvidia crashes.
Nvidia.
Further to that point, the last pointer, what role does the stock market play in this calculus? Is there a threshold?
Nvidia pulled back.
Because it seems like we can do whatever we want, basically, as America. We've learned this through COVID. We can do whatever we want, essentially, as long as our innovation and our capital markets are leading the front and our economic situation is on top. So, what's the threshold for markets before the administration goes, okay, we have to listen to what the stock market's
I'm
telling
going to be right back. I'm going to put my soup
They
on.
have been purposefully walking back. If you look at Secretary of Defense interviews, they are saying that they are not focused on the stock market. They are very focused on American exceptionalism, but they have said they are not focused. I'm sure there is a level at which they might be more focused on the stock market. But again, if you look at their voter base, they might care more about jobs coming back to Michigan and being able to bring the industrial Midwest and places like Pennsylvania and energy production than necessarily stock market for the time being. But at some level, the stock market could become important. The other factor, I think, is that equity markets coming to the year were overvalued.
True.
And now we are actually going through a period of maybe well-needed moderation.
Ellie, thanks a lot for your thoughts. Interesting chat. Good perspective and a nice walkthrough here of the complexities of the situation. Appreciate that. Ollie Miller, founder, chief investment officer, managing partner of Monticello Capital Partners. Let's look at some charts. Coming back, KG getting technical for us today. Mr. Ducat on holiday.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by
You know
Ameritrade,
what's going on?
giving
Listen.
you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Nothing.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly.
Zoom at 75.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love
Walmart.
Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Toll Brothers down $2.
How I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and
No can do. Oh yeah, I'm gonna cook something else too. Cook some broccoli along with my soup. Such a pretty world today. Well, we bounced off that support level I mentioned on the IWM. The QQQs hit the 200. Just kind of bundling up right now. There ain't really no big, huge deal going on. Heard Elon once say, look at the weekly time frame and be trade off of it, when we were having trouble before. And right now we're bouncing off the 200 EMA on the weekly. CrowdStrike was being mentioned in here. It bounced off the 200 or the 60, the 63, and the 200 today on the 1 hour. I'm just taking my time today. Not in no hurry. Let's see what else I got on here for a scan. Oh, what about the hammers? Where is that? I like trading off that hammer one. And the Golden Cross. I'll look at it too. Ooh. Where's the hammer? Oracle. What about hymns? Hymns, H-I-M-S. They're all pumped up about hymns. I forgot about hers. Raises price target to $22. Oh. Well, well. Punk, are you having a good day? He's green. It is exciting to watch the paint dry, that's for sure. That's why I'm going to make lunch. So the spy broke the VWAP. Kind of has a little ascending triangle with a head and shoulders on it. Let me break out. What's another one I like to look at? I'm just using the top of my head right now. What's another good one? We got Apple, NVIDIA, AMD, which I missed. I should have bought that dip on AMD. That was a bad mistake. I called AMD out at the bottom and didn't take it. I think that would be a good swing. I'm smelling that soup. I'll be right back. I'm cooking lunch. I'll turn this thing on and see if Jenny showed up today. Oh, there's Mr. Green. Microsoft. I looked at that earlier.
Left-hand side there, back in October of 2022, hit that 200-day or 200-week moving average, bounced higher, hit that 20-period moving average as an area of resistance, came back, touched the 200-week moving average as an area of support, then bounced higher. If that's going to be the same case, maybe some further downside for Microsoft could be in the cards. RSI is getting close to the oversold level though. MACD did actually have that 12 EMA below the 26 EMA, also closing below that 0-1. That is bearish. So this chart doesn't look too hot. Could you take an intraday shot? That could be the case here, but it looks like the trajectory, however, that it wants to kind of at least drop back down to around that $360 level.
Do think the 3-year chart is definitely the way to go in the long term because you get that whole period of consolidation essentially at $425 for a better part of last year, which is really important context to the recent weakness because the price had been discovered pretty in a state of equilibrium for a long time and then decided that it was too high. So, all right, Jane, last one, Tesla, my favorite.
Tesla was just dethroned by SpaceX as now Musk's most valuable asset for the first time since 2019, which I think is kind of interesting. I mean, the demise of this was yeah, I think like the wealth that follows the Tesla and Musk's ownership is fascinating, frankly. He did try to
Jenny, I don't want you talking about Tesla.
referred to as a little bit of stormy weather.
Shut up.
Have plunged more than 50% over the last 3 months. On this broadcast late Thursday night on X that went till about 10 p.m. local time in Austin, so lengthy now. He did say that right now, what he's saying is hang on to your stock, and highlighted that right now, if he understands that you don't want to buy our product, but you don't have to be burning it down, saying it feels like you turn on the news Armageddon, which I will say that I think that there's a TD Cowen note earlier this week saying this was massively overhyped. You look at the trade-ins for the month of March, and yes, it's a substantial uptick in Tesla trade-ins, but models that are made from like 2019 through present day, it's not.
I think it should be a felony if you vandalize. They're talking with a terrorist. They're talking 20 years. And they got 3 of them already. So we'll see if that works out. Spy came back and retested the VWAP. FedEx. FedEx broke resistance. Let me see if I can get a trade on that. La 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 la. "21st, that's today. I don't want to do that. Next week. Price targets are all around the board. Wells Fargo has 260. Stevens and Company, overweight, 300. Maintains market perform by BMO for 275. Bank of America says 272. Lowered, keeps a buy rating on FedEx. We've had a bunch of flat days. I'm wondering if we're going to have a breakout day. I need you to break out. All the way up to 56.37 would be nice. I'll be right back.
Says and I think it's actually a really good point.
George.
When it comes down to some of the reports, particularly if you look at Micron, the market seems to be focusing on the negatives, and the negatives for that company were really some declining revenues in their storage markets versus the high bandwidth memory
/DX.
market. So, for what it's worth, I think because we're facing monthly options expirations, there may be some apprehension for institutional investors who are long puts as a hedge for portfolios to maybe roll those puts into the next month. So therefore, there's a potential we do climb back out of this lull from the earlier session as we move into the end of the day, because market makers essentially will need to be buying back those options, and of course long equities to hedge their positions or hedge their books.
Okay. Well, that's a big part of today, and that's a good reminder that triple witching, things can whip around pretty quick.
True.
Flying around on our brooms. We can move quick. Triple witching, anything can happen.
Absolutely.
So hope stays alive, I think. And maybe there was just position to clean stuff out this morning ahead of all the Expo day. So, who knows? I'm just trying to stay hopeful, Diane. It's Friday.
I know, I get it. Even KG was, trying to put some hope, I feel like, in some of his comments. So just, you got to pay attention to
I didn't sell and I'm up
there
now.
are ways to find opportunities.
Okay.
I think I'll get it 360. Dadgummit. Magnificent, I want you to give me at least a B for sticking with it. Gamma's at 1. I'm proud of myself. It's about time. Just barely got it right when I sat down at my desk. Such a pretty world today. Look at the sunshine. Won't you be mine? 360. Should I sell? Yay! Take that, Yoko. Yoko Oko. Thank you, Wash. Yes, I held one. In the name of Yoko, I held one. So thank you. Thank you back. Magnificent. Get your grading pen out. Okay, 440. I'm going to take it. 4.30, all out. What, hey Sue, get a grade? What'd she do? Magnificent. Give her a grade. She doesn't have to ask for one. I'll give her one, by God. I asked for one and I didn't get one. See, you would have got a loving heart face if you done it, Magnificent. Oh, I gotta find it. I gotta make sure it's there. Jimmy gets a B according to him. You have to word it like that. I don't think that was necessary. I'm the happiest man in the world. 360 and 430. I said we were going to go to the 200 too, so I should get an A for that. So that trade I had $1,200 in. Bought one, bought another one, then bought two at 230. So now I'm about to, see me how much I got. Almost to my goal of 1,000. One more trade. Yep, I'm out. 430 was my last exit. Good job, Cody. hear about the fire in the UK? Is it the UK, the Brits? Let's see here, airport fire. AOC is the prettiest Democrat out there. She's the only pretty one. I have a crush on her. I typed in AOC. I didn't mean to do that. She's like the kind of chick that'll fatten up when she gets older. Was it British airport fire? London. London Bridge is falling down, falling down, falling down. London Bridge is falling down. My fair lady. Trump comment on Boeing. Lockheed Martin. Jet fighter rooms. Boeing receives firm order for 3737 jets from Malaysia. Boeing sued for the wrongful death by family of whistleblower. I heard that rumor a while back about a bunch of people, a bunch of whistleblowers from Boeing suddenly died. Okay, I got that out of the way. Damn, Sue. Excuse you. Oh, I gotta eat my broccoli. Broccoli's next. Sue, you got some insider information? Was that a good one? That was a pretty good one, though. I'd have to say. I covered my mouth, at least. If anybody cares. Man, that made my eyes water. Almost. If there's any Germans in here, you know that's good manners. Yeah. Okay. Had to sit that one out, but that was all right. It was worth it. Now I'm eating broccoli.
He made that airplane so cheap for me, I couldn't help but buy it. He made that airplane so cheap for me, I couldn't help but buy it.
He made that airplane so cheap for me, I couldn't help but buy it. Boeing. Trump awards Boeing. Man, how did you know about that news, Sue? You did what? When? Next time, put my attention on it, Spank. I love broccoli. Put a little garlic powder on it, some salt, and some butter. And it's amazing. Okay, I'm done eating. Okay, prepare ye in the name of the Lord. We're coming back to the old resistance, retesting. Okay, get ready. I'm going to move this up to the 56.65s at $3.50. Pay close attention. Man, I'm telling you what, I'm full of burps today. That was number 3. My mother used to say, son, it's better to burp and taste it than fart and waste it. She taught me manners when I was young. Jim's getting ready to take SPX. March the 21st, the strike 5665 at 330, 320, 310. I think right about now. $3.30. Boogie. Now 360. Such a pretty world today. La 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 la. Won't you be mine? Come on now. Risky. Damn it. Boeing has a rising wedge. Man, what really? Just stand there and do nothing. I don't like to wait. Do I make myself clear? I don't like to wait. It could be a bad idea. Nancy, could I get you to nuke my coffee for me, baby? I know you're crippled and everything, but come on. Higher level. Well, I thought I was in the money a little bit ago. Now I'm out of the, no, I'm below the line, which I don't like to be. Okay. Might have to just get out of this thing. I'll give it a few more minutes. Boeing just squeezed out of the rising wedge to the downside. I'll be right back. I can't get her to do nothing for me today. Well, I waited all day for the stocks to break resistance. I waited all day long. Break it, oh break it, break resistance. I waited all day long. Nancy grabbed me a bottle and a Valium. Oh, Nancy, I love you. We're at 350. Oh my God. The stock gods heard me. Break it. Now I'm not really going to go for much on this one here, so I'm going to take what I can. I think that's the smartest thing to do. There's 370. Get it. Boom, baby. I'm out. 120 bucks. Now I'm out of grand for the day. I can call it quits. Hickory dickory dock. The stock gods heard my song. I'll take an A+. Oops. Better not show her that. She'll get pissed. Mike, did you like that music? Beautiful voice. Well, thank you. Finally got a fan. I've been waiting for someone in this room to finally say that. Ain't that right, Magnificent? You've never said I had a beautiful voice before. Alrighty, well, now I'm happy. Took me 2.5 hours to get to where I am today. What's F47 mean? What are you trying to say, Mike? He's talking about them. I figured it was. Oh, mama. That's going to piss off. Well, it can't piss off the liberals anymore because they're warmongers. There goes Boeing. Today, the trader of the day will be Sue. Jim, you're off using that brown nose of yours pretty good today. She's the goat. You have to go? Don't leave, Chris. Don't leave. Chris is from Spain. He gets there on a plane. Today he made some capital gain. And he's taken out on a train. Winner eventually receives 100 of billions in orders. Okay. Yeah. Oh, look at that drop. Get ready, folks. I'm getting ready to take his trade again. Let me see, the 5640s, or no, I'll get one contract at 5650 at $4.50. Right there. There it is. $56.50. $4.10. That time I got it right. Now I need a rebound. Yeah. Appreciate it if you moved up, please. No, I didn't remember it. I didn't see it. Nancy, I need a Valium and a vodka. Immediately. Hurry, hurry. Come on, you bitch. Oops. Sorry about that, Francisca. I'm going to turn this room into a PG room. What we need now is a good bounce. Can we do it? Mike, I got a nose booger in my nose. Would you come over and pick it? Come on. Yes. We are now at 440, 450. Should I sell it and get out of it now while I'm ahead? That's the question I'm asking.
Affirmative.
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 $4.50. You know, we could be squeezing right here.
I cannot accept that course of action.
You will accept it.
Nothing for you.
$4.60.
That does not compute.
Magnificent, eat your words.
I cannot accept that course of action.
We choose truth over facts.
That's all right. Don't make me play another song.
Danger, danger, Will Robinson.
Yeah.
Thank you very much. That's really nice. Thank you.
You're welcome. Well, I would say that was kind of a risky trade. It really wasn't worth it, but I made a little bit of prep. I made a McDonald's meal out of it after I pay my taxes on it. Are you impressed, Yoko? Say yes. We're back to 460 on it. Oh. Well, they're on the cruise line kick today. So they got a buy here on a UBS analyst Thomas Wadewitz. Maintains FedEx with a buy and lowers the price target from $350 to $331. Bank of America has a buy on it. Keeps buy rating. Price target 272, lowers it from 295. Maintains overweight, equal weight. Market performed. Now it says here FedEx analyst turns bearish. Now here are the top downgrades for Friday. Poop on you, buddy. UBS keeps a buy rating. Raymond James maintains outperformed. What do you think about them cookies, Mike? Facts. Oh, who's this babe?
I think there's so much correlation with the S&P 500, and I think she's exactly right that the industry itself is
I
in
love
great shape
you.
so far, but there are some macro headwinds, and that's a sort of very, I said yesterday, that's like an 8-baked cake with the whole tariffs and fiscal adjustments and stuff like that. So that just kind of remains to be seen. Watching that September low on the S&P 500.
Whoa.
All right, great to see you both. Thank you very much, Francis Stacy of Scarlet Oak Financial and Asia Georgieva, CEO, founder of Infinity Research. Thank you both. Good to see you. Thanks for being with me, friends. I'm Nicole Petalini.
Don't leave.
The Dow's down 305. I'll see you at 2 o'clock. On the watch list, please join me then. And download our free Schwab Network app. It's available in the Apple App Store.
FedEx new high.
24/7 schwabnetwork.com. Fast Market is next.
There's 470. That's now left $10 on the table. Man, it's got some good jams on here today. We're switching it around a little bit. But I can only take so much of it. Diane's having a one-on-one with Dave Butler. So far, Jimmy's doing good. I don't want to push my luck today like I did yesterday. Did all that good trades, and all of a sudden I get stuck in one. Does anybody in here ever feel like they're over trading? Yes or no? every day. You feel like, does anybody ever in here feel like they overtrade? Do you get complacent when you overtrade? Get overconfident? Or is it just one of them days where everything just perfect? I have them days. I like them kind of days. You can paper trade on toss. Toss has it to where you can have a paper trade account. I do it all day long. I mean, not all day, but I do it a lot because I don't want to sit there and just go trade after trade after trade after trade after trade. I want to average 5 or 6 a day and make 1,000. I think I'm pretty much got that down now. I should raise my goals up a little bit. It used to be hard for me to do 300. That was probably before I started this room. I was at 500 trying to do 5. Now it's easy to do 1,000 on average of about 300 a trade, 200 to 300 a trade, but not today. At first it was, but not now. The last one was 50. Okay. Well, I'm glad she's not on here yapping her mouth off as much like she did yesterday, Jenny. Nothing against women, but this woman just... We love women traders. Ain't that right, Michelle? Say yes. I almost had another woman in here trading with me. I'm trying to might talk her into it. But she's going to have to understand I rule. The Dow Jones 279 in the red. I just lost 5 followers by saying that. So let me see what the SPY did. See if we hit my support today on the SPY. Oh, Jimmy nailed it today. Actually, I made a new trend line, didn't I? Or did I? Yeah, I think I might have. 259.87. 255.61. No, I didn't get my low support. SPY's back down here again. Oh.
The way that they've been moving around, Kevin, it just doesn't feel like there's any depth. Nobody has any conviction about whether they're bullish or bearish at this point, and we keep ping-ponging back and forth. And it doesn't feel like there's much liquidity out there because of all this uncertainty, right?
Yeah, we're all just chopping around when it comes to our trades for now because, it does change on a dime here. And that's something to be expected when you have uncertainty in the markets, we have very low liquidity as you're talking about. I mean, the book depth for the E-mini S&P 500 contract, both on the bid and ask, has improved over the last week, but it's still at pretty low levels if you're looking at the last 3-month average. So that kind of coincides with, once again, having this, these intraday swings of even 5 or 6 points in a matter of 20 seconds is something that's a little bit abnormal in this market here. Now, we have to be able to hold up, Tom, because if not, and we break down even more here, that could open up more, room to the downside and maybe more violent and aggressive selling when it comes to the equities, especially the mega cap names. I know we'll talk about a couple of those over the next hour or so. So I think we just have to continue to try to trade this rotation as much as we possibly can. And I think the bright spot for today is communication.
This could be the catalyst for Boeing to break out.
We are seeing some pockets of strength.
I mean, we'd have to buy a dip, but it could be. I wouldn't buy it here, but for long. We're at 20-day double top, so I'll be right back.
Into a discussion about some of the earnings that took place last night because they're all deep in the red post earnings, and it's almost reflective, KG, that it's the consumer, it's the tariff headlines that are kind of clouding guidance moving forward. But then Micron pops a little bit on earnings, and that one gets hit. What is your takeaway on the Micron earnings results? Because it seems like the AI
FedEx new high
is doing really well.
It is. I mean, they beat both on the top and bottom line. Guidance for revenue as well as adjusted earnings per share were actually better than the street's expectations, but they have 2 problems. The first problem is their margin guidance, especially when you're looking at gross margin. I believe they got it to about 36.5% for the next quarter, a little bit light than what the street expected. And then also when you're looking at the high bandwidth memory component of their business, it has been very strong. Here's the problem though. The CEO has already told us that they have a capacity issue. They're not able to ramp up additional supplies for the product that's the most in demand. And if that's going to be the case, then you cap yourself when it comes to revenue, and that's going to hurt your outlook in your guidance. Maybe a little bit more of an expenditure increase as well, just kind of ramping up some of that business, which might be eating into their gross margins. But I think if you miss on the margins, especially when you're looking at the semiconductor names, which have been, there's been a lot of expectations that those margins are going to hold. Unfortunately, it's going to be a commoditized business. The margins probably are going to contract here. And if we start seeing that trend, that's when stocks are going to get hit. I think that's the reason why we saw Micron kind of fell to the wayside here.
Yeah, that memory chip business is so cyclical, and it continues to chop around, even though that one portion of their business is doing really well. But you mentioned it, capacity issues. You can't put them out there. You can't sell them either. But let's flip over to FedEx, because this feels to me more like maybe an overall good look at what's going on in the overall economy. They lower guidance moving forward. The CEO basically stated that challenging operating environment. We haven't heard that term for maybe a couple quarters out of FedEx. They're still going to spin off FedEx Freight. That's going to be taking place either later this year or early next year. But at the same time, KG, this is kind of the theme that's going across a lot of these earnings events is, hey, it's just cloudy guidance based on the uncertainty out there with tariffs and a consumer that's pulling back right now.
Yeah, I would agree with you. FedEx also has some internal issues that they've been trying to work through, and you could actually see that when it comes to the earnings announcement. Just look at a weekly chart, or you can look at a daily chart over the last year. I mean, you're seeing $40 moves to the upside or downside every time that they report. I mean, they've had some outside moves, and that's because it's very hard to really try to get a good sense as to, is it an economy thing or is it something that's more internal? The spinning off or the lack of renewal for the USPS business, which was a major driver for the revenue, they lost that. Now, on the other hand, that USPS business was also very expensive, so they did see some margin expansion, but the volumes are not really seeing any type of bottom. It's continuing to decelerate here, and they did make mention that China's actually still a little bit weak, and they have a lot of exposure when it comes to China. So I think some of it's macroeconomic. They can try to blame the macroeconomics as much as they possibly can. They have been doing that for the last year and a half, but a lot of this is also internal. They have some initiatives in order to cut expenses. They are seeing some promising signs there. But if you're not driving top line growth and you continue to see internal weakness when it comes to the amount of volume, which is going to push
3 more Lossingers left.
it makes it very hard for this company, and that's why we're seeing it slide. What I will though say, the intraday move though is actually looking pretty promising. Got hit around $217. It's trading at $225. It's almost $8 off the low. So maybe we continue to see maybe some buyers
look at that.
stepping in, and maybe there is perceived value in.
I'm sorry. Did anybody look at SPX? You not understand what I did? Magnificent. It's at 570. Hello? Hey, this is Hunter. Did you get that video I sent you the other day? It's supposed to scare you, man. It's lonely when you don't have the Secret Service around you. Now, I've seen you take that trade there on the SPX. I have to say you're a dumbass. You should have held on to it like you did that other one earlier. You could have took this to 620, bitch. I mean, sir. I'm going to have to send my father over there. He's going to chop your fingers off. Now, I sent you that video to show you how it's like when you're lonely and all by yourself. And you're high on cocaine. Doing spin arounds. You know what I mean, man? No music on, no picture, none of my artwork on the walls. I'm supposed to send a chill up your back, bitch. Now this thing run up to the 200 SMA and EMA. You should be able to get out here, buddy. But I see you already sold it. You left $200 on the table, dumbass. I mean, Jimmy. Yeah, I did. Oh my gosh. $7.10. $7.20. Forget about what I said about overtrading earlier. I should have stated it. Next video I'm going to send you is going to how to hide a laptop. You dig my drift? 770, you dumbass. One day. I asked you if I should hold it, and you said no. Oh, you didn't? 890. I just left $400 on the table with that beautiful run. Magnificent. You get a C plus. Make that a little C. God darn it. Ugh. I got an ear infection. Shit. Oh well.
Manufacturing PMI data, not as big of an impact compared to ISM services, but will be a key driver there. And that's going to be your soft data, your sentiment data. We have new home sales coming out next week as well, durable good orders, and we have final GDP, maybe a slight revision there. That's going to be for Q1, so not a massive. Or that'll be for what, Q4, right? That won't be a massive adjustment there. And then we have PCE on Friday, which I think there's a lot of hype around the PCE data, and rightfully so. But do we actually have a print that comes in line, or maybe comes in a little bit lower than expectations? A lot of the items in PPI have actually been deflators for PCE. Analysts are actually pretty good at trying to pinpoint what that number is. And then we also have the revision for University of Michigan consumer sentiment, which everybody and their mother has been talking about as of late here. What I will say, though, we're trying to power back here, Tom. Hopefully we actually do see maybe a short covering rally.
Keep playing that guitar, Mannequin says.
Hopefully we don't get any bad commentary when it comes to the White House or just news in general. But it would be very surprising for us to have.
We have a symmetrical flag on Boeing.
Last time that we did that was in 2022, and that wasn't a really good environment, to say the least. That was actually the start of the bear market, let's say the massive correction. I'm not even sure if we can call it a bear market here. So headline risk, some economic risk that we have for next week here. But once again, I think we're pretty much just trading the news.
Yeah.
A lot of the economic data, I think we're already bracing for some pretty hot prints when it comes to sentiment, or cold prints when it comes to sentiment.
Man, I should have stayed in that trade.
And hot prints when it comes to inflation.
Oh well.
Yeah. Fed's Goolsby gave some comments earlier today, and he's talking about transitory. If it lasts more than a couple months, then it's not transitory. But he did say that some of the hard data is still
unbelievable.
And he still believes
that's
in the
what you are.
And the 2% mandate that they have, and I think have one of the big.
You need to scale out. That's cold. That's real cold. Yes, is this the FBI? Would you keep a lookout for Yoko? Yep. Thank you very much. I know it. They're almost to 10. There they are. There's your 10. Made a couple hundred there. The crowd's going wild here at the Sports Arena today. There's 11. Okay, you see resistance. Rob. Yesterday's low. I only had one. I couldn't keep two. See what you did yesterday, Yoko? I said people can't follow my trades because I go in too big. So I just bought one. If I would have went with my other strategy, I'd have bought 3. $56.43.94, and we broke it. That's what you are. I think I'm going to sell it right here. Would you hold this? Okay, let me ask you, Yoko, would you hold it here or would you get out? You only have one. You got it at $7. Tell me what you do. Well, I'm up $500. That's why I want to sell. Yoko, you didn't answer my question. Should I sell it? Look at that straight up climb. Doesn't that kind of scare you any? We got it. I'm out. That's what you are. Exactly. You nailed it right there, Charlie. You nailed it, Randy. Overhead resistance. That's all right. Get over it. But you also see the win. You also notice the win streak I have. I hardly ever lose, right? By doing it. I just mock what the fat cats do. They get in the trade, it dips a little bit, they buy more, and they buy more. But I just do it in a scalping way. So I'm trading like a millionaire. That's that's the way I see it. And then I hardly ever lose that way. That's the best thing about it. When before I was taking losses every time I'd think it'd dip, and it would dip, and then I'd be out of it, and then all of a sudden it'd bounce up and break my resistance and go higher, and I could have made money almost every single time. 95% of the time. I'd get so mad at myself. I'd buy something, I'd buy a contract, I'd be at $3 and then dip down to $2, and I'd finally sell it, and then by the end of the day it would be at $4, almost 9 out of 10 times. Just like now, I mean, if I'd have held that one, but I didn't see this. I didn't draw that out. Maybe if I'd drawn that out, I'd probably have thought different. Definitely would have thought different on that trade. One, two, three, four. Jump in the trade. Well, I wasn't there. I was over in here. I was up and down on it a couple times. I forgot why I got in it now. I think it was a double bottom. High or low. When I took that trade. 562.67. Show me a chart. How you come up with that number? I have 563.14. I got 563.14. And I don't know how I got that either. Let me see on the 20-day. Oh, I gotta see it. I see how I got it. That's like a pivot point area. The 563.14. So support, my first support was 559.87. We dipped below it. 30-minute. That's what I was looking at. Yeah. That's how I got it. Got it on the 30-minute. Now I remember. I thought I did it on the hour this morning. Tesla broke. Good job, Rob. Trump says, I view those targeting Tesla as terrorists. Trump says we can talk about China tariffs. We'll speak with China XI about it. So you look at 3-minute. That's what you want. Tesla. Tesla's breaking. They broke the 200 EMA on the hour. So that's now new support. I asked Tim Waltz to get into the ring with me. I want to see if he's going to do it. If he's just all mouth. Rob, I like 252 again. 250.94. $247.97. Where's support on the spy there, Yoko? Dum 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 dum. Keep thinking that Nike was just a little bit overdone. But got someone here saying $64 price target, $66 price target. I don't know. It seems like they're. Then you got someone else that says $92. Oh, they're talking about Elon.
Natural for this company. They tend to go in waves. They tend to, come out with new models a little bit too late in terms of.
Oh, shut up.
They let sales degrade for a little while first, and I think that's what happened. That's what's happened here. So we expect the new Model Y is going to sell extremely well, and we expect that Tesla will announce a car, in the $25,000 to $30,000 range that can blow away, or even less, that could blow away the overall American economy car market and really open some significant doors. But we'll have to wait and see on that. I think this is a company that's earned the right to have some significant drawdowns and earned the right to have the benefit of the doubt in terms of execution of an overall grand, large strategy.
So, Andy, I'm going to follow up here, and I want to balance this out before I get the DMs around me being a Tesla hater here. The chart actually looks really good. What is in your calculus when it comes to the humanoid robot? Do you kind of believe in that vision as well, or is that something that's a little bit more, 20 years out viability when it comes to actually driving revenue?
Yeah, for us, we don't model that in at all. I consider that just a moonshot that you get in the price of Tesla. You get this moonshot, which is, humanoid or these type of robots that could be personal assistants, factory workers, etc. There's an enormous potential market there, but I don't see any reason to model that Tesla is going to be the one to win it, other than they have a CEO and a team that tends to execute really, really well on moonshot plays like Starlink, like Neuralink, like SpaceX. This is a guy and a group of people that tend to win, and so I think you can at least put, some valuation on that moonshot, but I wouldn't put it in anything in the next few years.
Yep. This is definitely one of those bifurcating stocks that you either love it or hate it, maybe. But you better have your big boy trading pants on when you're putting your positions in this one. All right, great stuff, great data as always, Andy. Have a great weekend.
Thank you, you too.
All right, that's Andy Swan, co-founder of Likefolio. KG, so I looked at this one. I mean, 50% fall from those all-time highs in December. It was oversold for a couple weeks in a row. I think it's 9 straight weeks in the red for Tesla. If we do end up in the red, which this week we're down 1.7%, even with the bump up today. So I looked at something, that if you want to take that bullish stance, maybe kind of aligns with what Likefolio has as far as their data goes. This is a way to potentially profit from that if it doesn't go down anymore. But taking advantage of the higher implied volatility level. So going out to the April 17th monthly option. So you're going to miss earnings, which are at the end of April. You want to avoid that event potentially. Sell the 220 strike put. That's been a good base here recently. Sell the 220 put and then buy the 200 strike put. So a short, neutral to bullish $20 wide put vertical. Collecting roughly, we've got 450 credit on it. Trading closer to 415 right now because the stocks have rebounded. But if you collect 450 credit, that's what you can make, $450 per spread with a break even at all the way down to 215.50 to the downside. That's about $30 below the current share price in there. And if you collect 450, you're going to have $1,550 in risk. But KG, I think the key here with these type of strategies in this example, which is neutral bullish, is you got to stay risk defined in a lot of these, unless maybe you have the capital to withstand big.
This is what annoys me. Market watch. Tesla stock is having its worst stretch ever, and the bad news keeps coming. And Jimmy wrote, hogwash. Well, I made it to 1,500 today so far. And I'm trading small increments at a time. It would have probably be about 35.
Time decay on that one. And implied volatility, IV percentile rank near 60%. In a volatile year that we've had over the last 52 weeks, that's saying something that the IV percentile rank is still at 60% at this point. That allows you to collect more credit on these out of the money short put verticals. All right, great stuff as always. Let's take a quick break here. When we come back, we're going to take a look at Super Micro. That stock's jumped about over 30% so far this year. But down from those all-time highs that we saw from a year ago. Upgraded today. We're talking Super Micro when we come back.
Do, do, do. Put it on the 5-minute, Rob. At the 21. And then you got that previous high there. What did you say earlier? 244.89. $243.12. Back to the previous high. We're not counting the wick, but that's on the 5-minute. Now the wick, 243.92.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Super Micro, let's get a quick market update. As we mentioned just before break, the stocks are off of those session lows and getting close to session highs. The S&P 500 now down only about 0.3%. Dow off only 60 points. NASDAQ 100 down nearly 0.2%. The Russell 2000 made up
I hit
over
it.
half of their losses, down nearly 0.6%. President Trump giving some commentary on potential ceasefire. He also said there might be some flexibility on those reciprocal tariffs that are supposed to come down the line on April 2nd. So we'll continue to watch headlines or moving markets, but the S&P 500 now positive on the week, maybe snapping that 4-week losing streak. All right, let's talk Supermicro. Stock was upgraded today. Let's bring in George Tillis, Senior Markets Contributor here on the network. George, this stock's had a great year so far, up 37%, but it was a dismal second half of 2024. So I think if you widen out the chart, you can
George is
realize how
farting.
much it's fallen from those all-time highs.
I heard him. I heard the farts. I know I did.
The SEC charges, and it's not going to get delisted.
There's another
It's
one.
kind of propping up the stock.
Yeah, so I'm going to put this in the camp of being a stock that's a special situation. The reason being is, right, if you look at the price
George.
action going back to about a year ago, it was trading close to $120. It fell all the way down to close to $25. It was, the poster child of AI, NVIDIA, GPU technologies, data center, and of course their technologies are highly used and ubiquitous across the GPU ecosystems, particularly for NVIDIA. There's a lot of growth for their liquid-cooled servers, especially with the Blackwell technologies that have been announced and being deployed by NVIDIA. But they did face some competition in the last year as Hewlett-Packard Enterprises, Dell, which are in the server and rack storage space as well, had been sort of encroaching on the financials. But the real challenge for Supermicro was not necessarily their technology or their business or even competition. It was the financials, the reporting. And effectively, they got caught with some financial issues, essentially. They had to re-report their fiscal year 2024 earnings. They faced delisting. That was a huge detriment to their stock price. But since then, they restated their financials for fiscal year 2024. They're current. They're not facing delisting. And effectively, the reason I say it's a special situation is because now you're actually seeing.
See, this is how yesterday should have went when I got in that last trade. I had to keep on adding.
Is trading at a significant discount to its sales. The other thing is, and this is what JP Morgan alludes to as well, and they have, by the way, a $39 billion target for 2026 in sales. They also increased their target in price to 45 from 35 and now have a neutral rating on the stock. They actually see accretive earnings and those top line sales, but they say that there's still risk, and there's still risk of margin compression, competition, and even essentially secondary offering risks, which you have to consider. But at the same time, from a price to sales standpoint, the stock is cheap. But from an earnings standpoint as well, it's also relatively cheap. Now, the guidance for 2026 is actually increased to $3.77, so it's trading only 10 times 2026 earnings. So it's cheap on a price to earnings, price to sales, and it's actually trading quite well in this market.
George, real quick here before I let you go. It's trading cheap maybe for a reason, right? Because their margins are actually pretty razor thin. You mentioned competition. You got HPE, you got Dell in this space. So maybe that's why, because their margins are so thin as a data center builder?
Correct. That's the hang up with the stock. And that's really what the JP Morgan analyst emphasized as a problem, that there certainly could be competition, margin pressure, which again, it's already trading from a gross margin standpoint, roughly 12 to 13%. That's lower than their 5-year average. And there's competition. Hewlett-Packard and Dell are obviously moving into this space. So that's one of the risks you have to contend with. But the financial risk, for the most part, seems to be ameliorated. But nonetheless, you have to consider that those margins are razor thin. And if they get a little bit lower, that'll add additional pressure on the stock price.
Yep, definitely. All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Contributor here on the network, breaking down Supermicro. Now, we're going to build a trade, an example trade here based on maybe that note that came out Now you got to remember they've got earnings coming up at the end of April, the 29th, so we want to avoid that because that could add some volatility to this market. But if you believe that analysts note, we looked at the 45 line as being an area where you could be potentially profitable using this type of strategy. So going out to the April 25th, weekly options. So 35 days to expiration, you capture all that time before earnings while avoiding earnings. We're going to buy an unbalanced or broken wing call butterfly that you can offset some costs on if you think it's going to kind of grind higher at or near that 45 level. Buy one of the 39 strike calls, sell two of the April 25th weekly 45 strike calls, and then buy one of the 47 strike calls. So in essence, you're buying a $6 wide bullish call vertical, offsetting some of the cost by selling a $2 wide call vertical with the same common strike where you sold two options on that 45 strike. That's the apex of profitability on this. Now, you pay a $2 debit for it, that's going to be your risk, $200 per spread, and it takes your break even up to 41 on this. So if you look at this from a price standpoint, stock's already trading 41.80, but the price of this unbalanced call butterfly trading about 215 right now. So you have to pay a little bit more, but you're already above the break even on this one. So anything above that $41 level, if you paid $2, is going to be profitability with 200 bucks at risk. And even if it does go above 47, continues to move higher over the next 35 days, it's still a double in profitability. So you start looking at trade-offs. Well, why don't you just buy the 39.45 call vertical? Well, it's going to cost you more. You're going to have more at risk. Now, what's the downside or the flip side of this? If it does continue to move higher, your profitability comes down after the 45 strike because you got two short options on that particular strike when you're looking at this unbalanced call butterfly. Buying the 39 call one time, selling two of the 45 calls, buying one of the 47 calls is the setup for this. Now, if you were to just buy the call vertical in that same April 25th series, if you bought the 39 call and sold the 45 call, you'd have over $290 in risk. So that vertical is trading about $2.90. So that's what I'm saying when I say offsetting some of the costs on that by selling that upside call vertical against your bullish call vertical, which creates this four-legged spread or butterfly, unbalanced call butterfly to the upside. All right, that's going to wrap it up for us today here on Fast Market. Make sure you download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Next Gen Investing is coming up.
$563.14. We're about there. Yoko. You ready, buddy? Oh, there it is. There it is. Bingo. Bingo. Should I sell here? Yay or nay? What level was better? I think they were both good. If they both were achieved. Correct? Was that the one that I said? What did I say earlier? I thought I said 6-3. Let me see what I said. I might not even put the right one up. What did I put up there? $563.14. So we went higher than that. And you said 562.71. 562.67. So let me see where I'm trying to figure out how you got 67. You won't tell me. I think it's rude. It has to be off this here triple top. You'd have to be off that. That's how you got it. You're using the 3 minute. La 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 la. We'll know which one it respects when it comes back. So if it respects this, I'd say mine was better. If it respects yours, yours will be better. And it'll probably come down anyway. Okay, messages. I'm getting them today. I'm getting ready to go make me a hot chocolate. So we got yesterday's close on the SPX. Oh. The 200 on the 5 minute. Yep, that'd have been a good one. That'd have been an excellent. So, see how it respected it here earlier? Yeah, I like that one better. Actually. Punk. The 200 SMA. I'm gonna go get my chocolate and I'll be right back. Hope I ain't dying.
that ahead of time, so with the margins going forward, there's some concern about slimmer margins, so that's really hitting Micron right now, and just overall concerns about just the industry environment for NAND.
That's so funny. That's exactly what I could find as far as what went wrong. Because the 7% move, 7.5% move, you have to imagine something did. And frankly, guidance doesn't give you that indication. But the margin story, tied to NAND, I think is a great point. But Street, amazingly so, I know we're moving lower today, but a lot of the price targets I saw were either maintained or and they all imply an upside. I mean, we're talking like Cantor Fitzgerald sure maintaining 130. We're trading at $95 right now.
Yeah, Cantor still overweight on Micron, maintains $130 price target, Cantor Fitzgerald. Wedbush maintaining outperform. They're raising their price target to $130, so certainly seeing some upside. JPMorgan Chase still overweight. We know that's essentially a buy rating. Now they did reduce their price target though. They've reduced it to $135. So it seems like with the way analysts are viewing this is that there is still more upside from here, and they're at least when it comes to the analyst community, they're not paying as much attention to where investors or even the traders are focused today.
I agree. And I was surprised to see sentiment from the sell side as maybe neutral to optimistic as it was. Now, our next name today here is Super Micro, and always a fun one to talk about because it's always on the move. I mean, this is a very spicy name, up 8% today. I have to imagine it's not entirely tied to this JP Morgan upgrade, but crazier things have happened in Super Micros. JP Morgan did say they're on the cusp of benefiting from
56.50s are above the money now, in the money.
Blackwell platform, which any way you could be tied to NVIDIA, not super positive lately, but at least being read as such today.
Yeah, right, indeed. There was some balance in that. I mean, their revenue projections, they are, as you mentioned, expecting them to be a beneficiary of that ramp in Blackwell. And then because of that forecast from NVIDIA, they're projecting for Supermicro that we'll see fiscal 2026 revenue of $39 billion, which would be up from their previous view of $34 billion. Now, the balance here was that the expectation for JPMorgan Chase is that we will see gross margins thin out a little bit from here, and expecting that to be 11.1%, but it's very little change from their prior view. It was 11.2% before. So, that's not much in terms of their kind of view on that. And to be fair, though, they just upgraded it to neutral from underweight, so I guess that reflects that balanced perspective.
Yeah, and this was one of those analyst notes where it seemed half committal, because it was like, wait a second, the more you read, the less positive it really was, frankly. So they noted, I think, all of the biggest concerns that are still concerns for Supermicro, but hey, at least able to hang on to an 8% rally and actually closing its losses on the week. It's amazing how volatile this market has been and how resilient Supermicro, of all names, has actually been in some of the pressure. Now, next name is a complete 180 from that, because talk about pressure that has not been able to catch much of a break, and that's Boeing. Although we are talking about Boeing on an excellent day today, because Boeing is set to be one of the S&P's best performers on the week.
Yeah, it is. And Boeing needed this win. So this is coming from the White House. President Trump announcing today Boeing will build the future fighter jet of the Air Force. The Pentagon says that will have stealth and penetration capabilities that essentially would be better than the current fleet and that would be useful in any kind of potential conflict with China. What this future fighter jet is going to be known as is Next Generation Air Dominance. I'm not sure if they're going to be calling that NGAD. NGAD is the acronym. It will essentially be the front runner of this fleet of basically this future fleet of drone aircraft that are designed to be able to have penetrative capabilities when it comes to China and any other potential adversaries.
And I was also seeing, I mean, the move is equally as interesting in Lockheed Martin today, who's obviously the one locked out, right, quite pun intended, but they are down about 7% today, so seeing the inverse move of that negative reaction. And the deal's another blow for Lockheed Martin, frankly, whose shares have fallen now pretty consistently over the last 6 months. Well, who would have thought we'd see Boeing as a week-to-date winner to close out this volatile week? I mean, and finally we get to talk about some positive price activity that's at least looking like it's hanging on for now. Last name today here, though, Reddit. And fun fact, I didn't realize this until I was reading more about Reddit today, is that we are exactly at the 1-year anniversary of this company going public.
Wow.
So, I know, happy birthday, I guess, to Reddit on the public markets today.
Yeah, indeed. Happy birthday, Reddit. All right. So Guggenheim adjusting its price target, lowering it, but they are still constructive on it. They're lowering their price target on Reddit to 170. They previously had a price target of 210 on Reddit. They still got a buy rating on this. Essentially, to them, this is a recalibration of expectations. They're not. It's not saying they're out on this. They're not still, bullish on the future path for Reddit and its growth trajectory. But in other words, there's just a reset right now. And it's probably because we are 1 year on, and they also have to be reflective of the current market environment.
That is true, and this was also a name. When you see some of these staggering losses we've seen in Reddit, frankly, and I'm like down 50% just over about a month and a half now. I think though also important to keep in mind, because I've been looking at these various Trump bump-related stocks, like your airlines, your cruise lines, Tesla, Bitcoin, and honestly, Reddit was another one that was caught up in like the Truth Social hype cycle that now has erased a lot of that, but it also had seen a pretty substantial run-up in shares.
Yeah, it certainly has. One thing I actually want to go back to, I know I wanted to add this. You talked about this before, that really kind of balanced perspective that JP Morgan Chase had on.
Okay, give me more, give me more. Jimmy's got a new resistance on the SPY, 564.40. $37. One, two, three. Keep an eye on Rob. Keep an eye on Tesla here. Do you think it'll stop at the 21? 243.92? $564.45. What you got? Yep. It's right in the ballpark. And see if it holds this support. If we hold this, we will. But that's a lower high at last time. And a lower low. Basically a bull flag. Right to the 50 SMA on the 1 minute and on the 3 minute. Now I'm going to start. It'd almost be the 21 on 3, and then on the 5. Five would be a 50. And we hit the 9 on the 5 minute. So basically that same spot as the 1 minute. Damn, I love hot chocolate. Okay, we'll find out here shortly. You ready, punk? $56.70s. Well, the 56.70s at 460. With a tight stop. Go away, little girl. I can sell them here at 520. See if we come back up and hit the pivot point and flag. This is a bull flag here. Tell me when. Okay, we got to hold 63 where I get out. Do not leave the desk, James. Okay. Getting close. How competitors are gaining ground on Nike. I agree. Brooks. Okay, they're trying to shake me out here. Belch. Yeah, I think I better. We could drop all the way down to 561.40. And that'd be pretty harmful. Got tweezer bottom. Let's keep it.
In that category, particularly the running category, basketball, training, which they got away with their focus on casual wear. Returning to that core differentiation that was originally having the best performance footwear. And so in addition to that, that really ties into the new CEO's win now strategy. That's really focused on 3 pillars. That product component, really focusing on innovation and performance, reigniting the brand with consumers. So really focusing again cohesively on like storytelling from the athlete's perspective, sports-centric marketing, and then just the overall channel imbalance. Really trying to really reignite those relationships, mend relationships with wholesalers, while still balancing their own owned retail channels to hopefully cohesively create a turnaround for this iconic brand.
Okay, so maybe to try to be a bit more positive here, as it's difficult to be, but I do know that Nike, I've been watching a lot of sports lately, so it's just on my radar that Nike is everywhere. I mean, plastered across your screen for most major sporting events, whether it's like golf, I mean, basketball right now, March Madness, you just see it everywhere. Now it's something I've noticed more and more. With that presence, the other brands don't have the same dominance. So is that what keeps them somewhat still a bit, I wouldn't say insulated because they're obviously not, but maybe it gives them a bit of a leg up because they have all these existing major partnerships with some of the highest eyeball viewership events we have really out there?
It's a great point. Nike's still one of the biggest behemoths out there in footwear and
Blanket.
wear, and they're able to leverage those marketing dollars.
So I stayed in with a tweezer bottom.
Can't get to right now. So fundamentally, their strategies can go big on events, whereas some of these smaller ones might be going more the influencer route.
Yeah, I'm not liking this much.
So they're able to still leverage.
I don't know if I should stay in or just get out.
To drive growth, drive awareness, and be front and center with the consumer.
Punk, what should I do? Get in or stay in it or get out? I'm trading the SPX off this. SPY. We got a chance to hit the triple top, or we just stop. Push it? Are you telling me to stay in, man? Is that what you're trying to say? Right now I'm up $100. I got another one at 360 and 460. Probably wouldn't hurt to look at the one I'm in. Go away, little girl. I got out. I'll probably regret it. Tesla reversed off that support. Oh yeah. Okay. Well, Jimmy's out. Yay. I think we'd also pull back and hit that 200 or this triple bottom. Right about in here. You're waiting? Rob is waiting. Oh, baby. I love you. With all my heart. Carl, the #1 broker. Okay, I'm going to the kitchen for a second. Fill up my water. Got to make sure I'm drinking a lot of fluids and see if we don't bounce off this 1-2 fribbits. With one more red candle. Okay, this is it. 360. If this don't hold, then we got two other resist support levels. 1, 2, 3. I got out. Good job, Jimmy. We got the 200 EMA and the 200 SMA. Magnificent. Remember what you told me last night? Patience. Okay, starter position coming up. What time is it? Fat cats are back. Hello, James. I am the fat cat. I am back. It's time to take a position. I need my money and I need it now. So I move up the ladder to 56.60 and I buy one contract. Come on, 200. We love you. We love you so much. Bring it to Jimmy. If I buy one now, then I buy two later at the 200. Or I just wait for the 200. Jenny, why do you got to talk so much?
Technology that's beating Tesla overseas.
Tesla, oh, shut up. Told you I didn't want to hear you talk about Tesla anymore. Hello, this is Schwab. How may I direct your call? I'd like to speak to manager of Schwab, please, and tell Jenny to quit talking about Tesla. Sorry, sir, you have the wrong number. Call back again. No, I got the right number. You answered Schwab. I need her to quit talking about Tesla. Unless she has nothing good to say, then don't say anything at all. Is my motto. Tell her I said that. Okay, we'll relay the message. Well, piddly sticks. I should have took the 200 EMA. That'd been a $100 trade right there. 460 to 560. Never been $100 on a $460 trade. Now the old Jimmy would have bought 2 of them and made 200. And then if it dipped down to 56.33, I'd have bought 2 more. And that would have kept me in my $1,500 limit. Yep, see, it's 580. I'll just wait. I feel like I've overtraded already. Tesla boom. Tesla new high. Tesla new high. Damn, that'd been $200 on the SPX. We're at 660 now. That's what I probably should have went with, because I feel very bullish. Jenny, did you get my message?
Investors to bet on the future of the company.
Yeah, that's an excellent question.
She ain't said a word since I called.
It can unlock shareholder value in a small way for what we're starting to hear.
I think she got the message.
These other projects, but the car is still king right now. Until that really starts to change, especially with the full self-driving narrative, I think that's still king. And until we see otherwise, I don't think it's the biggest part of the story for Tesla.
I agree, and also the U.S. is still king, and their sales are 50% derived from the U.S. There's a lot of focus on EU, Germany, which saw, like a nosedive of a start to this year, but it's also 2% of their overall revenue. That's substantial.
Damn, 720.
Like the U.S. is here, so looking at Tesla to look at pretty decent session today. So we'll leave it on an optimistic note, but appreciate the breakdown.
That's hard for you to say, ain't it?
Charles Schwab. Now coming up next. Time to recap another big tech name here on our show. We'll discuss NVIDIA and GTC. The week that was Quantum Day yesterday, seemingly disappointing, so we'll dive more
She
into
said, we'll leave it on an optimistic note. Dow Jones recovered quite a bit. Still red.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly. With Schwab,
300 a contract.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the week that was in NVIDIA as GTC failed to enthuse. We are down on the week, lower about 1% today, but here to hopefully bring us some optimism on the future of NVIDIA, which also to me translates into the future of AI, frankly, is Hatem Diab, the managing director at Gerber Kawasaki. So Hatem, thank you so much for joining us today. I'm hoping that you had some positive takeaways because what was coined as, I know, the AI Super Bowl, this was not a very good Super Bowl, if that's what we're calling it. So walk us through the sort of the streets takeaways and your takeaways.
And then my takeaway.
Good to be on. I beg to differ. I think if you wanted to see what the future is going to look like, there is nobody like Jensen Huang to really lay that picture out in a way that is so descriptive and so clear as to where the world is going. And frankly, when you look at the progression from generative AI, which is where we are today, to reasoning model that's happening now, to agentic AIs and full self-driving down the road, and robots, you know, NVIDIA is really the only company out there that is building the infrastructure to run all of these things, and it's just the beginning. So I think you know, if you're geeky enough and you listen to some of the stuff and watch some of the videos they put out, you'll see where the world is going, and I think that's why you should be excited about NVIDIA going forward.
Tim, I watched it. I watched that keynote, and I liked it. I mean, Jensen had great energy. He talked about things that are coming up, as you know, and then the developments that he sees the next leg of AI growth is going to be in robotics. I wonder if in terms of the lackluster response, it's because if expectations were so high, have been so high around NVIDIA, if that's part of it, or if they're also because there wasn't nothing necessarily new, because we kind of knew about that Vera Rubin was going to be coming. Did we need to hear about another chip, or is that not even necessary, given we still have to address the demand that's out there?
Yeah, I think you're absolutely right. I think the expectations are so high, and frankly, investors are having a hard time wrapping their heads around, you know, what this is going to look like. We've already seen almost $300 billion in data center deployments or investments from the big tech companies, and I think people are not really understanding what that means. I think what Jensen told us in GTC is actually that pace of investment is going to accelerate to almost $1 trillion by 2028. So it's almost like investors don't believe him, or at least don't understand what that means for the bottom line for NVIDIA. And plus, I think there is a bigger macro story where
950.
People are just anxious about what the world is right now with all the slowdown,
back of resistance,
some of the political stuff that's going on. So it's just hard to impress in general because the market is correcting.
Yeah, I think that's a good point. Also on the back of
got an inverse head and shoulders, or a head and shoulders.
Still a major overhang that doesn't seem like it's able to be just completely shifted because of GTC. Although historically, GTC isn't really this major catalyst that I think the street was saying it was. I mean, frankly, I thought that was a little bit mismatched, but things also to be excited about. GM and, of course, NVIDIA partnering up for more autonomous driving. But is this GM coming late to the game? Because they ditched Cruise just several months ago. Now partnering with NVIDIA, they just trying to play catch up in a market that could leave them behind.
It's a last-ditch effort from GM for sure. I think every kind of OEM or legacy car manufacturer has to figure out how they figure out full self-driving going forward, and they all can't do it themselves because they're just not an engineering kind of DNA company, and NVIDIA will be the firm that's going to provide the solutions for a lot of these OEMs. So GM is, I think, only the beginning. We know Mercedes is already working with them, but a lot of the other manufacturers will be working with NVIDIA for that. Tesla obviously has their own full self-driving, and that's still kind of working itself out, but I think NVIDIA would be the other player.
Yeah. Hatem, the street is still very constructive on NVIDIA, right? I looked just to see, I can't find a single sell rating still, largely, essentially in the buy camp. There are some holds on it. UBS coming out today, reiterating their buy rating. They've got a $185 price target on NVIDIA. One of the things that they noted that they feel like there's not enough attention paid to with regard to AI and NVIDIA's positioning there is sovereign AI, meaning the AI growth story when it comes to governments and their needs, and that's an overlooked factor that could help boost demand. Hatem, do you feel like that's one of the things that was overlooked as well?
Absolutely. I think industrial AI is one, but also sovereign AI, right? Like when you look at where we are right now internationally and how all the tension that exists between Europe, and when I talk to my clients or our clients in Europe and other places, they really feel like they're left behind. They feel like they need to spend the money to really build their own AI infrastructure. And right now is really all the big tech companies. So you're going to start to see a lot of the European companies announce a lot of big AI projects. And frankly, NVIDIA, again, is the only game in town when it comes to trying to build that infrastructure. And yeah, the street is not really seeing that just yet. But as we've seen some of the, for example, some of the Gulf states starting to invest a lot in these things, and I think Europe is next.
I completely agree, and I also think there's still like major opportunities here in the U.S. and some of the energy bill that's necessary to even fulfill, I think, the capabilities that some of these companies talk about in relation to AI. But last but not least, I got to get your thoughts because you mentioned some of the turbulence regarding the overall market, which is obviously a huge factor. But as far as those critics that say valuation was just too high, it set NVIDIA up for this fragility we've seen for the last several weeks. I mean, do you make the argument of, yes, that this name perhaps was a bit overvalued, or are you in the camp of, hey, look at its earnings multiples, look at its growth? I mean, this name justifies that high multiple it's carried for quite some time.
Yeah, I think all of those things can be true, right? I think the valuation for NVIDIA was never super expensive, actually. But I think the valuation for the market in general, NVIDIA being 5 or 6% in the S&P, was high, which meant that when a correction happened, just everything got sold off. The reality is, when the risk-off mentality goes in, like you're gonna see everything really selling off, and NVIDIA has been a victim to that. But ultimately, as you said, you should look at the PEG ratios, right? The price to earnings growth. NVIDIA is still going to grow 60-70% going forward, for at least for the next 3 or 4 years, I think. So for that reason, I think it's definitely a buy.
Yeah, and I'm glad
56,
to hear
56, 56.
I'm tired of all of the beam down headlines on NVIDIA, which is down on the week, but modestly lower today. GTC still have lots, I think, to be excited about in the future. So we need.
I can handle about 5 minutes of you, girl. Silence never felt so good. Where's Nicole at when we need her? Don't look at the 556.50s. Oh, God. I'm not looking. it's hard to look at the 5660s that I was going to buy at 460 on the pullback. If you want to know the truth about it, the matter right now, they're up 100%. We're at resistance. We're at resistance. 56, 61, 60. If we break, we go higher. You understand? Yoko, say yes. He'll say no just because it'd be out of spite. Man, I'll tell you what, I get so many calls. Always Clean, Retail Traders. You're on a recorded phone call. May I help you? Oh, well, Cologuard, March is colon cancer. Let me see here. March is colon cancer awareness month. January, February, did not know that. Take charge of your health by completing your Cologuard kit. I never got one. Cologuard. I need to call these people up, see what the hell they're talking about. I didn't know that. March is colon cancer awareness month. Okay, we're at resistance. Oh, I had a poly level before, they said. Does anybody want to check my colon out? Hey, Sue? Michelle, you still in here? You want to check out my colon? George.
For whatever reason, whether it's, it's technologies around connectivity, autonomous driving, batteries as service. These are all technologies that were NEO's, bread and butter, but it seems like that technology has become more ubiquitous, and they just haven't been able to finance the scale of operations they need to get those profits higher. It may be based upon their brand offerings, the luxury space, but for various reasons, they seem to just be in this rut where they can't just achieve economies of scale, and they keep losing money. And so that is over time going to continue to put pressure on the share price. And that's why, like I said, over the last 3 years, it's important to give you that more longer term context. The stock is down close to 80%.
Yeah, and I think showing that it's not just going to be like the formula of Chinese stocks are on this run now. We're still seeing, some pitfalls within that economy, especially at start contracts when you look at Xpeng, which is crushing it on the year, up 85%, which is just wild. But appreciate that, George, and appreciate the insight into NEO with, I think, some clear movement to the downside on the back of that miss. And Diane, before we go, I say this hesitantly, but we do look like we're coming
I'm going
back
to send this to Stormy St. Daniels. She's going to get tired of me.
I think I can. And you're looking at blue chips higher right now as well. The Dow better by 40 points less. We'll see if we can hold this up a 10%.
Why did you send me that?
S&P 500 still trying to fight off the mat here.
We need the Apple right now to strengthen a bit. Maybe NVIDIA pare back some of the session losses, then we'll be in the green. But appreciate the co-hosting hour with you, of course, Diane King Hall. Joining me
How
today
dare
on
you?
Mission Investing. Thank you all for tuning in today and this week. We have the watch list coming up next.
Why would you send a woman that? But why would you send a hooker that?
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account
Okay, Jimmy,
is linked to your Schwab One
you can do it again now. You missed a great trade right there. Can't believe I called that out and didn't take it.
Between your accounts is easy. Cash moved to your brokerage account is available.
You know what I mean? I waited for that. It reminds me of this video. I'm going to show it to you if I can find it. Hope I didn't delete it. I probably did. Yeah, I think I did. Yeah, it's gone. Oh, Jimmy. No, I didn't. It's right here. Larry. Okay, get ready.
I waited all day for you, Larry. I've waited all day for you. That was my first cat.
Let's watch that again. You ready?
I waited all day for you, Larry. I've waited all day for you. That was my first cat.
I waited all day for you, Larry. This was my first catch. Oh, that's so clever. Larry, I waited for you all day today. I can finally eat. I can't wait to take you home and eat you at the campsite. Larry, where did you go, Larry? Do you not understand? That was a $600 trade, $700 trade right there. A contract. And I had my finger on the mouse to buy it. Oh, hey, Sue's back in Tesla. Hey, Sue, where are you now? Why did you leave me here all alone? Can't you remember the day that I bought you some dinner? Hey, Jude. Okay. Jim, you've had way over your limit today. There you go again. Just watch it go up. $7.20. Now it's at $8. I might have got lower than that because I had to pull up Larry. He probably did. 690. Yeah, it probably did get down there. 660. Now, is it going to hold or is it going to drop? That's the question. It is now 105, so it's 205. This is usually when the market starts kind of act a little strange. Let's just wait. I don't want to ruin a good thing today. I think I'm going to go into the kitchen and grab an orange and wait for it to hit the 200 here. Okay, prepare ye in the name of the Lord. Yoko, prepare ye. Let's look at the SPY. The SPY's got a head and shoulders right here. We got a double head and shoulders, so let's do it at the head and shoulders. Jimmy's getting ready. The crowd's going wild here in the sports arena. Strike is 56.60 at 5.80. This time I ain't passing it up. It looks like it could drop more, but we got another head and shoulders right here. We got two of them. Larry, don't dip on me, Larry. Come on now. 5.40, 580. I can get out of it right now. $6.50. I can position myself here. I don't know. I'm not liking it. I hear crickets. Yeah. There we go, 650. I'm going to get out of it. $670. I'm done. Too late in the day to be playing around. Out at 670. I take it. We're at $5 now, $4.90. You're at the shoulder line of the inverse head and shoulders. What, hit the 200? It could. I'm going to take a little break. I'll be back.
Just getting started. Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
Moving averages and oscillators.
You can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Ugh. Can't believe I didn't take that one earlier. Oh.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pedalidi. Glad you're with us. The Dow right now back down 49 points. It was trying to give it a go. Saw a glimpse of green. Hey, it's a busy afternoon. It's triple witch. Options expiration of many of the contracts for equities. A lot of money on the table. Options corner now. We have unusual options trades that we're seeing throughout the day. Tom White is here, host of Fast Market on Schwab Network, and he's actually watching some real trades that he found throughout the day. Just a big picture, though, on this week that was, could be the 5th week of selling for the S&P and NASDAQ.
Yeah, S&P 500 slightly positive now, Nicole. Hoping to snap that 4-week losing sessions here, losing weeks in a row. But I think one of the key things is this is headline-driven markets, right? We had headlines that came out during our show earlier today, during Fast Market, that basically said, hey, Trump might be flexible on some of the reciprocal tariffs, and that immediately put a bid into equities. They came off of their session lows. And then there's some more commentary on a potential working on that ceasefire between Ukraine and Russia. So a lot to kind of digest here, but I think traders, investors should be wary of the rally back that we've seen, because I still think that there's some heavy sentiment to the downside here. Maybe rallies continue to get sold, but this is a nice start and a little bit of a reprieve, because it was getting pretty ugly earlier on in the session with the S&P 500 down nearly 1%.
Yeah, understood. Absolutely. And you're right. You certainly encapsulated what happened here on Wall Street over the last couple of hours. It's been very busy and volatile, but we've gotten somewhat used to that headline-driven market. Let's take a look at Meta, which that is well off of its highs of $740. In fact, right now it's at $594. You found a bullish trade, right?
Yeah, Nicole, this is the only Mag 7 name that's actually positive so far in 2025, even though it's pulled back nearly 20% from those all-time highs, was in bear market territory earlier this week, and earlier this week almost touched its 200-day simple moving average. It has not been below its 200-day simple moving average for over 2 years. So maybe a level of support hit. You're seeing nearly 1.5% gains here today. A little bit of a rebound in there. And remember, just in mid-February, or beginning to mid-February, we had 20 sessions straight up in Meta Platforms, a new record before pulling back, and now basically in bear market territory. So it's not immune to the market moves here. Their Facebook AI models reached a billion downloads. That didn't really stop the decline, but we're seeing a little perk up here today. You have to start wondering about the advertising business, because they rely, for 98% of the revenue is based on advertising spend. How much of a pullback are we going to see? Is it going to be more performance-based advertising that Facebook and Meta Platforms relies on so much, reaching 3.3 billion people on a daily basis? That's going to be, I think, concerns going into earnings at the end of April. But we did see some bullish activity in here early on in the session before the stock was actually positive. And this was out in the March 28th weekly option. So really short-term positioning. Trader bought over 8,000 of the 620 strike calls. Paid an average debit of about $2.60 early on. So that break even is 622.60 over the next 7 days. That's about 4% above the current share price in there. So yeah, this trader's looking that, hey, maybe these gains are going to get extended into next week and continue to rally. You think that, like with the stock trading under 600, that 622 level for that break even would be hard to reach, but on a percentage basis, it's only about 4%. And Meta Platforms could have that kind of rally in one day.
Right, understood. We're going to be talking with Andrew Aarons later in the show. He has Meta as one of his picks today, so we'll cover that a little more too. Okay, thank you for that. Next up, we'll take a look at the airlines and take a look at Alaska Air in particular with a bullish call. This, as we've heard from others like Delta and concerns about domestic travel, but maybe Alaska Air has a little bit of a different picture. Let's hear the bullish call here.
Yeah, they're lower today, down about 18% so far this year. They pulled back. You can see that steep decline there on the right side of this chart, down over 30% from those 6-year highs that we reached just last month. So, but we've seen that big sell-off in all the airline stocks, a lot of the cruise lines, a lot of the travel companies, as those sentiment and confidence numbers from the consumer are starting to weaken here a little bit. The tariff headlines negatively impacting some of these areas that did really well. Remember, the airlines killed it in the the last half of 2024, basically straight up parabolic moves before the downturn that we've seen over the last 5 weeks or so. Last earnings, they reported better profitability, significant revenue growth. They expect that to continue. Now they've got Alaska and Hawaiian and Horizon Air under their umbrella at this point, and they're expanding capacity to different cities, adding more international flights also. And we did see some unusual option activity in here. Well, I think this trader's expecting over the next couple of months that we're going to see some more gains in this stock. Trader bought 6,500 of the May 55 strike calls, paid an average debit of about $3.10. So that break even at 58.10 over the next 56 days is about 10% above the current share price in there. Call volume 10 times normal daily average volume that we've seen over the last 5 trading sessions. So we typically don't see big outsized positions open up in this particular name. 86% of the call volume today is just on this one trade by this trader. But yeah, somebody expecting over the next 2 months that we're going to see some more gains for Alaska Airlines.
Yeah, and I saw Citi has an $81 target, UBS has a $75 target, so they're on board with something a little more bullish or higher than where we are now. And last but not least, big news for Boeing today, a winner today. It's certainly helping to prop up Wall Street. Imagine the numbers that we would have seen earlier today at our lows without Boeing and its big contract. So potential here. So let's hear more about that.
Yeah, particularly helping the Dow out today. Shares are up nearly 6% today. Now positive, actually, on the year. It's been a choppy couple months here for the aircraft maker, up 33% from those lows that we saw in November. So pretty nice bounce back for this company. And even before the announcement today that they were awarded that contract to build the next generation U.S. Air Force jet fighter, they already had some positive news coming out where they, the new CEO had basically come out and said that, hey, production's starting to increase. They're continuing to cut costs. Their debt load levels and cash burn aren't as high as they had been. So there were already some good news items on Boeing over the last week or so. They're tracking to expectations, ramping up the 737 MAX production, 787. Those are coming basically in line with the production levels that they had before. But yeah, definitely good news and a bonus for Boeing here. And I think traders trying to take advantage of the news, because early on, when this first came out, the stock only jumped about 2-3% or so. And that's when you saw a lot of call activity in Boeing. And one that stuck out to me was in the March 28th weekly cycle that expires in just 1 week. 180 strike calls. Trader bought over 6,000 of those. Paid an average debit of about $3.50. So the break even of $183.50 over the next week. We're basically just above that current. That break even is just above the current share price in there, with call volume, not surprisingly, about 7 times normal daily average volume that we've seen over the last week of trading. So yeah, call buyers piling in here on this news.
Okay, well, it's pretty amazing because it's big news. It got the stock up 5%. Exciting. They beat out Lockheed Martin for the fighter jet deal. You know, they've already had some what of a rocky road relationship with the president and the administration. So the best performing stock in the S&P 500 this week. Okay. That's pretty great. Thank you, Tom White, for Options Corner today and every day. We takes a look at real options trades today, looking at Meta, Alaska Airlines, and Boeing. Coming up, Corey Johnson is here. He's standing by. He'll examine the impacts of Doge on the market, what it means for the tech sector. We'll look at some of the tech stocks that are in focus. Next on the watch list.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. And I'm so happy to say Corey Johnson's here, Chief Market Strategist of Epistraphy Capital Research and host of the Drill Down podcast. Thanks for being here.
I'm glad to be here. You're here all the time, but I always, it brings me back to the days.
Yeah, it's kind of
this place, New York Stock Exchange,
yeah. We have down arrows, but we have triple witch today. We're going to have a heavy volume close. One of the guys was saying MSCI rebalance. I have to double check on that. But the point is, we could see for the NASDAQ, 5th week of selling.
Yep.
Right? What do you make of it?
Change in sentiment. There's absolutely a change in sentiment, and I think it's coming out of Washington, D.C. I think that what's happening with Doge and what's happening with tariffs has got people spooked. It's got consumer confidence is down. It's got fears about inflation are hitting multi-year highs right now, and I think the market's taking notice of that.
So the confidence is something that people are starting to say there's soft data and hard data, and that while sentiment is showing weakness, people are still spending.
Yep. So that happens until it doesn't. But we know that the reason we pay attention to consumer confidence numbers, the reason we pay attention to the flawed University of Michigan study of consumer confidence and expectations of inflation is they have shown over time that spikes before the confidence falls and before it shows up in sales. And it doesn't always turn into, say, a recession, but it could lead to a slowdown. Certainly, the risks are greater than they used to be, and those numbers are starting to point to it. You could have said tariffs raise the risk of inflation, at least in the short term. Okay, so that's a concern. It hasn't happened yet. Then you see these bad numbers about confidence come out on top of what we know about the tariffs, and then it starts to make some sense that there's more risk out there than there used to be.
Did you feel like the tech spending or tech focus from the administration is changing? I mean, when we first came on, we started to hear about the consortium of companies that were working on AI, the hundreds of billions of dollars that were coming our way. There was a lot of excitement, no?
So I actually spent a couple days this week in Washington, D.C. with tech executives, CEOs, talking about what was going on in Washington and how it's affecting spending.
Oh, okay.
And it was really interesting. I talked to the CEO of Elastic, software company, really interesting software company that does search and security and observability, and has been working vectorization of databases long before anybody could spell AI. And they're seeing that some customers that were really hard to get into in government are now talking about efficiency in ways that they weren't. Everyone's always been for efficiency, but they think they've got sales opportunities where they didn't. Even 6 months ago, just because things are shaking up and people are considering doing things differently, when companies like Booz Allen and IBM and others really had a lock. Might be good. It might be, just the same dollars being spent a different way. And it might even be good for efficiency over the long haul. But I think it is going to create some opportunities for some companies where they didn't have them before. I mean, we know that Secretary Hegseth has gone into the top biggest contracts with the Defense Department and asked them to look at those contracts and see if they're all should be as big as they are, and that might make room for other companies to come in.
So at this point, I know a lot of people are investing when you talk about defense. I mean, a lot of people are looking at the new Mag 7 of Europe, which is defense stocks, right? Some of those defense plays from, and I mean aerospace and defense. I mean, from Europe, we're seeing a lot.
What I've been hearing also is there's a lot of European money now not looking to the U.S. to invest, and even in tech. That there's European money that's concerned about what's happening in the United States right now, concerned about tariffs, and maybe seeing better opportunities in Europe. I don't know if they're right, but I think we're starting to see that some of the money flows.
So, I mean, tech is your wheelhouse. You love tech. I mean, you've been fully immersed in this.
Love it, hate it.
Now that
surrounded by it.
Down, and look, you're hearing from CEOs firsthand that there may be more opportunity and growth going forward. So you're not seeing terrible recession or death of tech.
The AI spend is real, and it's increasing, and we're seeing it across all kinds of companies. We're seeing more and more companies talk about the real implementation of AI. We've seen these amazing announcements from companies like Oracle, where they're out there talking about spending $100 billion, maybe $500 billion. These are just unimaginable numbers.
What has been the most surprising thing in tech lately to you? I mean, because we had the NVIDIA conference, we know iPhone sales aren't that great. We just heard some breaking news about the UK and maybe the digital tax changing somehow. That might be good news. I don't know, I heard Kevin Green talking about that. I didn't even get into that yet. But little by little, Meta is the one that's higher for the year out of the Mag 7. I mean, was there anything within tech that really sort of wowed, knocked your socks off?
I think we're going to see with AI, the chips are getting all the attention. So NVIDIA is getting all the attention. AMD is trying to fight with NVIDIA to get some chip sales in there. You've got all the hyperscalers starting to build their own chips. But I think we're going to see more companies further down the line that start to get interesting. It was hardly noticed last week, except for me, because I own 2 of the stocks involved. But Amazon made an investment, big investments, hundreds of millions of dollars of investments in 2 companies, Fabrinet and Applied Optical Electronics. Right, Applied Optical Electronics does not roll off the tongue easily because we don't think about it much. But it's a company that makes optical connectors that work in data centers. Used to be used for long-distance telecommunications, and is as well, but also for data centers. They needed bigger, faster factories really fast, and Amazon bought shares of these companies because they are so embedded in the systems that they're building in their AWS data centers. I think we're going to see more ancillary plays, if you will, in AI that go beyond the chips, like Fabrinet, like Coherent, like Applied Optical Electronics. You're going to see a lot of other companies come up out of the woodwork.
Yeah, that's really interesting. I mean, remember when Amazon was just books?
Once upon a time.
So, I mean, it just shows you how the evolution here and what is happening.
When there were a lot more people down here.
Yeah, but I mean, a lot of them are in the inside of the booth.
Yes.
You can't tell, but it's true. It's less. It's a lot less. That being said, I was thinking about our DeepSeek day, and a lot of the tech-related folks that I have on, CEOs, they don't seem particularly worried about DeepSeek. They actually think it brings up the entire group.
There's 2 things about DeepSeek. So one is, it looks like they used a lot of data from other services that did in fact need all the compute that DeepSeek then didn't need. The second thing is, AI models are always going towards more and more efficiency at really dramatic rates. That doesn't mean we're going to use AI less. It means we're going to use AI more, and it means the demand for AI is going to be greater, and the building out of data centers is still happening.
So now, do you have stock picks? I mean, are there names that you like that you think are better plays?
I try not to give stock advice, and I should say, I mentioned Oracle as well, something that I own.
I mean, is probably well positioned, because some of these names have to be oversold. And Oracle's been doing a lot of business, and may even be the TikTok partner.
Indeed, well, that TikTok auction is maybe happening behind the scenes somewhere, and Oracle certainly is a name that's come up. One of the reasons is because Oracle would like to have TikTok locked into all of its data centers as a customer. It already is Oracle data centers in a lot of places, and I think that's one of the reasons Oracle's looking at that. But I do think we're going to see an expansion of some of the names out here, both big and small, in the world of AI.
And I think about the different parts of it. I mean, first of all, data center growth and energy, that's something. Autonomous vehicles.
PCs, I don't know, we've had some slower PC sales, and telecom, mobile, handsets, iPads, things like that, wearables. I mean, there's sort of the gamut, right? I mean, do you see any slowing in any of those, really?
I think the next thing that we're going to see in AI is we're going to see a lot more AI agents. The hot buzzword in Silicon Valley right now is agentic. Everything is going to be agents of AI. So you've got a process that's going to happen. You don't have to go to ChatGPT to ask a question, then take the question out, the answer out, and put it where you want to put it. What's going to happen is these things are going to look for certain pieces of information to come out. It's going to react to them in a pre-programmed way. The agent is going to actually do the work so the human doesn't have to get involved. That's going to be really interesting.
So we're all going to be using that. I mean, they say if you're not using AI every day, you're behind.
Are you?
Are you?
I'm using AI every single day.
I use AI sometimes, but I'm not using it every day.
I'm using it
And
constantly. I'm trying to find ways to
What are
do
you doing
better.
every day? I mean, if you were me and you had this job, what would you be using every day?
So it's actually
Tell
great
me 3 things. Or I would be
for writing. I can find it a wonderful tool. It's also going to be a wonderful tool for research if you know how to fact check well. But it helps you get a situation a little bit faster. I've also taken I spend a lot of time in Microsoft Excel. I've taken all my Excel models through different AI engines to try to get better, tighter formulas.
Right.
My predictions on earnings per share are the best they've ever been in my life.
Really? That's great.
I wish they were this great when I was running a lot more money. But now I've got these great things, just because my formulas are better.
Yeah, but in the end, when people see the beaten down NASDAQ or triple Qs, would you say it's buying opportunity? I mean, do you feel, I know you don't say
over the short term, who knows?
You feel like
I think there's more to be worried about right now with the economy than there was 3 months ago. So it makes sense.
all right, good to see you. Thank you so much. Corey Johnson, Chief Market Strategist of Epistrophe Capital Research. Thank you for being here.
Glad to be here.
Still ahead, Andrew Aarons is standing by. He'll take us through a couple of stocks that he thinks should be on your radar in this current environment. The Dow right now down 71. We'll be right back.
Back to the 200.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies.
Okay, we're back at resistance again. We got a shrunken price, see, like they were. Up here last time they were at 1,200. Now they're only at 550. The 5640 puts. What time is it? 1:40. $3.20. Let's see if I got it right. I feel like I'm taking a risk here. Am I sure about it? No. Not at all. Come on, baby. If they don't work here, I'll get right out. Greek yogurt, vanilla bean, the greatest stuff I've ever ate. Come on, baby. No. Wrong position. It's 1:44. 2:44 Eastern. A few more, give it another minute. Drop. Do or die. That guy looks like a creepy dude.
You could buy Amazon at a 15%, sell off or more. This has happened 5 times in the last 3 years, and every time the stock rebounded, it made an all-time high. So, buying Amazon, looking at stocks like Meta, and looking at TJX right now, I think these stocks are going to be a lot higher.
TJX.
There was a lot of thought that maybe AI spending would slow down, or the validity of it all. I mean, where do you think we are in that revolution, as Dan Ives calls it? I mean, he's so bullish on AI in general.
and you have some names that are AI related here. Where do we stand in tech overall and AI?
Well, I still think
There's
obviously
410.
we're early on in AI. I mean, you know, if we were a baseball game, maybe we're in the second inning. So
Okay, I'm getting out right here.
Runway here with AI. I think the spending is just going to
440.
People are going to start to notice AI.
What'd you think about that one?
A lot more, and all this is going to
440 and 5.
The fact that we got a sell-off here,
Boom, I'm out.
I think it's again a great opportunity, and you know I would be buying some of these stocks at these levels because I think they're going to be a lot higher towards the end of the year.
Yeah, Andrew Aaron, great to see you, founder, partner.
Out of $5. That's 2 contracts.
Thank you.
A lot of people would welcome your ideas, that's for sure. Thank you. Still ahead,
Rob, give me an A+.
to discuss all about Micron, the earnings, AI part of the deal here, and the outlook. We'll be right back.
Oh, that was beautiful.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are designed
What'd you think about that, Randy?
knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab.
Carl's Way is the best way.
Exactly. I can invest and trade on my own.
Let's go.
And I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
He was in panic mode there for a second.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round.
Jimmy gets an A+.
Even when equities markets are closed, all on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools,
Affirmative.
curated education and insights, and trading specialists ready to help, however complex the strategy.
Don't you agree, Mike?
With a wider range of opportunities,
Affirmative.
you can trade brilliantly.
Yay.
With Schwab.
Welcome back.
Why did I take that trade? I just woke up from a small nap. Can anybody tell why I took the trade?
That does not compute.
Spark says, is it luck? Well, we had a red doji a red spinning top, and I took it right before the 3 black crows. We had red candle, we had a bear candle, boom. See the red candle here? I was quite impressed. I did get lucky on that one, I think. Now we're back at the 200. God darn. They're back at 510 now. You're looking at the calls.
Micron, they have a lot to prove, no question about it, but I think they have what it takes. Certainly their track record right now, based upon what we just saw from their fiscal second quarter, I think there's an excellent outlook for them.
So would you be buying this stock, Andrew, at this point now, especially when it's down 8% today?
No. So again, I think some of that overbought or the positioning that sort of got extended, particularly the part of hedge funds, has to burn off, and it's going to take a little bit of time. We're also in a tough market, so I think you can afford to wait a little bit. There's reasons for it to be encouraged, right? The gross margins were weighed down by their legacy business, and the company's obviously focused on the higher margin HBM solutions for AI GPU platforms, and so HBM shipments in the quarter were up 50% quarter over quarter, and that's encouraging. So we will turn to this name, but we're going to wait for it to come in a little bit, and we suspect probably in the next couple months it'll be ready for us.
And partnerships with NVIDIA. Dan, what say you? Do you think that Micron's a buy here?
Actually, I think it is. And the reason I say that is based upon the long-term outlook here. Anytime you start to get involved with timing the market, it gets a little tricky. Do I think Micron is going to continue to go up? Yes. Will it go down and go back up, and are there going to be some turbulence? Absolutely. But for me, this is a buy now because it's going to be a long-term hold.
And look, I mean, they are seeing demand, there's no doubt, while margins were cut and reduced more than folks thought. Dan, do you see more for AI overall? Is this not just a Micron story? Are there other names that you would be buying too?
Oh, absolutely. Look, I think that the market and where technology is going is right in this direction. I mean, this is the future of the U.S. economy, if you ask what I think here. So, a lot of people have talked about NVIDIA and whether it's overpriced. And I also think NVIDIA is a buy. I think Palantir is a buy. I think that these companies in the long term are going to continue to go up. I like the industry. I like the sector. I'm all in on this.
All right. Andrew, is there anything that you are saying is probably a buy just yet? Because I know you are worried about the big picture here. And even though Micron's been beaten down a bit and maybe has a good outlook, you're still just not ready to buy it yet. Is there anything that seems a little more close to attractive to you?
Yeah, so I think Dan's alluding to the fact that there's been no real change in AI CapEx spending. As a matter of fact, I think it's ticked up a bit here in the last couple weeks. Jensen Huang at his keynote address earlier this week at the GTC conference did an excellent job sort of showing why DeepSeek's reasoning model leads to greater increase in density and more need for compute. That does fit into Micron's wheelhouse. The gigabytes are only going up in terms of how many they're required on the next version of the GPU platforms. And they're going up by about 250% ultimately over the next 18 months. So there's an opportunity there for Micron, and there's also an opportunity as maybe you run out of clean room capacity, DRAM production goes down a tiny bit, and inventories go down, and then the basic overall DRAM business improves as well. So while I am picky about price, I think this stock fits into the larger universe of names we want to buy that include NVIDIA and Arista and some other names in AI infrastructure.
All right. Thank you both. Andrew Graham, Dan Geltrude, thank you. Good to see you. That's going to do it for us here on the watch list. It's going to be a really busy close with, you have rebalance, you have expiration.
Wonder how many jets I can build.
For a wild close. Download our free
20 billion. Might go back and read that.
every day at 11 a.m. and 2 p.m. Market on close with Oliver Rennick next.
Winter could eventually, okay, Boeing and Lockheed
Schwab Bank Investor Checking.
F-22 replacement contract.
Highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award.
Next generation fighter contract worth at least 20 billion as soon as Friday.
Investors like you with unlimited ATM fee rebates.
Despite concerns of budget constraints and shifting proprietors.
And enhanced security features to keep your money safe. Also, because your Investor Checking account is up one.
The next generation F-22s. Raptor plane's design remains closely held secret. Wonder how many that would build. St. Louis, Missouri. Whoa. Well, there you go. Now I'm really upset. $6. Oh! So left another 200 on the table. never fails. But I mean, I'm happy with 360 in a minute or two.
They were. We've got a nice little ramp from the intraday lows, but we're still red, so it's really thin ice here. Bulls are skating, though, at least. Getting
Thin
by,
ice.
Not falling apart. Boy, this morning was looking really
If I was to get
ugly.
calls,
It
it'd
was
be
looking
here.
so ugly this morning. So to get out of that mud a little bit and get some momentum.
The 56, 55s at 360.
S&P 500 still struggling under 57, but at least well up off the lows for the session, which were at 50.
But no, we can still drop.
So that's a almost 50-point rally right now, and it was earlier about a
I'm gonna wait.
60-point rally off the lows. So we are trying to
Damn.
make some progress here, trying to prevent a breakdown further in markets after we touched the week lows earlier. So it's just been a major battle. It's actually quite dramatic. I've been quite entertained watching the market these last 2 weeks, and what's interesting about it is the market's
What?
kind of gone nowhere for the most part. A lot of
Did
things
I
are
miss-
moving
oh,
down there. This radar has been all yellow. It's the most interesting all yellow market.
Oh my gosh.
that I can even think of.
Oh, them were the calls.
There's so many fascinating,
I was gonna say,
happening
wow.
underneath the surface. One of them that was really important was bonds. So today, let's start with the macro discussion.
They went to 1800.
1,000-foot view to help all this make sense.
The puts.
Two key critical components of the analysis here over the last week that I offered, which was you want to see the dollar firm up, you want to see yields firm up. And that might seem a little contrary when you're used to rooting for a dovish Powell, but when you look at last year, the whole point of a dovish Powell is to support the economy,
56,
that should be positive.
31,
So the fact that
or
we got
40.
up today, after bonds were rallying early, Treasuries have been taking the bid from stocks down. So Treasuries loosening up throughout the day was a sign that we were going to get some risk on. And the fact that you do have the 10-year up right now, I think, is good. Now, the chart still is very much vacillating, going back and forth, and we're not too far off the lows for the yield, down near that 4.2% for the 10-year that you're looking at right now, just below it at 4.17. That's where we were yesterday. And then the 4.16 low from about 10 days ago is still not too far off either. But the fact that you're not making lower lows in yields means the market is starting to relinquish some of that growth concern a little bit and letting some of the positive economic data, some of the positive tone from Powell release a bit of that tension that's been in bonds, where you can see on the left side of that chart, obviously when stocks were under pressure at the beginning of this month, people were buying bonds hands over fist. So the fact that now they're slowing down the bond buying, even if we're not selling that much, 10-year yields are still off the highs, that was kind of a first step to setting the macro stage for strength. The other one is the dollar, too. You don't want to see the dollar falling off a cliff. There's no good situation, really, in which that happens when the strong dollar has been correlated to the U.S. economic outperformance on the global stage. So, dollar firming up after a pretty accommodative Powell also tells us that the reaction function on the macro side right now to an accommodative Fed and a dovish Fed is dollar up, yields up. So that's good. That was another sign that things are stabilizing. If you look at the chart of the Chinese stocks, some of the international trade is fizzling a little bit, and that's probably a bit overdue. I think there's a strong case to be made. We've heard it from many of our guests that the big shift into international and China makes some degree of sense, given the valuation spreads that favor international stocks over the U.S. on a pure valuation basis. But are their economies really taking off at a fast enough clip to catch up to our own? It's still powered by some pretty good AI innovation, et cetera. Whole other conversation to be had there. But the fact that FXI is now back down to that one-year high also just shows a little bit of cooling of that narrative too, which is constructive. Doesn't mean it's over. It's a pretty nice move in China still. But the fact that you've got some key tech names here firming up, that's what really brings it home. You've had Tesla green. Yesterday I pointed out the chart that's making that triangle for Tesla, which often precedes big moves, and the fact that we're up 4% today suggests it might be an upside move. Again, the MAGS chart, the Tesla chart, they don't look good. The year-to-date chart of these are very, very weak, hanging on by a thread. But at least they're hanging on, and that's the message here. Tesla's basically the same way, except it's a little bit more buoyant, where you can see that last candle. This is the MAG 7 chart, but the last candle on Tesla there perks up a little bit. So they look very similar. If you go back and forth, they look real similar. You can almost barely tell the difference.
Yeah, start pumping Tesla now.
And that last candle is encouraging. Jenny Horn's with me, host of Next Gen. I'm so frustrated by Micron, Jenny, because I thought that was going to be our hero today, but it's not getting any love despite the market firming up.
No, there's zero today. It hasn't gotten any bid today throughout today's session, and we talked about it this morning. I found it difficult to find what we were clinging onto that was so negative. It all has to do with NAND and their flash supply, and then right now that's weighing on their margin, the sign of erosion going forward. But it was difficult to understand what the street didn't like. Guidance was strong, top and bottom line beat. I mean, nothing would indicate the pressure we've seen throughout today's session. I think that you just have to focus on like what the company does, where it's expected to grow. High bandwidth memory right now is not a growth engine, frankly. Micron consistently shows us that, despite the fact that, yes, on a year to date, I've been saying for quite some time, it was outperforming the rest of its semiconductor peers, but it just seems like NAND still has supply constraints.
Maybe a little bit of reset given the strength of that stock, but at least it didn't bring down the group today. So the semiconductors SMH down 90 bips. You know, that's a stone's throw away. NVIDIA has been under pressure all week, basically.
We are 7 minutes past power hour.
The fact that we had the big ones firm up, I guess that's an okay trade. Micron getting blasted, a less important stock. Apple, Amazon, Alphabet, Meta, Netflix, Tesla, all higher.
I think that the most important thing there, we've just given Apple its weighting, like specifically looking at the tech sector and some of its strength on the week. Apple is right now expected to post a modest, but at least a week-to-date gain, 0.75%, and modestly higher again today. But I think that's what's holding us up, because if NVIDIA
FedEx new high.
At the pace it was, I don't think we'd be closing out the week positive in the S&Ps, at least as it stands right now. NVIDIA's story, I think there was just too much expectation into GTC, wasn't enough to enthuse. Nothing at GTC would give you warning. But right now, there is still a very wide gap, like with names like Tesla and NVIDIA that rank among the top. When you see the gap between right now the street's median price targets and current prices, I saw the most interesting statistic that right now 95% of S&P 500 stocks, the median analyst price target is well above their last trading price. So that just shows that there's still an enthusiasm and an appetite for these stocks, at least from the sell side. It just isn't being reflected necessarily in the gains.
Okay. Look, I think that at this point, as long as we are not deteriorating on these charts, it's a small victory. There's still a lot of red out there, but you know, a couple of those big squares very key. And to your point on Apple too, the news has not been great.
Nope.
Reshuffling of their executive board on the AI stuff. There were reasons. I think GTC was also a disappointment too. Jensen kind of giving this mea culpa to Quantum kind of seemed a little bit like, well, I don't know, kind of like a little hyping up the sector as a whole.
It seemed
like you hear crypto people do, you know?
Right, where he just wanted to say what like the bulls wanted to hear.
100%. That's kind of my, that's a gut. I don't know, maybe a bad read, but that's kind of my read.
No, he did. But the fact that he was like, I misspoke, it was just like a bit more disorganized than we're used to hearing from him. He likes to speak on like innovation, tech, technology.
Hey,
June.
Yeah. He definitely has an audience now, a big one for sure.
He does.
But the fact that GTC kind of didn't bring us anything new, but at least NVIDIA's close to still levels we're familiar with, no new lows. I mean, these are like the smallest victories this week, but as long as we don't fall apart to the close, at least it keeps us in the game, bulls, for next week.
5640s are now at 320, 620.
Disappointing charts as of late. Tesla.
630.
You look at Tesla, you zoom out, and I know
650.
That there was such exuberance going into the election, and now, sure, pacing for its 9th losing week, but I also just
I'm not in them, but they're there.
10, 11 consecutive winning weeks, and we saw that for quite some time.
There's 280 left on the table.
It just basically takes us back
Oh,
to
God.
2 quarters ago. And it's like we forget that we're still well off lows touched just a year ago.
Almost 400 on the table I left.
At the election for Tesla, a little bit below. Like
There it is, 400.
Winner though this week.
It's $7.
What's the, you know, again, I don't want to be too dismissive of this. I kind of like cap our Boeing conversation usually to like 60 seconds.
750. God.
I know, and I was even looking like it's weighting in the industrial index isn't even that significant. But okay, hey, at least it's expected to be our winner of the week within the S&P 500. Scoring a contract to build the Pentagon's next generation jet fighter, beating out Lockheed Martin. I actually think that move in Lockheed today in reaction lower is just as interesting. But the deal is expected to have pretty big implications for their bottom line, as we do know their defense unit and the jet makers' strained relationship has seen some degree of hopeful, reconciliation with the Trump administration. The Pentagon will want the better jets to replace the F-22s, which is a Lockheed aircraft, and fly alongside.
Yoko, I think, did you have a good week this week, Yoko?
It's actually a pretty cool story as far as Boeing is concerned, but I think that it illustrates that selection of Boeing over Lockheed is a stark tone shift.
Big deal, yeah.
It's about time that Boeing got a bid from
Paging Yoko, did you have a good week?
The biggest, basically.
Right.
It should.
It could go lower.
It should follow, I think, that if you can make those
Damn it.
planes, you can probably make regular planes too.
So you'd hope and think.
Don't say that.
Cool. All right, Boeing, great week. We'll see if the rest of the stuff can hang in. Thanks, James.
They went to $8, left $600 on the table.
Around in the tech category, but helpful. Jimmy Horn hosting Next Gen. One of the other things still happening on the session, of course, is triple witching. Let's get some options expertise in here.
I made a gross error.
For trader at Simplex. Jason, what do you see with 50 minutes left here? Is there going to be wacky options expiry action into the close?
You know, it looks to be an interesting time. All year and, over the last 6 months, Fridays have been a really bad day for the market. Mondays and Fridays statistically have been down days in the market. Now we've bucked the trend as of late. The last 3 Fridays we've closed up. There's a chance today if we can make a run. We're down 23 points now, but if we can make 4 in a row, this would be the first time since August that we could have 4 straight consecutive Friday positive closes.
Golly.
That's a nice sneaky
What?
That's a nice sneaky little optimistic stat there, right? We kind of forgot.
I'm glass half full, so.
I have been too this week, but then we keep draining the glass. We were at lows of the week earlier this morning, so that's quite a comeback.
Yeah, it seems like the sentiment can change, in a flash. As long as, the word tariff isn't mentioned, the market really has a chance to gain some footing and to have a chance to rebound. And honestly, until a few hours ago, tariff hadn't really been mentioned all week. So the market's had a chance to stabilize. It definitely was a little oversold based on a lot of the metrics, whether you look at RSI or any of those statistics. So it's had a nice little rebound.
All right.
What has?
Looking forward for indications of sustainability. Is there a clear path forward yet? And how much does how we close impact how you think about next week?
In my opinion, I think if we can reclaim at this 5710 level in the S&P, it gives us a lot of headway into next week for a push higher. There is some concern. There is a large customer position. It's the JP collar trade that goes on. And there is a lot of negative gamma concentration down in the March quarterly expiration around 55.5. So should the market turn lower, there could be some panic next week. But we got to see where we go from there. And it's a long ways away. It's still 100 handles away.
Okay. So right now, how do you describe it? Are we
boom, baby
bound? Is this consolidation, or do we technically have to go back to the highs and still say bears are in control?
Got some hollow candles coming.
Who's the onus on right now?
In my opinion, I think the bears still own the storyline.
Okay.
We've had this monster rally over the last 2 years,
right back.
all the way through the second half of the month of February, reaching all-time highs. VIX was trading 12. There was a lot of capitulation. There was no fear to the downside. And then really quickly we saw institutional hedge funds just put their hands out and sell all the tech stocks. That was a big drag on the index. What went from a huge...
You saw that, huh?
When the tech stocks were rallying for the index, all of a sudden when there was a bunch of sellers, we saw the drag, and protection to the downside became really cheap. With the 12 VIX and with a constant lack of fear in the market where any dip was just bought, buying downside protection became almost silly not to have. And we saw a lot of put buying in the second half of February, but then as soon as we actually got the downward move and volatility skyrocketed higher, we went from a vol surface in the VIX of 12 to 13 all the way up to the high 20s. Those people that had the puts were smiling, and those people that needed to buy puts, well, they became extremely expensive, and you had to be extremely correct on your timing, or else the theta component of it really just kind of made the trade a terrible trade.
Now, how much of that can reset if vol continues to come in? We're below 20, and VIX is actually down on the day, even though stocks are down. Does that give you some insight?
It does. Once VIX started going up, even when we made small retracements lower, roughly like 2 weeks ago, we would sell off 20, 30 handles, but VIX, would start at 25 and actually come in. I think people really starting to realize that the market is kind of just reset. Like, we're expecting these daily moves of $50 to $70, and if it happens to start down, there's a good chance we could rebound. So as this VIX does trend lower, I think the bulls have a chance to reclaim, even in the short term, the next 2-3 weeks, some momentum to push us higher. A lot of that will probably ultimately be decided by what the Fed decides to do. If we get a cut in rates, some of these growth stocks, some of these tech stocks, they might get a chance to really take a step forward and go back up.
Do you think it's an equivalent trade being short vol versus long stocks right now, or is one offering a better entry point for an expression of risk on, or at least less risk off?
Well, a line in the sand for VIX has tended to be 20. So right now I'm looking at it, we're trading 19.76, so just underneath that. If we can, sit here for a little bit, I think the volatility index has a chance to come in.
Okay.
Which gives us a chance to rally. So I do think short VIX, long stocks has a chance to really play out nicely over the next few weeks.
Short VIX, long stocks next week.
Maybe VIX can come down anyway, so maybe the trade there is just kind of sucking out that last bit of vol premium.
You're right. Short VIX might just be the trade outright.
Yeah.
Short VIX, maybe short a strangle in the S&P, as we do seem range bound in that like 56.5 to 57 double area. Those have been major resistance and support levels over the last few days that the market has. I mean, even this week we hit 57 double 3 or 4 times and immediately flush lower. But on the downward move, we found some support, we find buyers. So it might be a wide range, which is new compared to where we came from earlier in the year, where the daily straddle used to be $25. It might just be the daily straddle now just happens to be 55 to 60, and the ranges are just a little wider.
Okay, I like the short strangle idea in there too. Seems like kind of cut from a similar cloth. Like the thoughts, Jason, appreciate it.
Yeah.
Good analysis, helpful for us. Down to SIBO, Jason Coogan, right? And we have to get him in the studio. Chicago traders, love to see him. For trader at Simplex coming up. We're going to talk payments, fintech, with CEO of ACI Worldwide, taking a deep dive on a publicly traded business. It's had a pretty darn good year, from 31 bucks to 52.5, and stable in 2025, while the rest of the market's gotten hit.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
We have 39 minutes left.
All right, let's take a break from the market action and go into a stock that's actually been quite solid in 2025 and up a good bit in the last year. ACIW is the ticker. ACI Worldwide is a business. Tom Warsop is the CEO, joining us. And on the back of a 61% 52-week gain in your guys' shares. Tom, thanks for being here.
Thanks for having me.
You guys also just had earnings last month that put a bit into the shares as well. Seems like you're beating most expectations. Introduce us to your company first. I know that you're in fintech, and it seems like you've got your hands in a lot, but it's a pretty big category. So what's your guys' strong suit?
So we're pretty straightforward. We're really a payment software company, and the way we talk about what we do is we power the world's payments ecosystem. And just to give you an idea of the scale, our platforms around the world, we do business in 95 countries, and our platforms around the world handle trillions of dollars, that's trillions with a T, every single day. And we do that at incredibly reliably. So very dependable and a very important part of the world's payments ecosystem, as I say.
A lot of the stuff I've learned about in the publicly traded world of fintech I interact with, and I don't even know it on a daily basis. Where might the average person interact with ACI that they don't know?
Yeah, sure. If you walk into a supermarket in the United States, it's a very high probability that when you pay with a card, it's going to go across our rails. If you're doing a wire transfer, if you are making a debit card purchase anywhere in the world, there's a high probability that our software is making that happen.
So then I would think to some extent, if your company continues to do as well as the market has assessed, there's a positive message about consumer activity, but how much are you tied to volumes and swiping?
Well, not as much as you might think.
Okay.
As a software company, we form part of the basic infrastructure.
Okay, so you kind of sell it and forget it to some extent on your end, but they're going to pay you recurring fees, right?
That's right. That's right. And it's imperative that that banks, our customers are banks, very large merchants, and billers in the United States, and they absolutely must have the ability to process payments, of course. And so volumes are good for us, but that infrastructure is going to be there almost no matter what happens with the economy.
Okay. A little bit of contraction in the revenue from the top line, like 5% from the year before. Tell me about that.
Actually, you're talking about 2024 or 2025?
I was looking at fourth quarter results, about $453 million in revenue, which beat the estimate. Wall Street had those down what, 4.5% from your prior?
Yeah, and that was expected. So what we did as
I had a good day, my friends.
We've tended historically to have a very big fourth quarter. There's this sort of human nature, get things done at the end of the year. And as I came in a couple of years ago, I said, I really want to change that dynamic. And I
Tweezer bottom with 3 white soldiers to the 50.
Deals signed earlier, and we were so we put a lot of focus on that. And we were very successful. So what you would see.
So today, about every trade I took was under $1,000. Some were even under that. And I took 7 and I made $2,000. So and I didn't really try. I even took a nap. Did get stuck in one and pulled it off. That one I had a little more than $1,000 in. $1,200. But I really like trading the SPX. I very seldom take a loss on it. But when I do, it's a pretty good one. But it's very seldom. Just so easy to read. It's always got volume. That's what I like about it. Today, like who's the one said the volume is one of the weakest witching days that I've seen also. Usually they're pretty violent. And this morning it just kind of felt like it was going to be like this all day again, all the way straight across, but no. Once I finally waited for the squeeze, it happened. It didn't take, I mean, it took a little bit, but it was nice. That was the one I was in trouble with. It just kept going sideways. I didn't think we'd go down much more, and glad I took it. It really kind of made my day, made the day go by a lot easier. So we got April the 2nd when the tariff comes out, and he's going to talk. I think he's talking to Xpeng. I don't think he's going to do them. I think he just come in here to show who's boss and get everybody riled up, get the market down a little bit, and then I hope they prosecute anybody that messes with these Teslas. I mean, these protesters are just way out of line. I call them Antifa, but I hear it's a lot of trannies doing it. You don't want to mess with a tranny, man. They're not, let's say, well, I want to say it, but I'm not going to say it. They're not pussies. Because they're not. They're dicks. If you get my pun. I have nothing against, I mean, I don't know. I don't have nothing against nobody, but you start messing with children and goats, I might look at you kind of funny. Oh, I got another half hour left. Trying to debate if I want to go out and eat or just kind of not eat. I had a good meal yesterday.
Fascinating.
Plus, I just had that yogurt. I don't know how long I was out. Felt like a good half hour or 45 minutes when I took that nap. Yep, we got the overhead resistance. One, two, three. Downward megaphone. Which means we could break out of it here the next time up, if we have one. You know, we heard people talking about the bottom this weekend, last weekend. Now I'm hearing about maybe a bounce. Always Clean Janitorial, Retail Traders. This is on a recorded phone line. May I help you? Did you get that, Charlie? If it's on more than 30 seconds, we got the location. Bam, we got it. Okay. We're going to find out if we break out here. No. I'm about done. Cody, did you learn anything today? Paging Cody. Did you learn anything new this week? Learn not to follow Jimbo. There we broke out. Anybody want to give high five to Mike? Please do. And give high five to Yoko. There was the breakout. Give high five to Rob. Give high five to Magnificent. Always learn something. Take profits. Yep. Got to take them when you see them. If you don't, you could be sorry for it. I'm always taking them, and I might cry and regret it, but as long as I make 1,000 a day, I'm very happy. Today I had 3 days of 3x, so I can't complain. $2x today. Retesting support. We broke out of the Jimmy thought we were going to do it. Back at support here. We got 20 minutes left. I'm not going to push my luck anymore. I'm done.
Stocks on this block because I love to get your takes, Phil. Good afternoon.
Hey, to expand on that conversation with Ross, my father-in-law, to protect himself, he bought a bumper sticker that says, "I bought this Tesla before Elon went crazy."
I respect that humor. Okay, that's pretty funny. I guess people should just say bought in whatever year if they feel they need to identify on one side of the aisle.
Right, exactly. So, but, looking at the commodities in the stock market, it's been quite a volatile week. I mean, with the Fed and everything, and we had that snapback rally, it looks like we're kind of defined between some levels. 57.50 would be a 38% retracement from that all-time high to this washout low. So that might be an area where people will start to look at some tactical shorts and reduce some of the positions. But really, it's kind of a gloomy outlook on the economy. Fed seems to be handcuffed. No one's going to know what, these tariffs are going to bring or what the ramifications of them. So there's just a lot of moving parts in the market right now. And I think that people have more of a defensive setup.
That seems very fair. The one thing I do see is gold a little bit weak today. And I wonder if after its big ramp, that maybe it was overdone. I mean, we got news from Ukraine that sounds like Zelensky's ready to act quickly on some kind of resolution. I mean, what do you think about gold here?
I think it was a lot of it was technical based. I mean, if you draw a trend line going back from November of 2023 and you kind of connect all the tops going out there, you're going to see that every time it's ran into that upper boundary trend line, it has pulled back and rejected those higher levels. I think that a pullback in a bull market is very healthy. I'm not saying that gold futures are going to go significantly lower. I'm just saying that, it takes that consolidation to really build on and really propel these prices higher. And I think too many people are waiting on the sidelines to add to gold. China also came out with a negative article saying that traders should avoid excess speculation because of volatility in the gold market. And I think that they might have planted that to try and bring some of these prices a bit lower here for them to buy for their own strategic reserve.
So you think there's still a pretty price insensitive buyer from central banks for gold?
I think so. I think we still have some room to run. Like 31 to 3,300, I think is realistic before we start to see what this economy is bringing in. Perhaps we've hit our gloomiest times in the end of the second quarter, and maybe we have a little bit of a turnaround in the third and fourth. And that's when things have really they've matured, some of the tariff talk and things like that. And then we can find our footing and go from there.
Okay. I think the take on gold's pretty solid. The one I'm frustrated by is silver. What the heck? I was promised a breakout. $35. I'm stuck, Phil.
$35 is that high that we saw last October, and that's a double top. Now, double tops are often a bearish reversal sign. We bounce off them, we go back down. Just like that double bottom at 29.25, we bounce from there. But triple tops and triple bottoms are often broken in a reversal point. That's where I think if we close over about 35.10, 35.20, and the next session we end up a little bit stronger, I think that's where you get your $36.5, $38 silver.
Okay, so it sounds like you're pretty optimistic on that one still, too.
Yeah, because of its correlation to not only gold, but the copper market. And if you look at copper, it has an actual physical squeeze going on right now. You look at the futures contracts over in China, the front month is trading to a premium of the farther out months. And typically that doesn't happen because of storage costs, security, and everything else associated with copper. So copper demand is quite robust. Mining supply just can't bring it on fast enough. And there's just so many different variables, everything from construction, the grid, to EV vehicles, to you name it, you know, you've got it for the copper market. So I think that a big test in copper is 515 to 520, breaks through there, sky's the limit, but we got to move through that level as first.
The copper on the long-term chart, I guess I'm glad Fridays with Phil, baby. This is why we do it. I didn't realize that, you know, I kind of lost sight of copper this week. I was so focused on stocks. What a move.
Up 27% year to date. It's one of the best performers.
Do you notice, YouTubers? I traded the SPX on the SPY chart today. Because I want to use that VWAP. And the SPY the VWAP doesn't show up on the, at least on this it doesn't, on the SPX. They trade almost identical.
Maybe because the North Koreans control all the Ethereum. I don't know.
Is that true?
That's speculation.
I don't know. I lost track of Ethereum like 5 years ago. No, basically I lost track of it when they launched ETFs and they went nowhere. That kind of was, you know, that to me was kind of the sign that maybe that ship had sailed a little bit from a price action standpoint. It's totally disconnected from BTC though. I mean, at least, you know, there's some some positive there for the Bitcoiners and those maximalists. You know, if all these other coins kind of drop off over time, that would be bullish for Bitcoin in some ways.
Yeah, one of the markets that's been on our radar has been crude oil futures because of the fact that people were so bearish on it. Oil futures holding like $63 to $65. Now they're starting to turn up a bit. I'm not saying that it's going to go like $80, $90, $100, but I think that a retest to 70 seems quite logical given where we're at and everything. There are rising Middle East tensions. A lot of people not talking about that whatsoever.
No, they're not.
It's very difficult to bring oil online in like the U.S. It's not like you could just flip a switch and all of a sudden oil starts flowing. It just takes a lot of hoops to get through to get this oil up and pumping. And if the economy is as good as what, you know, Jerome Powell kind of presents it, things like that, the labor market's not that bad. You know, we'll see this year if you know, travel and things like that continue to hold up very well as soon as we get out of like kind of these winter months. I know it's unseasonably cool across, you know, most of the country right now, but that oil demand could really pick up.
Okay. Yeah. Crude, which has been super quiet, stuck under $70. The idea that maybe it could wake up could be a pretty fun notion. Maybe not if you're looking for inflation to cool off, but conversation in the future, because we've been stuck down near the 70 for much of the last 6 months. Love it. Great stuff, Phil. Appreciate it. Nice work taking us through it. Copper, crude, coins, ETH and BTC, silver, gold. Phil Striebel. Great stuff. Chief Market Strategist, Blue Line Futures. Coming up, I guess we didn't talk beans or coffee. Next time. Got the big picture panel. Kathy Jones to talk some bonds. Next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
As stocks firm into the close here, bulls feeling hopeful, and as stocks have firmed, bonds have weakened throughout the day. Kathy Jones joins us for a perspective on the bond market, Chief Fixed Income Strategist at the Schwab Center for Financial Research. Afternoon, Kathy. Good to see you.
Hi, Oliver. Good to be here.
Thanks. So today, stocks have been pretty exciting, but I gotta say, I was keyed into bonds pretty early on for a fade.
End of the day run.
Right now, if you're a stock bull, you kind of want yields to go up.
Yeah, I think there should be some of that, dispersion of returns right now, so that you don't have that correlation problem. But I think the bond market's kind of betwixt and between here, because on the one hand, you've got evidence that the economy continues to grow pretty well, so there's no reason for yields to just fall apart. On the other hand, you got some inflation pressures that could be coming. We'll see the PCE next week. But you have policy uncertainty and policies that could slow the economy down. So we've just been stuck around this, 425, 430 area in the 10-year for a long time. And I think until we get some clarity on the outlook, we'll probably be stuck here a little bit longer.
Do you think the market is saying anything powerful or clear in the move since Jerome Powell, basically, if you look at 10s, 4.3 to 4.25 over that period, a little bit of curve steepening in the 10s and the 2s since Wednesday's lows?
Yeah, I don't think it's telling us too much, to be perfectly honest. I think we're, again, Powell tried to be a bit dovish, I think, and still indicate that they think they'll be cutting rates down the road, that the direction of travel is still probably to lower rates. But given all of the talk about uncertainty, not understanding where policy is going or how to interpret where policy is going, it means that the Fed can't really make a move here unless we see a lot weaker labor market data. And we haven't seen that yet. Now, maybe in a couple of weeks, we'll see some evidence of that happening, and it might spur them to be a bit more aggressive on the dovish side. But otherwise, we're really just sort of looking at, let's wait and see tariff announcements, what those look like, how long they last, what countries or what goods they're applied to, and then try to draw some conclusions from there. But right now, we're still up in the air about all of those policies.
How much do you think next week's PCE can move the needle on rate cuts or lack thereof, with the market currently thinking about June as the onset for the next set of cuts? Does that number have the potential to push that up to like a market certainty?
I doubt it, because we are able to get a pretty firm handle on PCE from the PPI data and the CPI data. So It looks like the core number is going to nudge up a bit to about 2.7, maybe 2.8. The overall number holds steady around 2.5. That's just not good enough.
Not good enough.
Some deterioration in the economic data. That's not good enough for the Fed to decide to move in June. I would put rate cuts into the second half of the year, perhaps in the third or fourth quarter. Again, depending on how some of these policies play out and the economic impact that they have. But for right now, I don't think PCE is going to move the needle too much.
Okay, so it's basically, it sounds like jobs, jobs, jobs then in your mind.
Yeah, you know, Fed has a dual mandate. We focused a lot on inflation. Now we'll have to go back to focusing on jobs because that is something that could trigger, it could be the catalyst for a move. And I do think that assuming the policies are playing out as we expect, that we will see a rise in the unemployment rate and a slowdown in hiring. And that should be the catalyst for the Fed to move in the second half of the year. We've already seen some slowdown in hiring, but right now we've kind of got this balance between not a lot of hiring, but not a lot of firing. So the unemployment rate has stayed pretty steady, but it probably will climb as we see the impact of the federal government layoffs and the cutbacks in spending at the state level. The state and local governments have probably been the big source of job gains over the last year or so. And if that pulls back as we expect, then that will slow down the pace of job growth, and that will result in probably a higher unemployment rate. So, you know, when that materializes, I think the Fed has a good reason to move ahead, and employment's probably going to outweigh any concerns about inflation at that stage of the game. But we're not there yet.
Okay, good context though, and a good prep for us for next week. Thanks a lot, Kathy.
Thank you.
Appreciate that. Good closing thought on bonds. I'll come back to that on risk radar a little bit. Kathy Jones, Chief Fixed Income Strategist. Coming up, the bell. Look at that. All right, 3 out of 4, green.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades in full hour.
Dang.
I'm Tom White.
Boom. Well, YouTubers, I hope we picked something up this week and learned something. Be sure to subscribe and ring that bell. Share this channel with everyone. Tesla had a real good day today. Elon came out and said, buy the stock. So I hit my target, 247.97. Bounced a couple times off the 200s. 3 times today for a buy signal on the 1 minute. Had a lot of fun this week. I try to bring the best trades I can, call out my supports and the reason why I'm taking them. If I think the trade's going to be good, I'll add on more contracts. If I'm in trouble, I try to win myself out of it. A lot of traders won't do that. They'll just go ahead and take their loss and get out of it and not take that extra risk, but I do it, and it seems like it pays off all the time, most of the time.
One of us has made a gross error.
But I have to have a lot of patience. Got to look for the next support where I think it is, and there's a lot of volatility in the market right now, and I think next week's going to be a good week finally a green week. I'll do a video this weekend on the indices, where I think we are on them. So be sure to watch the video and hit the like button, make comments if you think you see a different support or if you agree with it. Like the SPX. I'll do one real fast before I head out of here. Go back all the way to the monthly time frame. See, we've not really had much of a pullback. About 500 points, 600 points from the top, but just one month of pullbacks on the monthly. And if you look at the weekly, I mean, we're still way overbought. Don't take me wrong. This market's had one heck of a run, bigger run than they normally have in a 2-year period. So we could still be way overbought, but we did pull back to the 63, and I called that out in the last video. So if we hold that 63, we could, find a solid support, because the next one down would be all the way down here to 4,700, and that's 1,000 points. You don't want that to happen. Then you got an underlying resistance right here on the weekly, and we hit that underlying resistance 1, 2, 3, so we could easily start to pop back up. And that's how I kind of look at things. 1, 2, 3. I meant support, underlying support. So we've had a pretty good, every time we've had a good pullback, we've bounced up and created higher highs. So when we come up next time, we'll be counting to 4, and we might make a little bit more and have that breakout to 6,400. So I'll do a video on this, and it'd be good to watch them. You can learn, kind of see what I'm looking at. Now you pull it up to the daily. See, that's a perfect touch right on the daily. And we've had a pretty good little pullback. Each one of these representing a day, just straight on pullback. Now we've got to break the 200 EMA for it to start to run up and break these other resistance levels. And those are all moving averages. So if we break the 200 next week, we're definitely going to hit the other ones. That's going to be our hard resistance right now. We've tried to break it. We tried to break it. We tried to break it. So maybe the 4th time we'll break it. 1, 2, 3, 4, you might make a little bit more. So I wish everybody a great day, and we'll catch you later, YouTubers.